horizon, the charts are bold. Dated bands rapping stories untold. Riding with rocket scooter AI, up we go reaching for the sky. Every train home never dies, on the edge as the numbers fly. Checking the charts, midnight glory, heartbeat thumping, another story. Green and red, flashing voices loud, future kings standing on their cloud. Riding with rocket scooter AI, up we go reaching for the sky. Every train home never dies, on the edge as the numbers fly. The pulse ascending, mind on fire, never ending. Trees of gold, endless fight, push on through the endless night. Riding with rocket scooter AI, up we go reaching for the sky. Every train home never dies, on the edge as the numbers fly. Checking the charts, midnight glory, heartbeat thumping, another story. Green and red, flashing voices loud, future kings standing on their cloud. Checking the charts with their AI, up we go reaching for the sky. Every train home never dies, on the edge as the numbers fly. Checking the charts, checking the charts, midnight glory. Sanctuary in awe, it's blending, mind on fire, never ending. Dreams of gold, endless fight, push on through the endless night. Push on through the endless night. Push on through the endless night.
What's up, guys? Good morning. Welcome to the show. Hold on one second. Hold on. Let's see. Good morning, guys. How are y'all doing today? It's special Friday half-day trading sesh, but this is one of my favorite streams I do. We're gonna teach you guys a lot of stuff today. It's like extended boot camp. It's fun. Hold on. All right. Catching up to all my Twitter messages though. All right. How y'all doing today? Welcome to the show. My name is Matt. You're at the Trading with Matt show. #1 show on YouTube for futures trading, prop trading. We win every contest. We beat every prop. We're the only ones out here making money. I promise you that. Not consistent money. And you guys are here to learn how it happens. We have a genuine edge here on this stream. which makes it a whole lot different than everybody else. We have a gamma exposure tool that allows us to look at market maker positions. Nobody in the world has this. This is a genuine edge. I do have an edge over other traders. It's like a cheat. It's like a hack. It's like I know where to trade from. Doesn't mean I can predict the market, but it means I can trade from the right place, which gives me an advantage. I can always lose small, executing from a place that matters. And trading from the right place is the most important part of a good trading strategy. Good morning, guys. So we're gonna go through today and walk through my strategy start to finish, and celebrate, you know, my newest funded account and payout. I started with Blue Sky Trading on Sunday night, and on Thursday night, I already got 2 payouts. That's how quick it was and how good I am. I got lucky, but also did well. MHP was Bay. You guys traded MHP last night, right? It's on the money. And the way I teach you a trick with Blue Sky on how to knock 2 days off the calendar. And also, speaking of Blue Sky, I have an announcement there. Orbit account just lost 1 extra day. They took 1 day off of the middle tier. So it's 1 day, 1 day, and then 3 days pass. 1 day buffer and 3 days payout. Sorry. So it's even, you can get a payout even 1 day faster, which is fantastic. So good to see you guys all here. Good morning, all my friends. Tradey, BC, Ryan, Trader07, Giannis, Simon Dean, D Plumbing, Trader Donkey, Matt Evans, Railroad Life. Held 1 micro all night. You held 1 micro all night on a 300-point NASDAQ rip. You animal. I love it. Trey in the building. Hello. What's up, legit? Hello. Good morning. Good morning. Good morning. Smash like button, friends. Of course, you need to do that. Yeah. Market Vision. Good morning, Farina. Donovan, David. Time for a win. Purple Roblox. The Swamp Team. OC. Morning, friends. Yeah, many fallen soldiers yesterday. Yesterday in the day. Oh, yesterday was tough. I had some fallen soldiers yesterday too. And that big crash out. I got lucky that I only tapped it with a couple of accounts. I only had 2 casualties that day. But I had some too. Sometimes the market just falls. Like the thing is when the market floor falls out from underneath you, you got to keep your casualties to a minimum. You will take casualties, right? But you don't want to ever be upside down in all your accounts, blowing up everything all at once. When markets are crazy, irrational, catalyst is active, you're like, I still kind of want to trade when you shouldn't. 1 account, a couple of micros like I did, and then just you can swing through a whole lot, hold through a lot of volatility, and then it doesn't work. You might lose 1, right? But they did their job. You know what I'm saying? They did their job. Fallen soldiers. Good morning, everyone else. Tell me you're going to be bear today? No. Yesterday was a fluke. It's bullish from here on out. We'll talk about that today as well. That was the bear test. We survived the bear test. And last night proved that we survived the bear test. I think going forward, especially today, especially this morning, maybe the rest of the week, or rest of the month, it's probably going to be bullish. Everything lined up. Remember, we just fell out yesterday because tech was getting dumped pretty hard, post non-farm payrolls and people rotating out of tech into something else. Whatever the case may be, 90% of the stocks were green yesterday. It was just a tech thing, and they rotated pretty heavily. Like the S&P didn't fall as much as NASDAQ did, percent-wise. And last night's proof is that it was just a one-day event. So I think that the bull market's back starting from today. Hello, my name is Matt, not Brad. Good morning, Matt, not Brad. Hello. And everybody else, does the market close early today? At noon today, Central. Yeah, so we got about 4 hours to hang out with you guys and chill. I can't wait to learn more about Rocket Security Tools and Platform. Yeah, I'll walk you guys through some of it today. So speaking of that, let's go over here, down to the charts. I'm gonna pop everything up. So last night, right? Let me walk you through all the things I got because I'm a little... One thing with Blue Sky is that with the extra sort of buffer phase, you have to keep track of things different. So I lose track because the target changes each phase, right? Your profit target's different. So I got to see which ones are which. Okay, so the 3 at the top, these are my funded orbit account. Oh, fuck it. Let me just put this on the screen. Y'all can see it. Okay, so these are my funded orbit accounts, these 3 right here. So my funded accounts, I've already built up 10,000 bucks. So I started these on Sunday, right? So here's the trick with Blue Sky. As an example, with Orbit, it used to be 1 day, which is your eval phase, and then you would have 2 days, which is your buffer phase, and then you would have 3 days while funded, right? That was the style. Now, the reason they have a second phase, and you might say, oh, you know, what's up with that? It's actually very cool. I love it. This is probably my second favorite experience with props so far, as far as experience goes. Now, the one thing about them is you're capped on payouts per account, 3K every like 7 days. So you're not like getting like 50K payouts in a week's time, but it's steady and consistent and fairly simple to get there. What it is the accounts are cheaper. So one thing about Blue Sky that's really neat is their activation fee model. So like, especially on the launch account, Orbit's not launches. Launches are like $30. And when you pass them, then you pay the activation fee. So to get out of this first eval phase, it's dirt cheap. So you're going to save a lot of money if you are a trader that's failing a lot. Hold on. You guys are sending me a message. Hold on. So on Monday, speaking of this, on Monday, we have an exclusive deal with them and only them. The official new Orbit. And actually, Diego, the official Orbit actually launched yesterday. I got that message from them directly. It's actually in effect now. They mentioned on Twitter. So, but Monday, yeah, soft launch today. Yeah. So technically speaking, anyways. So the way that it works is like many firms will, like an example is, let's do TPT. TPT, you have to trade for 2 days in eval. Oops, 2 days in eval, right? And then you have to waste 3 calendar days, which is called your flip days. We just put an X there for flip. So it's 5 days to pass, but these days you don't have to actually trade. You need your consistency in 2 days, and you can just open and close a micro flip. Then on day 5, you're funded each day. So you can funded. Sorry, day 6. And so, but the thing is that once you go funded, you can't just get a payout. They required you to make, like when I was doing it, $4,500 a buffer. You could take out a payout any part after that. So even though they don't announce it, they say 1 day payout, technically you have to make a buffer first. So that usually makes it an extra day. And then like day 2, you get funded. So what Blue Sky does, they're like, look guys, here's your buffer phase. It's an actual, the advertisements are like 1 day payout, but really come on, it's 2. We know that you have to make your buffer first. So like here, we'll just give you a buffer phase, and we'll make it even cooler that when you're in your buffer phase and you fail the account, you can reset to the start of the buffer phase rather than starting all the way over. And they're all like this, which is neat. So when you're in the buffer phase, like a TPT for an example, you're in the buffer phase and you fail, it's considered funded. To reset your funded account at TPT cost me $1,500 an account. To reset your buffer phase, which is separate from the funded phase, only cost you $250. So instead of resetting all the way to the beginning, which is just buying a new account for a couple $100, they let you reset to the middle for a couple $100 and save the eval day. This is hella cool. This part is what makes these guys pretty goated. You can reset in the middle of the run without starting all the way over. Now the funded, you can reset at pretty much a similar price. I think it's $1,500 or whatever. You're funded just like you can with TPT. Almost the same thing. So every firm these days, pretty much the newer ones or the better ones, let you reset your funded. Anyways, point I'm saying is, how did I start on Sunday and all the way on Thursday? I'm getting a payout. So the neat thing about this is that you can overlap your days. So a lot of the newer and better firms allow you to immediately roll into the next phase. Like if you pass, you can go fund it immediately in the moment. You can do that with Lucid. Same thing here. So on phase 1 was a 1 day pass on Orbit. So I passed it in the first target, first day. And then I immediately moved to phase 2. On that same day, I traded phase 2. So Sunday, like you can do Monday and then Monday, and you're already a third of the way through phase 2, or half the way. Phase 2 has 2 trading days, which starting now actually has 1. So now with it being 1, 1, and 3, you can actually pile in all 3 of your phases into the same day. So you can pass phase 1, move to buffer, pass to your buffer, move to funded on the same day now, because this is now a 1 day thing. And then day 2, then day 3. The way that it works is if you get lucky with an Orbits now with the new launch, you can actually start on a Sunday and get your payout by a Wednesday. So it's now technically 3 days because you're overlapping the phases. It's like with Lucid was the same way, right? Like a Lucid Flex. Day 1 was 50% consistency. So day 1 was your first 50. Day 2 was your second 50. And also when you pass, you immediately went funded. And now you can start making day 1 your 250 minimum, right? So day 1 of funded overlaps with day 2 of eval. And then you only get 2, 3, 4, and 5. So the overall, it's 1, 2, 3, 4, 5 days total. Sorry, 6 days total, right? For a 2 day eval and 5 days. So you would think 2 day eval, 5-day to payout, that's 7, but you can overlap the 2 and the 5 where these overlap. Boom, boom. Yeah, TPT is like the same setup, right? Anyways, yeah. So the new buffer that the new orbits that are coming out, as I'm being told, that's soft launch now, but being launched on Monday. And again, like we're big fans of like all the big props out here. And I will tell you, I was pleasantly surprised when I started, because I went live with Lucid just a little bit ago, and I went live with TPT earlier. These are all goated accounts. Like I love them all. They're all so good. I was pleasantly surprised to see, you know, like I said, part of Prop Score's job is to find out what's cool and what's neat out there. And let me start loading up my stuff. So anyways, I got 2 payouts last night, which is pretty exciting. I'm gonna load up some stuff. I'm gonna give you guys the full gambit today when people show up on how a trading strategy works. Y'all are gonna love it. Let me load up here. Yo, what's up with the messages? What do you got? All right, hold on. Oh, okay. Give me a second. So, anyways, so the soft launch that's now, but they're like hard launching on Monday, is the new orbit's actually a 1-day pass, and they got rid of the buffer phase in general. The direct is sim funded, blah, 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 payout in 3 days, basically. Yeah. Okay. So now when they get rid of the buffer phase, the new orbit is going to be 1-day pass, 3-day payout. Wow. So they got rid of the buffer phase, and I did this and didn't even have to do it. That's kick ass. Well, okay. So the new, oh, that's neat. Okay. So I'm being told that the new launch, so we have, this is the thing. It's not even launched yet. We get the exclusive info. We're teasing it to you guys. So the new, I guess on Blue Sky, the new orbit account, which is what I'm talking about, they got rid of the buffer phase completely. So it's a 1-day pass, 3-day funded. It's exactly like a Lucid Pro. Kick ass. Okay, well, that's cool. I think that's live now, but they're like teasing it now, but I think Monday it's going to be fully launched for realsies. Kick ass. All right. Anyways, this is what I've been trading. So I like to explain, like when I trade a certain prop, I like to explain what I'm doing just so you guys can follow along. All right. So while we're waiting for people, it's just the icebreaker because the market isn't open today, right? This is a holiday. We just kind of go through some stuff. Prop Score is a site that I made that allows you to see the mathematical ranking of certain firms based on the offerings that they have, whether the accounts are good or accounts are bad. It's a math equation that we do. So when we refer to Prop Score, this is what we're referring to. Prop Score is an ROI per an account for the time it takes to pass times the difficulty of that account. Times the payout parameters. Hold on 1 second. And so the idea is that like a firm, for example, that gives you a high ROI per time spent, per difficulty, per restrictions. So an example is, you guys know how sometimes like a firm is like, yeah, our accounts are really cheap, but it takes very long to pass them, right? Or we have a really, really, really high payout, but it's also very difficult to pass. Firms do this, man, 6, 7, right? There's always a balancing act. So it got like, it was inspired to me during kind of the Black Friday frenzies when people would ask me, hey, this firm has like 80% off sale now, and it's kind of cool. Is this better? And then you're like, well, every firm has a 90% off sale. Which one's actually physically better? You know, who's giving you a good sale? And then also at the time, like I remember like Top Step was like, I don't know, like lowering their prices, but also like capping their payouts a little worse or something like that. And it's like every single time you get something that comes out, they take something away. You want to know how the overall effect is. Is the firm actually getting worse or the firm getting better with each change? And so the Prop Score was designed to track that. And we found out when firms like Apex were coming through with their, you know, Apex 2.0, that they were making changes that lowered their score. Where on the surface, they were marketing it like, oh, it's the next big thing, it's goated. But then the changes come out and the score is actually lower. So the secret is, you know, it's like when a company's struggling, they're going to change their accounts for the worse for you, make them slightly harder, but market it like it's a better change. And we were like, well, we're going to combat that. You know, we're going to tell you guys, you know, this actually was a worse change, and they're just tricking you. When that happens, when companies are changing for the worse, you know, they're struggling and it's getting risky to trade with them. So anyways, the way that it works is the higher the ROI per time in markets. An example is, let's say that it takes you 10 accounts to pass, and that takes you like 20 days, and you finally pass, go to payout and get funded. So in that example, the higher the ROI, the higher the payout you can get for those 10 days it takes. The higher the ROI per time is a better prop score. If the account becomes more difficult on top of that, like higher rules, like consistency and all that, then more difficulty, lower score. If there's more restrictions, like higher payout split, more days to payout caps, things like that, then those restrictions lower the score. So better ROI, higher score, less cost, higher score, less difficulty, higher score, and then less restrictions, higher score. And the idea is it's just a general value equation. Like you'd buy something with value and try to flip it. How much return can you get on your investment? How long does it take to flip that thing? And are there liquidity issues along the way, like restrictions to selling? Sure, you can make the best ROI and flip it tomorrow, but you may not have somebody willing to buy it from you. So then the liquidity is bad, so the overall value is down. So general value equation that we assign the props. Anyways, so all the props are now ranked, and prop score is a free service. You don't have to pay anything. I built this because I'm tired of seeing a million of the sites out there ranking just the people that pay them. They're all pretty awful. They all extort prop firms for money and say, pay us and we'll list you. We don't do that. We list everybody, whether you want to be listed or not, we rank you. So yeah, markets close today, futures markets open. So in about like 10 or 15 minutes, when we kind of peek out on viewers, I'll start with the lesson. Noted, Kyle. Okay. Anyways, so when I started trading with Blue Sky a little bit ago. So by the way, I've only been doing props for about 1.5 years. And in my journey with props, I have won a couple of prop tournaments. I went live with ETF, My Fund and Futures, Tradeify, TPT, and Lucid, and all in 1.5 years. My average journey when I went like TPT, for example, only took me 2 months to go live. Lucid only took me 2 months to go live from start to finish. Lucid, my payouts, like I say, I always show people my payouts, my full dashboard. I like to be very transparent, and I know this is it's important to me. You know, I think 99% of the prop space is full of frauds and tricksters that are trying to convince you they make money. They do everything they can to not show you what they put in or show you their dashboard. I'm a very big proponent of showing my full dashboard because I know I crush it. All the tournament victories that we have, and you know, the million challenge where y'all saw me make close to $1 million last quarter on a real account. I mean, you guys get to see my stuff in full transparency. And that's why one reason our channel is going viral, because people are like, this guy can really trade. But other people, they're going to be like, hey, check out all my payouts, right? And it's going to be like, you'll only see this much of it, right? And you're like, but how much did you pay in, right? There's a big part of this industry where people love to show you, like, you ever see people post something and they cover up this side just so you can see what kind of account it is? They want to hide the account numbers because they don't want you to see, like mine, this is account number 9 getting a payout. They don't want you to see that it's account number like 502, where you in your head could calculate, that motherfucker blew up 502 times to get there. Holy crap, how much? And you calculate, oh, he said he made $1 million in payout, but 502 times 250 per account, so whatever. This guy didn't net anything. He's upside down. It costs him just as much to get there. And so a lot of these quote unquote prop gurus are going to try to convince you that they're making money. And the way they do it is they cover this up. If there's anybody out there that covers up this in their payouts, they're lying to you about making a return on their investment. And you can go to like Twitter and see these payout pictures all day long. You're going to see that very few people are going to show you the account numbers. So I think it's very important that you guys take note that I'm going to teach you to ask people for that stuff. I'm not calling anybody out, but I'm scrolling down my feed right now, and half the people I follow are doing that same shit, cover up their account numbers. But I think it's important to show people how long it took you. So for me, with my Lucid, these are all my Lucids. I made about 68,000 in profit from Lucid between May the 18th and June the 25th. And this is just accounts like 3, 4, 5, 3, 4, 5, 9, 10, 11. So it only took me up to 11 funded accounts to get live. So, you know, I didn't blow up a lot with Lucids. It was a pretty solid journey to there. I made like maybe a little bit over 3x ROI on that, and then they just kicked me to live. Another trick that you can learn as a trader is that when somebody says they're making payouts and they're not live, you only go live, and this is definitely true because with Prop Score, you guys know I'm best friends with all these CEOs, kind of. We talk all the time. I know almost everything about the prop industry. And whenever you go live, you only go live under one circumstance, is if the firm is going to lose a lot of money because you're in the sim funded. So when people go live, they only go live when the ROI they make is high. The return they make, they put in 10,000, they took out 50, they're going to push you to live. The threshold with most prop firms is 5x. And if you slip under the radar quick enough, you maybe can make 10x your return. Nobody, and I mean nobody, is exiting this range. If you are an absolute pro, you're slipping in there. You put in 10K, you pulled out 50, you're a pro. Nobody's putting in 10K worth of accounts and getting millions of payout. That's the biggest fraud and lie in the industry. And I see these commercials show up every single day for, like, you know, Jade Cap and all these guys selling $10,000 courses, how to do this and that, and made millions in props. That fucker put millions in. Don't let them tell you that they somehow converted 6,000 ROI on their investments. I see this all the time. These people aren't making bank returns like that. Now at Apex, well, speaking of that guy got lucky because he made his journey in, not lucky as a trader, but lucky in timing. He made his journey in the time where you could get ridiculous ROI with Apex. That's a one and done thing you can never do again, but they like to market it like it's still a thing. With Apex, you can't make $1 million payouts anymore. You can't make that anywhere, as a matter of fact. That ended last year. So a lot of these people got into the prop space and made ridiculous Apex returns by copy trading accounts, but they put hundreds of thousands of in just to say they can make $1 million. So they can market themselves between now and the end of eternity as some kind of, you know, prop trading Guinness World Record holder thing or whatever. But in reality, that was a one-trick pony that a lot of people did. And with Apex, there was a trick back then where you can actually brute force your way into $1 million payout. Everyone knew how to do it, and everyone was doing it. There was a trick that they did, just throwing money at it till they win. Doesn't necessarily imply trading mastery, but that's what happened. Nowadays, your ROI is capped between 5 and 10x. Most of your payouts are capped about 3,000 a payout per most firms. Per 3,000 every 5 days is about the pace firms now pay out, give or take. Some firms like TPT and My Funded Futures, you can make 50K in a day on those same day payouts. But once you start crushing them, they're going to push you to live. Once I started crushing those same day payouts back to back, it becomes random. With TPT, I made $10,000 back to back 6 days in a row, didn't go live, took a break, came back. Then I made $63,000 in 3 days, and then they pushed me to live. Like I said, when you start making fast ROI, they're going to kick you out of the program very quick and push you to live. That's just the way that it goes. So anyways, these days, most firms are anchoring you to about something like that. And whenever you're out there listening to people say they made payouts, I can go on everybody's Twitter, and everybody's Twitter is like, I made 1 million in payouts, I made 500,000 in payouts. If you trade props long enough, every payout you get is going to accumulate. Yeah, anybody makes $1 million in prop payouts at any point. Like, all of you guys are millionaires. If you're in your 40s, you are a millionaire. That's like you saying, that's like one of you being, you know, a person making 100K a year, and you're now 40, you worked for 20 years, right? And now on your Twitter, you can say, you know, this is you. This is basically what it is. You're saying 2 million in total lifetime salary. And then all the idiots out there, whoa, this guy's made $2 million. And you're like, yeah, I made 100K a year for 20 years. I made 2 million in lifetime salary, guys. That's really what it is. Like, I made $1 million in payouts. I mean, like, you know, you're a doctor. You're like, I've made 15 million in lifetime salary. You know, you're an engineer. You're like, I made 3 million in lifetime salary. That's all it is. You're making 100K a year. You just accumulate your salary. But how much did it cost you to get there, right? It's all hidden. The point I'm saying is that when somebody's telling you that they trade props and they do well, ROI is all that matters. You only go live if the ROI is high. If your ROI is low and you're breaking even, but you're racking up payouts, I made $1 million in payouts, and you're like, yeah, but you're still sim funded with those guys. Why haven't they moved you to live? Well, I don't know why they moved you to live. I know why they moved you to live. Because you suck at trading. Anyways. All right, so what I'm doing right now, I'm trading Blue Sky as my next firm. So my goal is to go through every firm, go live, document the experience, and share it with you how I get there. I have tricks as well on how to beat the prop system. I'm very, 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 very good at it. Like I said, I started these guys Sunday night, and I got 2 payouts already last night. I've racked up a total of 10,000 and 11,000 respectively balanced there, and 5,500 so since Sunday, and these, you can only have 3 fundeds max. Since Sunday, I've racked up 26,000 in profits in a funded account, which includes the buffer. Since Sunday, which includes the eval phase. So from start to finish. Now, these aren't sequential account numbers. They don't do the sequential thing. They're random. So it's not like I'm on account 8,900 or whatever. They just assign you random numbers there. And before anybody asks, you know, my name is John Matthew. Matt's always my middle name, so everyone's always like, who's John? It's my alter ego. I wear a mask and I fight crime at night. So I've got 1 orbit eval that passed the buffer. I've got a bunch of launches that are passed. 6,000 is passed and 3,500 is passed. So I basically have passed all my accounts. So all of my evals, these are all now standby funded accounts. My goal with certain firms, I have a trick. And one of the tricks is I like to build buffer on my own to have a quick coast to payout. Here's a trick, an example. I did this with Lucid. I also did this with Tradeify. When I published it, it's like I said, I do things differently, but also maybe there's some reason that I do so well. I do things differently than most people, but you know what? A grandmaster at something might do something differently than most people because most people don't win. And the convention that most people have is to follow the rules of the prop. And my convention was to create my own rules. And so here's an example, and I learned this early on when trading props. This is a trick, and this is a trick that makes your prop journey so much easier. How do I keep track of all those accounts? Yeah, right, it's kind of important. Sometimes you'll see me go, hold on guys, I'm doing something. And I'm looking up here, and I'm looking back and forth. What I do is I keep this on the side, and I have a little drawing tool, and all night, overnight, I will mark up my thing, and I would say, if this is passed, I literally will scratch it out. Like my upper screen has markings on it with a pencil, and I'll scratch it out, which means don't trade these. And I'll scratch this one out and not trade that. And this one I'll say, okay, this one needs to make 500 bucks. This one needs to make 40. And then, you know, or whatever it is. And I'll make notes to myself off to the side, and I sort it by account number so I don't lose the order. And then what I do is I go into here in the account settings, and I make sure I set my profit targets exactly and I go through it one at a time every night. What's your profit target you need to make to hit max consistency, max payout, max whatever? And I automatically program it. Like the one that made 40 bucks, I literally set it to make 30. So I leave it at that, and then I just make all my trades. Which order I need to trade them? When I tell you guys I do order, which we'll cover in a little bit, I mark on the chart the order. I mark on the chart 1, 2, 3, 4, 5. And then when I'm trading, say that account number 1 makes profit and it's done, I'll cross it out and I'll change it to 6, or I'll erase it and make a 6. So I'm always going in order of what the next number is. Like I want to trade 3. Okay, ooh, it's a nice MHP. All things line up. Let me trade in 3 of my accounts. Perfect. It's 2, 3, and 4. All right, cool. So that becomes 7, 8, 9. So I always know, and I literally do this on a side screen to balance my account rotation technique. This is how I crush props. This little extra step here, this is how I go live with props faster than any trader on planet Earth. I'm the best in the world at this. I'm gonna teach you my gimmick. I am. I've made probably close to $1.5 million with props. I don't put it on my bio because I'm not a like fucking salesman retard like these guys out there. I don't think it's super brag worthy to be like, I made $1 million with props. Anyone can make $1 million with props, give it enough time. But my ROI is historically between 3 and 5x with any prop out there. Does Lucid have what? Question, Matt, why do you keep learning us how to trade properly? Just altruism? It's not ironic. I love your stream. Why do I like teaching guys how to trade properly? Number 1, my massive ego. When you guys go out there like Brian B-Dog and fucking wins the Ninja Trader Arena Cup in the name of what we've taught him, we show people we're the best in the world. Let's just pretend that that's the reason I like doing it. When we go out there and we do the Tradeify Grand Cup and I get top 16, or our team got second place last year, dude, I love flexing, showing off how good we are. But I'm saying that to be funny. But really, no, that's one of the reasons I love doing it. I love winning. I'm so hyper competitive. When I was a kid, I only played competitive video games. My brother and I would play like RBI baseball against each other, Tecmo Bowl, like competitive. I hated single player games. When I bought Halo, it took me years to even try the campaign. I had to play multiplayer all day long. I like competing against people and beating other people. There's no joy in beating a computer. So winning at trading is fun to me. It's excitement, it's challenge, but I also like to show that we're good at stuff. Another reason why I like to show up and stream with you guys, altruism. I mean, yeah, I mean, I love the feeling that I get when people do well and they tell me, Matt, whatever you did for me changed my life, or something, you know, like that is so rewarding. I'm going to tell you, I got rich early on in my life, and the novelty of being rich does wear off pretty quick. Once you buy your first fancy car, your first fancy house, you realize it's a never-ending slippery slope. Like, you know, it's funny. Yeah, like in December, I bought an Aston Martin. In April, I bought a Ferrari. I'm already about to buy my second Ferrari. It's like, you never buy it and you're like, okay, life is achieved, check. Once you make money, it's always like you always want something else. So there's no end to it. So the novelty and the excitement dies. It doesn't just get kind of like less exciting, it dies. So there's nothing ever, and I'm only buying a Ferrari as a collector to flip it for money. The idea is once you make money, it's no longer rewarding. The only thing that's rewarding about being rich is the reward of getting rich. The excitement comes from the journey of that. And once you're there, then the door opens, and then it's infinitely more complex, because once you make your first $1 million, you realize you are the poorest person in the world when you thought that was the richest place to be. You're just richer than all your friends. And then you meet new friends and they're all richer than you. And you have unlocked a new side quest. Shit, I need 10 million now. And once you get 10 million, then you meet new friends that have 10 million and 100 million. And you're like, shit, new side quest unlocked. The bigger you get, the bigger your network is, and you always network up. So it's an endless journey that you never have hit a milestone. Where your first milestone might be like, I want to make $1 million. And when you get there, you realize you're still broke. And so the idea becomes that it's not exciting or rewarding to make money. It is only when you haven't done it yet. But the excitement part that I have from that was the journey to get there. The journey to get wealthy is so exciting and fun. There's risk. I look back and be like, man, I almost went broke a couple times. Like, oh my God, I remember the times I had no money to trade with. And I look back and I remember how I struggled and fought through it. And I landed where I am now. Where am I now? I'm going to pay $550,000 for a car in a couple weeks. I'm going to pay it with cash. That seems cool, right? But I don't go there and be like, yeah, look how cool I am. I'm amazing. I feel nothing. To me, it's an investment. I'm going to buy that car. It's going to appreciate in value and become a rare item. I might be able to flip it for $700,000 or $800,000. So to me, it's like just a business decision at this point. It's like, boom, boom, what's next? So the idea is when I'm doing this here and sharing with you guys this journey and watching you win and getting to join you on your journeys, it brings back a little bit of that buzz, that excitement. When I see all these things in here, people telling me like, you know, I mean, shit, I posted a couple of them the other day. Like, Matt, there's, you know, one of the guys that works at PropScore, Kyle, he got his first payout after learning from us. And now he's getting payouts all the time. And when I get to join you guys on your journey here, it brings back that excitement for me. It feels some way again. Like, I get these notes all the time from you guys. And this is one single day. 2 life-changing boot camps. It changed my life. It could change yours too. Somebody's donating to the stream. 3rd payout of the week. Micro standing out, got to pay it forward, take the boot camp. That's where it all started for me. Here's another life-changing boot camp, biggest week in my personal account yet, Johnny Guapo. And when I see this, what it does is it does take me back to that time when I was struggling in there, and I get to join you on your journey, and it feels fucking cool. And number 3, streaming makes me even richer as fuck. I make so much money every minute I'm live on camera. Although I love being a hero and helping people in their journeys, for the most part, I make a fucking fortune on YouTube. So I love getting up and making money, sitting here talking to a fucking wall. That's the real reason I do it. To be super real with that. This is a business, and I do very well at this. And I love microcrafting my YouTube show just so I can beat the other YouTubers and watch our show grow and grow and grow. It's just another challenge, something I can achieve. I want to beat other people. We want to be the #1 YouTube stream. So, in reality, all of it's matter. I get to do what I love. I get to join people on their journey to get wealthy or their journey to get somewhere, which makes me feel big and alive. I love teaching. I used to teach at University of Houston, engineering classes. I taught fluid dynamics and material science and engineering. I'm a chemical engineer by design. So I used to love teaching and during journey and then get rich while doing it. Hey, it's a perfect job. That's why we do all of it. Why do you want to beat other people? Call the police. Other people are annoying, damn it. No, I'm just kidding. But anyways, those are the real reasons. I'm honest with you guys. This is definitely a business. I hate when people are like, I love helping. It's the best thing in the world. And I'm like, yeah, I mean, I love helping too, but I also love making money. You know, if I want to help people, I'll go volunteer at the soup kitchen and I don't need to post it on Instagram like all these traders will do. Like, look at me doing charity, guys. Look at me doing this in front. Look how charitable I do so many charitable things. I don't publish it for the sake of views. You know, everything's a business op in this world, and it's just so hilarious to me how many people try to cover up their business aspirations like they're running a fucking charity or something. Like, I do this out of love in my heart. Shut the fuck up. So do I, but I also really do it to make money on top of it. I mean, let's be real. Be real with people. These are smart people that watch you trade. Treat them like they're children that don't understand anything. They're not going to respect you. These are adults. Talk to them like they're adults. They know better. They're not buying your clown show. Just be honest, be real. But it does. But I was being real with you guys earlier. To see people say, you know, it changed my life. You know what I say? That's right. I'm better than those other fucking streamers out there. They can't say that. And it's personal. It's personal between me and them. They think they're better than me. All right, I'll show them my students are better than theirs. Right? It fuels my ego a whole lot, and I love it. But honestly, I've been told I have this knack to teach things very easily, like complex topics I can explain easily. Maybe it's the one skill set I have in life. And I think that when I was in school teaching at the university, I was teaching like complex topics and explaining them to people who couldn't understand them. They're like, I don't understand this. And I would explain it a different way and they're like, oh, I get it now. I kind of learned that I had this ability to take very complex things and sort of break them down. It's an engineering skill. All engineers are taught to do this and break down your problem and explain it in a more like understandable way to people. And then I do that with trading as well, which we'll do that today in a little bit. So as we get our folks viewers peek up, we'll start with our lesson today. This is icebreaker. So stock market's closed, by the way, because it's 4th of July holiday. Futures market's open for a half day because, well, 4th of July is an American holiday. The rest of the world doesn't need to celebrate our holiday, and futures are a global thing. So futures still tend to stay open until noon. Why? Well, because this is Friday in Europe, right? So this is the end of the work day in Europe for a Friday. They're not going to cut their day half day because of our holiday. So futures go all the way through noon so Europe can close its market out, and then we close out for our day. Our stock market isn't open, so we won't have our indicators pop up, which normally is what happens at 8:30 in the morning Central, which would be about 10 minutes from now. We have indicators that pop up, which I'll go over in a second, called liquidity maps. This is the secret to my success, my trading strategy. We'll have some historic ones to go over to share with you what exactly this thing does and how I use it. I don't know what you are, but let me delete that. They kind of look like this on a historic chart. And what this is, it shows me where dealer positions are distributed in the market. And essentially, we use options to find pivots in futures. We're the early pioneers of the gamma exposure field for retail traders. We created a model that allows us to look at only dealer options in the whole mix of all options. And market makers are going to hedge their position in neutral, which means they're going to buy and sell the underlying to hedge, which means you can calculate how much you're going to buy and sell, which means you can find volume pivots ahead of time, which is cool as shit. I'm going to do a little game with you guys in a little bit and show y'all that this is predicting a volume profile a day in advance. It is that powerful. So powerful, in fact, that I have the right pivot to trade from, whether I'm right or wrong in the market, just like anyone else, same probability. I have no ability to predict and guess the market. I believe that the stock market's random. However, I do maintain a 70 to 80% win rate when I trade. How do I do that? Well, it's not because I guess the market 80% of the time. It's because I recover a lot of my losses and turn them to wins by trading at the right place. An average trader sees the market goes up, They long right here. Then they take some heat and then they decide to stop, and then they were wrong. They're like, oh shit, I was right. So then they jump in the long here and then finally make some money. Trader took a loss, trader broke even, trader probably made something, right? That win rate's going to be very low. Me, I'm waiting. I attack right here. I make the trade. I usually am accurate. So I did better than that previous trader who just chased momentum. I waited for a pivot that matters. As a matter of fact, all this money was made longing off of orange. Chat, do me a favor. Did you trade MHP last night? Type chat yes, or say hey, or dub, or whatever. You traded MHP last night for the long. That was textbook Rockseer stuff. Did y'all do it? We teach this in our boot camp, right? That long and off MHP is solid. Gold mine. It's that strong of a pivot. It's the gamma exposure level, right? And so pretty good. Another thing that's also really neat is that an example is I have a really strong pivot. Damn, you guys all traded. I was watching was I watching soccer last night? Yeah, I went and had Tex-Mex, watched the Portugal game, then I went and played bocce ball all night. And I had like 4 beers, so I got a little tipsy. Anyways, so monthly hedge pressure is a place to long from, and say that I have another liquidity pocket underneath it, which we know is a place to long from as well. Now I got 2 strong pivots. And what makes me win more than most traders is that when I invalidate a trade, a lot of the times I have a second possible trade right here. So I know that I can, instead of stopping, I can add to it at the same position. And I know that I have 2 freaking mouse is being funny. I have 2 possible entries, so I can plan both of them. And while one trader may long here and stop here and give up, I might long smaller here, take a little bit of a loss, long bigger here, break even, make some money, and then have profit. So the fact that I can actually stack 2 trades on top of each other is why my win rate is historically high. Now, if you were like, which this guy's win rate? The last real money thing I did here was a challenge where I put $100,000 into account. And you guys dare me to trade it to $1 million. Y'all are like, let's watch this guy make $1 million in a month. And y'all told me you said make $1 million in a month. So I traded very heavily to try to do that. And here's a post from my Twitter of the challenge I did. Now, again, this goes from December. I started a challenge I started a different challenge in November, and then right about the end of November, somebody was like, go ahead and do this. And so I had 100,000 in an account, and the initial sort of, and trying to do it to $1 million in a month was like aggressive trading. So the 100,000, I sort of like lost 50 and 25. So I had to put in like another 130,000 to keep it going, to bring it back to 100. So the goal was start at 100, take it to $1 million. And then I dip below it, I can just pad it back to 100, keep going. Once I got my stride, which pretty much started in December, after I put the 130 back in, then I just ran. So, and that was that really choppy, that was that horrible market where it just was choppy right before the Iran crap happened. And so this was it. And this was a little lower than normal because, again, that was a choppy, weird market. And then Iran happened through all of this. So I took some hits on like the freaking Iran war tweets. Hit me pretty bad. Anyways, my stats were pretty solid here. Run up to drawdown. Look, 745 to drawdown 324, almost 2.5 to 1. Expectancy 177, which is phenomenal, greater than 50% win rate. My largest win and largest loss are exactly the same. This means I control my stops perfectly. I have my R&R on point. I'm not losing big and winning small sort of thing. My average winning trade, however, is slightly lower than my average losing trade, which means I did take bigger losses. However, in this environment, that was because of Iran stuff. It wasn't like I didn't have a good philosophy. It's that the market would just fall like hundreds of points in a snap of a finger, and my stop would get filled at horrible places most of the time. And again, y'all remember what that market looked like. That was just a total shit show. Y'all remember that? Y'all remember December? Do you remember trading in December? You remember? That shit was so bad. Do you remember? Oh my God. Y'all remember this? We all remember that. Am I trading this morning? I've actually maxed out all my accounts. I've made full profit everywhere. Y'all remember what this was like. So this challenge was all through this. So as crazy as it seems, that you know, the payout. And so this was the P&L. And these are the withdrawals. So we withdrew 250, 256, and 300 by the end of March. And then by the middle of April, I just decided to stop doing it because the Rand stuff was being crazy. So this is, I took $805,000 out, put it back in my pocket, recouped my initial investment plus the 130, plus the rest was profit. And that was here, right? Freaking December through March. And the market was doing this. Y'all remember how horrible this was to trade. It was crazy. So if I would trade in a different market, it would have been different. But what I'm saying is, how did I have good control inside of this? I'm going to teach you guys a lot of that today. Anyways, that's my real account. That's real money. And unfortunately, I didn't make it to the $1 million. I just made it close to 900,000. But I decided to pull the plug because, well, every other day was an Iran this, Iran that. And then all of a sudden the market flew up. April, it was like, and I was like, okay, there's something weird with this market. I'm like, all right, I'm just gonna call it and get back to playing props until things stabilize. And I do this a lot, right? I don't always trade. That's another thing. How do you make millions as a trader? You don't always trade. The secret is not the trades you take, it's the trades you don't take. That's also a big secret. When to avoid the market is so important as a trader. Everybody thinks they make money trading, and they don't. Any fucking loser can make money trading. Any asshole can push a button and make some money. It doesn't take anything more than a day of experience to know where the button is. And press the long button. Let's go. I'm making money. Let's go. Any idiot can make money. That's easy to do. You sit here, push a button, and money falls in your lap, and you think you've figured out how to make fire, whatever. But you know what? The hardest thing to do is to not lose the money you have. And that's really where the skill set is. I mean, any idiot can play a guitar. Just pick it up and start slamming your hand on the strings. But not anybody can play a guitar and make it sound good on a day. You know, it's kind of the same thing. How you not lose money is extremely important. And so most of the strategy is involved. Most of the strategy involves your ability to choose which trades you don't take. And honestly, that's where your win rate goes up, and that's where your expectancy goes up, and that's where your run up to drawdown goes up. You learn to avoid things that have abnormally high risk for the reward you're going to do. And reward to risk isn't just measured in how many points you want to get versus how much stop you want to take. Reward to risk has everything to do with what's the probability that happens, not just a 3-to-1 trade, but what's the probability that happens? What's the confluence? If you're trading the index, what are the stocks doing? Is the market maintaining structure or not? Is it rational or irrational? Irrational markets, probability sinks to a coin flip. Okay, so if it's a coin flip, then the odds are really low. Then are you trading smaller to go with that, right? All those micro adjustments are how you, now the market is sort of behaving like it just opened, but there is no market open. The algorithms in Europe and Asia are just designed to respond to 9:30 in the morning. And that's why you see a little bit of volume on holidays, even though there really is no market opening. Stock market's closed today. Hello, bro, from another engineer trying to make in the prop firm world. What's up, man? What kind of engineer are you? Wait, how many engineers we got in chat today? That's what I'm curious about. I'm about to start our big training lesson this morning. I love doing this on holidays. Capital preservation's the way to go. Where are my engineers and programmers at? Computer engineer, Kimmy engineers, what are you guys? Mechanical, aerospace engineer, CSE, software engineer, EE, biomedical, mech, EE. Holy shit. You know, this is why when I go listen to the other bigger and larger streamers, they sound like fucking retards, dude. This is where all the smart people come. I knew it. I knew it. Holy crap. This is why this chat is so refined and so intellectual, and we do so much here. You know what I'm saying? I'm not gonna lie, I listen to other people's streams, and I listen to what other people talk about and their audience, and they all sound like the kids that went to that prop firm expo, you know, 18-year-old croc wearing, broccoli haired kids sitting there like, I'm gonna be a millionaire, bro. I'm gonna post a Lambo on my Instagram, bro. And I got all the refined intellectual smart types chilling in here. Refined, you gentlemen and ladies and gentlemen, refined. You lick windows for a living. I think that's an appropriate career to be a bowel engineer. Anyways, see, I told you, this is where I think this is where most of the people that like data driven, you know, this is what I like about you guys too, because y'all, you know, I couldn't sell you bullshit if I tried. You know, that's why honesty is important to me, but it's like almost like I couldn't get away with it even if I didn't. Y'all are too smart for it. Like if I tried to pull a fast one on you guys, y'all wouldn't buy it and y'all call me out on my shit, which is so funny because, you know, young, impressionable idiots of the other streamers that watch those things, well, you know, I mean, shit, those guys could sell a ketchup popsicle to a woman in a white dress. That's how good of salesmen they are. And these kids are like, I'm gonna be rich like you. And I'm like, no, that guy's spending your money on fucking go-karts and shrimp boats and having a good time, and you're cheering him on. You're giving him your money and he's spending it better than you are. This guy's not making money trading. But if I were to do something silly and like have fun, you know, or like try to, like, if I were to try to like pull a fast one on you guys, if I were to pitch a prop firm that was absolute garbage, none of you guys would buy it. Y'all are too smart for that. So I even am forced to be honest because this group is too smart to fall for it. Ketchup popsicle, yeah, exactly. Anyways, you like that I'm a gamer? I'm super competitive and I really love gaming. So anyways, what I love about this community is that you guys do a lot of the heavy lifting here, not just me. Back testing. We talk about the data. We talk about everything as a group, and this style and strategy has advanced so much because of the contributions of this group, and this is what I love. Sure would use those ketchup slices they came out with. That's so weird to me, dude. Those ketchup slices. Is it worth trading half days? It really is if you have something to trade off of. Now, NASDAQ is outside of pivots, unfortunately. This is a sit out day. When I'm going to talk about the strategy of, you know, when to sit out, this unfortunately is a sit out day on NASDAQ. The S&P, let's talk about S&P numbers. I don't think we have really anything on S&P other than taking a long right here. Now, technically there isn't an open today because the stock market's not open. Our algo just spits an open price anyways at 9:30. But right now there is nothing to trade on. We don't have resilience numbers when the market's not open either. So all of our indicators are actually turned off. I don't know why this is still showing data. This is yesterday's data. Anyways, bro is open. I thought stock market was closed today. Is it open? There's no way it's open. They always close half day on. Stock market always closed on holiday. I thought it was. Is it today? No way. The New York Stock Exchange is closed, right? Futures market is open. You guys are confused. Now I'm starting to think that like y'all are confusing me. The exchange, the stock exchange is closed. Yeah, futures are open till noon. Not futures, guys. Not futures. When y'all said no, it's open, I was like, wait, what? Now my brain just like literally got thrown into a time loop, a paradox, and I was like, wait. Is it July? What day is it? Stock market is closed today, guys. Futures market still trades half day on the 4th of July, Friday. So the futures market still stays open half days on some of our holidays because that's still the end of the European day. So that's just to pleasure them, to be honest. Their trading day is still open because they're not celebrating, you know, the holiday where we kicked their ass 250 years ago. You know what I'm saying? They're still going to be open. They're not closing to celebrate that, right? So they're going to still be open. Hate pleasuring the Brits. I know. They don't seem to appreciate it. I'm just kidding. Y'all are so funny. Do I provide trading education? Yeah, I do. And actually we teach in this boot camp that we have here. And I'll tell you about the boot camp really quick. And I believe I have this very strong conviction when it comes to new traders and learning how to trade, that I actually decided to teach for free everything I know. If you are using our software, we do this thing called a boot camp every quarter, and it's a 20-day back-to-back session after market closes, and I train you from start to finish on how to be a day trader. It's free if you use the software, and the videos are recorded so you can just join and watch it anytime. If you don't buy our software, use our software, and people are like, I still want to take the boot camp and learn trading, we have it here, and it's only $20, which makes it $1 a class. Literally, people have come through and they have left reviews on their experience here. You can read some of them if you'd like. I get these ads for like $6,000, $10,000. I'll teach you how to prop trade for $10,000. All these fucking jokers out there, these gimmick traders that don't know how to trade, trying to sell you something for tens of thousands of dollars. I'm going to sell you a class as $1. If I ever have a webinar, hey guys, fly into town. There's this dude, I'm not gonna name his name, but he's like fucking 5 foot tall and has a ponytail, an absolute tool bag. And he has this thing, travels from city to city, and has a seminar. You go and pay $1,000 to listen to this failed trader talk. And I'm like, if I had a seminar like that guy, you guys could show up and I charge you $1 for entry, and I take all those dollars and we'd order pizzas and eat them. Like, I think it's really stupid that these traders prey on new traders to make money off of. Bootcamp honestly is $1 a class, and all the money goes to the overhead to pay our admins' salaries. So I actually do it for free. And there's all these life-changing stories about people that have learned. And the most important part, the most valuable part, I think, is the fact that the whole program is $20. It's just like put a tip in the tip jar, and that's it. And we've had close to about 10,000 people take the boot camp in the 2 years we've been doing it. It's crazy. Every single boot camp these days, we have about 2,000 people that come, and we give most of the seats away for free in massive giveaways. So I put the link in chat if you want to check it out. It's there. I think that the most important part about a trader's education is that you go out there and take your money and spend it in the market rather than hand it to me. I'm fine. I got money. I don't need to take yours to spend it, per se. So like people want to learn. They're so impressionable. It's so easy to say, yeah, don't worry, man, give me some money, I'll train you everything I know. I think it's a dirty practice. I mean, it's a business opportunity for some people, I guess, but I think it's a dirty practice to flaunt your wealth and then convince people to pay you to learn how you do it, and then you take that and then you acquire more things to where you look wealthier, then you acquire more people, and it builds a circle where you're just selling the idea rather than selling the education. And the only reason you got wealthy in the first place was selling the original idea to one original sucker and the start of the snowball. So I think it's very important to have education be the cheapest part of your journey. And at least if I have a hand in it, for your $20 that you do for our whole program, it's a month-long program, that you leave it with like a really razor sharp bullshit indicator that when you go out there in the real world and people try to sell you an idea, the alert goes off in your head. You're like, oh no, Matt taught me how to sniff out bullshit, and this is definitely bullshit. I'm gonna pass. And hopefully the $20 can save you money out there. But in reality, y'all know Andrew Slacks. He's our customer service manager, and trust me, you know, when you have 1,000 people taking a boot camp at $20, that certainly covers a nice, fat, juicy, 6-figure salary for the man who works his ass off to keep this business running. So, it's kind of like we have this perfect harmony of being able to sustain our own company. We were made a trading platform after all, and then our admins have the overhead to cover. That way they can work harder and keep this stuff going for you guys. All right. So anyways, so our software is web-based. So it works on any rock scooter tools are built inside of a trading platform that we have. And currently they're also available in NinjaTrader. So you buy it from our site, you can get either version. And we're working on getting it finalized in Go charting. Then after that, we're going to build a browser extension for TradingView, because TradingView doesn't allow API calls. So we're going to build a browser extension for TradingView where basically you load the browser extension up, and the browser extension will talk to our server, get the data, and then you copy and paste that in your TradingView every day, and then it jumps in. It drops it into your TradingView. So yeah, somebody said like the mega church preachers earlier. Yeah. So anyways, yeah, that's right. Here, yeah, like God has given me all the blessings. Now here's the tip jar. Please tithe to this thing. And then, you buy an airplane or something for your church, and all of a sudden you're like, when you give to God, he gives you all of the blessings in life. Check it out. Watching these, I went to a church when I was a kid, and the freaking kids of the pastor, they had Lexuses and stuff when I'm driving like a rinky-dink Dodge Neon, wearing like Hermes, this and that. And I'm just the kids, I'm like, man, I'll tell you. There's got to be some humbleness you got to have, you know what I'm saying? But yeah, it's just like that attracts more people. They were cool looking, they dressed well, and people come in, they love them, they're nice, they're rich. Of course you're going to give them your money. This is what humans do. You find somebody who you think is rich and you just like to hand them your money when you're broke. I don't know why we're fucking wired to do that, but we're wired to do that. It's so weird how that works. You know what I'm saying? And like people lose sight of the logic behind that of like, maybe they're only rich because people are giving them money, but somehow you're attracted to that and you're like, well, you look wealthy. I don't have much, but here, take what I've got. You know what I mean? Why CC info for free course? Christopher, you've written that a couple times. I don't understand what that means. Why CC info? What does CC mean? Credit card? Why credit card info for free course? It's not a free course. Oh, yeah. So it's not free. I'm sorry, my bad. CC info. Okay. So the course is 20 bucks. It's only free if you are using our tool. So it's like if you buy our platform, which is $99 for the first month and like $159 every month after. So if you're subscribed to the platform, the training and the bootcamp is free when you come to that. If you wanted to just, some people are like, well, I can't afford the tools, but I'd like to learn trading. So eventually we opened up the doors to the public. And because it was a huge administrative thing, doing the giveaways, doing the bootcamp, Slacks works his butt off just managing, giving away the free bootcamps. I mean, it's like a 24-hour job, it feels like. So we were like, well, let's charge a little bit and give you a raise. And so that's where that came from. So it's 20 bucks. It's $1 a day for 20 days. That's it. Yeah. So the class isn't free. He should have listened to that from the start of it. Yeah. For the cost of a breakfast, cost of coffee. You sign up for both bootcamp, Rocket Suite, or software, Sonic. Well, you got to get, bro, you got to get a refund on the bootcamp then. Means you have to enter your credit card for free course. Chris, I don't know if you're like existing 20 minutes in the past. Can you click that live button underneath the screen share? Underneath the screen, my friend? Because I feel like you're not watching us live. So make sure that you're not watching the stream in the past. Because I feel like I'm talking to you 5 minutes in the future. He's asking why credit card info if they want to give away bootcamp maybe. Yeah, that's what I'm saying. I don't have time to guess for the next 20 minutes. All right, let's get going. If it's free and you got to put in your credit card information, it's because it's only free for the first month. So bootcamp is a recurring subscription to stay in the community. It also includes a Discord. You could think of it as like 20 bucks for Discord and bootcamp access. So you have to cancel it or it'll charge you on month 2. That's what you're asking for. Yeah. All right, it's great to get going. When there'll be a lifetime Rocket Scooter platform sale? Right now, Scott, there's a sale going on right now. And it's ending this weekend. By the way, it's $1,500 off a lifetime. It ends on Sunday. 4th of July sale. All right. How much psychology play in the course and being accessory bootcamp? It's a huge part of it. I'm going to talk about a lot of the tricks today. He's here to make money, not from trading. No, from you. That's it. You nailed it. Sherlock Holmes in chat, everybody. Figured it out. It's incredible. You caught me. I'm running a business to make money. This is incredible. They should make a TV show out of how good you are at solving crimes, my friend. Yeah. Lifetime is $1,500 off for the package. Yeah. Caught it in 4K. Dude, fuck. Figured out. This guy started a business to make money. How dare you? You know, we're starting a Pilates studio. Also, and I'm not gonna lie, as much as I want to help people get nice tight asses and abs, I did it to make money. Oh shit, I can't believe I admitted that in public. Fuck. Shit. You know, I invested in a hospital one time. Oh god. And as much as I love watching people get their cancers cured and shit, I kind of also did that to make money. I'm also building a coffee shop right now. God. My life is over. They caught it in 4K, me admitting businesses that make money. I lied to you all, guys. I told you I did it out of the kindness of my heart, but I started these businesses to make money. They should fire Benjamin Cumberbatch and put you in as the new Sherlock, bro. I mean, seriously, that's honestly, fuck. They caught me. How dare they? All right, let's get started. Got peak viewers here. Let's do lesson time. I know. Oh. But the bootcamp actually is the least profitable of all my endeavors. Believe it or not, that's the least money I make. because I don't make much from it. It's kind of crazy. Rocket Scooter is more of a passion project than a money-making endeavor, believe it or not. I mean, it makes some money, but Rocket Scooter is probably my least profitable business of all the dozens of things I have, because it's a massive trading platform over, and we do very well, but it's not the hand over fist money you think it would be. It's a very expensive machine to run. That's for dang sure. Okay. What advice would I give you to start a business? Oh God, how about the end of this? I'll talk to you about business advice. I'm definitely a good business mentor. I'm mentoring the lady downstairs on her first endeavor. Well, she partially she invests in other businesses. This is her first time as an owner operator, so I've been mentoring her with what I know. So, all right, Cotton 4K. God bless you, brother. Thanks, man. Somebody says, bro, you're a real actor. You know, I was an actor in my high school. I was like the lead actor of my school. I used to do all the plays and shit. Okay. All right. So what Rocket Scooter does and what I did. So, you know, I'm a mathematician, an engineer, mostly, and a programmer. My background is mathematics. And when I got older, I got into trading. Like, as you know, it wasn't something I wanted to do. When I was a chemical engineer, I worked at Dow Chemical. I was a reaction engineer, was my subspecialty. And I ran these acrylic acid monomer reactor units, which basically made this like orange colored liquid that they turned into a powder that they sewed up into a gauze pad inside of a Huggies diaper. When you rip apart a diaper and you shake it and this like powder comes out, that's what we used to make. We made the precursor to the polyacrylic acid. So that was my job, diaper guy. And so I had the world's greatest job as a 26-year-old. You know, I'm fucking driving around in a golf cart, hanging out at the chemical plant, talking to operators, shooting the shit. Everyone's smart. I loved it, man. I had the best job in the world as engineer. I hated my previous jobs because I was working in an office designing plants and stuff. It was so boring because everyone's so nerdy. And I know it sounds weird coming from me because I'm like ultra nerdy, but when I call people nerdy, it means they're nerdy. They were too nerdy for me. I'm like a blue collar nerd. I'm like a blue collar guy that got lucky to be born with high IQ. So I kind of can like fit in with normal, regular people and just shoot the shit and have fun. And there are people that are smart, but they're too nerdy for me, right? And I almost hated my job because it was like that. Dweeby nerdy types, and I'm like, ugh. But I got a job at a plant. It was like real folks, you know. It was like blue collar guys like myself. I'm 44, by the way. And I'm like, yeah, we can cuss, we can spit. Everyone's like smoking, talking shit, cussing. I'm like, yeah, and everyone's smart. I'm like, yeah, that's where I want to be. And so, anyways, I got laid off in 2010 during the financial crisis. Unfortunately, the company I worked for got bought out. And they laid off half the plant. Nothing blue collar about me. I absolutely, bro. You got to see you got to see me in my real life. I do outdoor gardening, maintain my own lawn, work on my own car. I can change my own oil, change my own tires. I can do carpentry. I'm a man's man. I can start a fire with my bare hands. I'm like an Eagle Scout that didn't get the badge. I was a poor kid growing up. We did everything ourselves. I can cook, I can grill. I'm certainly not a spoon-fed, like I didn't go to the oil and gas happy hours because everybody was so dweeby and the khakis and, you know, polo shirts, and half you guys are looking down right now. You're like, oh shit, he's talking about me. Blue collar, don't have engineering degrees. Well, hold on. I'm saying, I come from a blue collar working class family. My dad was a cable splicer for the phone company. My grandpa was a prison guard at Huntsville. Rode around on a horse with a shotgun on the chain gangs along the highways, make sure people didn't try to run away. So I didn't come from a college-bound family at all. So anyways, point I'm saying is, as a mathematician, I got into trading because I got laid off. And then when I was working at the plant, one of the things about working there was that they charged me with a task. And the task was, our reactors have this catalyst in it. This catalyst is made of platinum, and we need to get some. And we have this idea, with the stock market's crashing after all, we need to buy some of this platinum. And, you know, we thought that, you know, we can look at this at the market and see, you know, we're trying to target a purchase in a year and it's going to be millions of dollars, but we think we can save a whole lot of money if we time it right. So Matt, we want you to look into this thing. Is there a way that we can predict platinum prices based on the trend of the chart? And I'm like, oh, okay. So I started researching like what makes platinum prices go up and down. How do futures work? How do futures markets work? I started learning this early on. And anyways, long story short, it got me into trading because I was very fascinated by the world of markets. And then I got laid off and I was like, oh, damn. And a friend of mine was a trader and he kind of like yanked at me to get into it. And I got into it. But my first thought of it was like, can I predict the markets? And my first task was, can I predict platinum prices? And I loaded up a platinum chart. And at the time when I learned platinum moved all over the place, I came to one solid conclusion. I researched how to predict markets, how charting works. And very quickly I came to the conclusion is that you can't predict shit in this market. And I told my bosses, I was like, I don't think you can predict these markets. I feel like it's random. I feel like everything I've tried to do comes out being a pretty random result. Nothing seems to be predictable. And so I really can't predict what platinum price is going to be 3 or 6 months out. And they were like, yeah, we kind of came to the same conclusion, but we wanted to see if, young smart guy like yourself could come up with the original idea or unique thing. And I'm like, nah, man, shit's random. They're like, yeah, okay, yeah. We have a projection we're gonna do, business projection. But we were curious if like this technical analysis stuff and charting stuff, that we see out there, can somehow come up with a pattern we could find, seasonal pattern, something. And so anyways, came to the conclusion early that mathematically the stock market's random, you can't predict it. So the idea became, well, when I started my journey in trading, I was trying all kinds of different strategies to figure out how to make money as a trader. And, none of it really worked until I finally landed on something that made sense. And the thing that made sense was if you could find where traders will be, where there's volume, you can assume that that's the point that matters when you execute. So a couple of things that make traders lose a lot of trades is not that they get the prediction right or wrong, is that they're trading from the wrong place. Here's an example. Right now, let's pretend that NASDAQ is moving up in this range right here. NASDAQ's moving up higher and higher. If I were to buy on this dip, what do I need to happen after me? Well, if you buy something and you want the value to go up, you just need somebody who's a lesser sucker than you or bigger sucker than you to buy after you did. And so you need traders to trade after you to make the price go in the direction you want it. If nobody comes in after you, then price doesn't move. If I buy something at 100,000, I want to flip it for 2, then I need to find a sucker to buy it at 2. And they need to buy a sucker to buy it at 3. And you always need, it's called the greater sucker theory. And that's what makes things go up. You need somebody who's a greater sucker than you to come in after you did, which means you need volume. And volume is people coming in and buying. It's trading activity. So volume needs to happen after you buy to push the market up. So at minimum, every trade you make needs to have volume at minimum. So therefore, I went on this endless journey to say, well, can I predict where volume will be? Because at minimum, I need that every time. So I need to find a volume pivot every time. So then I started leaning on techniques like VWAP and volume profile. And VWAP and volume profile were perfect at finding volume. So you'd have like a volume profile, there's a high volume node and things like that. And your low volume node is where market's extremely illiquid, and high volume node is where your market's liquid. So like low volume nodes, you typically pass through. High volume nodes, you typically congest at. And I was like, aha, at least I know markets can move from node to node. The problem is volume profiles are all based on yesterday's trading volume. So as I went through my journey, the first thing I started using was like this risk interval technique that I teach you guys, and I'll show you all that in a second, but also volume profile and VWAP. That was it. That was my first basic technique, and that technique made me money. And as time went by, that technique became the core of everything I built, and I moved from that into something better, which is along the same premise, is to find where volume can be. Because if you buy in midair, like I just went along here, and you can't prove that traders will come in after you, then you're kind of just, kind of being done with your investment, right? There's no zones today because the stock market's closed, but we'll have some historic ones to go over. Okay, so let me show you 2 really cool tricks, okay? Number 1, I learned this a long time ago. It's called the risk interval. The risk interval is something built off of futures margin requirements. Every futures contract has them. Our software calculates it once a night. Here's NASDAQ, and here's the number. It says $276.75. And if I go to a NASDAQ chart, which I'll show you guys here really quick. I don't know if I have it on this chart. I got it somewhere though. Let's zoom out. I got it somewhere. Default. No, it's in here somewhere. Nope. I think I have it, but I'll make a new one. Okay, I'll make a new one. Okay, so let me zoom out a little bit. And let me take this distance. I'm going to show you a very cool, just going to blow your minds. 276.75, and this is a number based off of margin requirements. I created this in 2015. I'm going to draw a box of 276.75. And this is what's called market structure. And I hear a lot of people like ICT traders and bull flag traders and all this stuff talk about market structure, right? And they don't know what structure is, because structure means like the framework. And so 74, 67, 75. And I'm drawing a distance of this. I'm gonna show you a cool trick. Okay. So structure actually means framework. Wait, hold on, I think I did that too big. 276.75. Try that again. 276.75, and then make 7,200. So market structure is set by the Globex, which is the computer machine you're trading on. It's a casino. It's a video casino. And this video casino itself has rules, like an autopilot on an airplane. It doesn't just work and let things happen. If things move too far to the left, it kind of steers you to the right. If you raise up too high where you're almost going to stall, it sort of levels you out and throttles you down so that you don't. The Globex has systems in play which mobilize liquidity, call for market makers to work, pause trading, stop trading, halt trading in fractions of a moment. And I'm going to show you something that, first of all, once you see it, you can't unsee it. This is what real structure of the market is. The Globex runs on this distance. Once you see it, you can't unsee it. All right. Notice something about that exact distance that I showed you on that table. Look at this, there to there. Look at this, there to there. Look at this, there to there. Every day, high to low, low to high. This market moves in consolidating ranges of that distance. It's based on the margin requirement. Now, the margin requirement is set by the CME group, and it's a very simple process. At the end of the day, and I go back until you guys, I'll keep blowing your minds. It's there, it's there, it's there, it's there, it's there, and so on. All right, got your attention? There's a reason I win a bunch of tournaments. See, we're reverse engineering the stock market. Okay, there's a lot of stuff that happens that you don't know. Currently in NASDAQ, and you can try this with every futures contract. They're all here. Every futures contract has this. The S&P, 68.75. The number changes anytime the margin requirements change. So the bigger, remember, the market, and I'm explaining to you what you're staring at. What happens every single day is a CME group at the end of the day will ask, oh, did I draw the wrong, hold on. Oh, I took the wrong box. This is ES. So this is the 68.75. Sorry, I'm in the wrong chart. So this was 68.75. This is ES's risk interval. On NASDAQ is 246. My bad. Let me do NASDAQ. So ES I already had. That's why it was. So ES was 68.75. Let me do NASDAQ's for you. It's the same thing. Hold on. Let me zoom out. Oh, my bad. I was saying NASDAQ, but I meant ES. So ES was 68.75. And I already had that box pre-drawn for you guys. NASDAQ is 267.75. So let me do that for NASDAQ. Okay, 267.75. 267. I know things were like actually weird there. 29,000. There we go. Okay. Let me grab that NASDAQ one really quick. I'll show you the same thing in NASDAQ. Okay. NASDAQ, same thing. Your low to high ranges, low to high ranges, high to low ranges. Every consolidating move. Look, low to high, reject. Low to high, reject. Every single wave moves, for the most part, in that distance, those volatile waves. NASDAQ, NASDAQ, NASDAQ. I'll see that? High to low, NASDAQ. Anytime the market suddenly needs to move, it somehow spans that direction on its first test for liquidity. This is what's actually happening here. Okay, let me show you. Every single night, the CME group will ask hedge funds and investment banks, what are your positions in futures? And this person might say, well, I'm long right here, 1,000. Another person might say, well, I'm short right here, 500. And everyone else reports their positions. I'm long here, I'm short here, I'm long here, I'm short here, I'm long here. So they would say that, imagine that everybody up here was short and everybody down here was long. So what the CME group knows from this point is that your sellers are up here and your buyers are down there and your liquidity is anywhere in the middle. Okay. So liquidity is where buyers and sellers can meet each other and have the maximum frequency of transactions. Buyers and sellers in close proximity, market's very liquid. So what they're trying to do is find liquidity, and they run this thing called SPAN. It's a program, and I reverse engineered SPAN in my early 30s, and I turned it into this risk interval that I just showed you that cool trick on. What happens is they know that they measure a couple of things. They have this array of tests that they run, and they're simulations. If the market moves up like 33%, or moves up 66%, or moves up 100%, while these guys might gain, these guys might lose. And they run all these scenarios of how price will change and how volatility changes, and they come up with a bunch of numbers. And they come up with this series of numbers of all the different profit scenarios. And of all the scenarios they run, they find the one that has best effect for all participants. The one that is the least stressful for all participants. They're going to say that, well, whatever we come up with provides a framework for the market to exist without squeezing. Because what happens if you start throwing people in margin calls, the market becomes chaotic, falls apart, and shuts down because of a circuit breaker. And when that happens, trading's illiquid and nobody makes money. When trading's liquid, more trades happen. When more trades happen, CME Group and everybody in the middle takes their penny per trade for fees and makes a ton of money. They want to avoid illiquid markets at all times, so therefore they're financially incentivized to produce a liquid market for you. So anyways, long story short, they find out what distance or what parameters create the most favorable environment for all. They find like a harmony, and then they come back and they say, okay, we're going to set the margin requirement to this amount. Because what the margin requirement does is it allows there to be fewer or more contracts to be traded at any given time. And what that does is it prevents the market from being too violent with too many contracts. If the volatility is really high, like people's positions are spread out really far, they're going to raise the margin requirement. So when I say margin requirement, you say range. Because what happens is higher margin requirement, higher the range. When they raise these margin requirements of futures contracts, you'll notice the volatility is getting higher. When they lower the margin requirements, the contract tends to wobble in a less wide range. It's directly correlated. And I discovered it because of direct correlation. It's very easy to reverse engineer that because you can see the correlation very simply. Repeatable news events would create a similar outcome. And so whether the market moves very quickly, or the market bounces around, or the market tanks and waves, each one of these little moves from high to low or low to consolidation are the same distance. And they are the distance of the margin requirement, or the risk interval, which is a function of margin requirement. Essentially, we take CME's program and we reverse engineer that liquidity range. So what you're seeing is a liquidity test, like okay, market's trucking along. Oh shit, Trump tweets something about Iran. Market flies straight up. Well, think of it like this. Thank you. If the market is at equilibrium, buyers and sellers are in harmony, then all of a sudden, Trump tweets something about Iran and the market gets an immediate sudden buy imbalance. Well, now there's more buyers and sellers and price needs to go up to find sellers. So when price is going up to find sellers, market makers got to park their bet somewhere and say, where are the sellers going to be? Well, they don't know where they're going to be because we don't know where sellers will come from. But they do know where everyone else was positioned. If there's a bunch of buyers here and a bunch of sellers there the night before, then they know that range of, well, sellers are just 200 points away. So margin requirement tells you the sellers are 200 points away. So the market needs to spontaneously burst. It'll go that 200 points to try to find them. So it's like the autopilot is step changing a distance of that much until it finds the true sellers, and then you're done. And somebody said, what about the longer moves? This is random, like how many waves it goes up is random. You'll never be able to tell when the sellers will come, but it's like the computer will test or that when I say the computer, the dealers out there are placing their bets on the market along that interval distance, because that's what they told us liquidity is this far away. So it makes sense for the computer to take its first guess of, well, let's try this margin requirement distance and see if there's buyers and sellers there. And so anytime the market needs to wave or move around quickly, it is of that distance. And this works for gold, this works for oil, this works for whatever. We have an indicator that one of our teammates just created called Varus, which is this distance off of the VWAP. And this distance off of the VWAP is phenomenal at finding like ranges to trade in, and more importantly, ranges to avoid. This was something, and Kyle made it. He's one of our mods, and he just built it, and it'll be available on our marketplace in a little bit. But it's really neat, because what he did was he took the VWAP, which is this red line, and subtracted that distance plus or minus. And if you could see, it's like how far the market can deviate or oscillate while looking for liquidity. That's all it is. And you see like the upper area of the range and the lower area of the range tends to contain price most of the time. Stock market's closed today, so there's no trading, and I've already maxed out on profit in all of my accounts. That's why I'm not trading. I can't trade anymore. Well, I guess I can trade in some of these funded accounts. I got my first payouts with Blue Sky already. Anyways, long story short, once you guys see this range, this is true market structure. It's actually set by the CME group, and market makers just fall in line around it. Anytime the market needs to move and bounce, you got this beautiful actionability right on those edges of that box. And so every single night at 4:45, they basically change margin requirements at best once a day. So every single night at 4:45 Central before the stock market, futures market opens, we run the algorithm, we scrape the data from the CME site, and then we recalculate these numbers for you guys there on the table. So that distance is such a beautiful number. Whereas like, if you were to take the futures close price, and what that distance does, it tells you that anytime the market needs to suddenly move or deviate from the expected price of the index, how far will it go? So it's a pivot, like trip from futures close plus or minus that distance creates this green band. And that green band, every single time you touch it, 100% of the time, and I tell you, take this to the bank. CME Group Watchdogs, are you listening? I have something that works 100% of the time. That's a tall claim, but it's never wrong. Every single time one risk interval close, or one risk interval from the close price is 100% a volume pivot. Every single time. Every single time. The info is in our trading platform in Rocket Scooter. The link's in the description below. Anyways, so finding volume became very important in my journey because volume pivots were where I had the most success as a trader. The risk interval can change daily. Yeah. So, if you're using the Varus indicator in the trading, so if you go, you'll need to update the risk interval. Yeah, you need to update that. It could change every day. Now, the frequency at which margin requirements change, it depends. Oil can change multiple times a week. Commodities are very violent. The index, sometimes it changes twice a year. Sometimes it changes once a quarter. Depends on the environment you're in. But every day we update it. Yeah, the market's closed today, so nothing should be working. What's the calculation if you want to do it manually? Well, so we don't. Yeah, so the idea is that's kind of like my proprietary model. So we don't share. That's how I do well at trading, right? I don't really tell people how it works. But you guys can purchase the indicator, right? You got to support the developers here. So how do you calculate the risk interval? Right, it's something that I 10 years ago in 2016, 2015, 2016, I figured out myself. How I came up with the parameters to reverse engineer a range from the margin requirement is very much like, you know, my ace in the hole. Like that's what got me ahead as a trader. That single piece of information. The indicator is here in a table in Rocket Scooter. If you go description below the video, the platform is there. You can get our indicators here or for NinjaTrader. Anyways, long story short, what the risk interval is, it creates a barrier where volume is predicted. And it's took me on a journey that every single thing I decided going forward was let me predict where volume will be. Because in all honesty, that's the only thing that matters. Why trade in midair? Why should I make a trade off of something that I don't think matters? If I want to trade, I want to trade where the traders are going to be every time. So now, 10 years later, every single thing that you see on my charts from here to these to MHP are all volume prediction tools. I want to predict where volume's going to be. And it became such a cool journey. Finding out where volume could be is one of the most important things that you can do as a trader. And we started this whole wave of volume prediction. And volume prediction allows me to trade off of simple pivots. That's it. And so instead of just trading where things don't matter, trading only where it matters has upped my efficiency and my win rate. Because when you trade from the right place, it doesn't matter if you're right or wrong. If you're wrong from the wrong place, you're always going to be wrong big because you don't have any indication that you are right or wrong. But if you are wrong from the right place, you invalidate quickly, and therefore you're always wrong small. That's the secret to successful trading. I tell people that any joker with a thumb and a forefinger can click a button and make money, but it takes a lifetime to learn how to not lose it. And also, it's the biggest skill set you're going to learn is which trades you do and don't take. As a matter of fact, right now, you might say, aha, looks like we're dipping. Let me buy the dip. And I'm going to tell myself, you know what? Let me buy a dip that matters. I know there's volume there 100% of the time. So if I went a long, let me wait and long from there, right? It's a better looking long. Not in midair, not here, not there, because you're going to take a lot of drawdown for the bounce to be. And I found out most bounces take place at one or any of those volume pivots. So it allows me to wait for a proper setup. And all morning while I'm not trading is I'm actually waiting to show you that setup. And the neatest part about volume prediction is that we know that volume profiles work, but the problem is they don't work all the time. And I'm going to play a game with you guys, which is really fun because I went even further than the risk interval. While that's neat to show where there's volume boundaries in the market, that actual green band that I drew, we back tested it. And here's the results of that back test. It is, and this is straight from our boot camp, our dollar a class boot camp. This is what it is. These are all the handouts from it. There's handouts, there's back tests, there's probabilities. We present all the data to you. There's technical papers that were written. Like one of the, one of the handouts is a technical paper written by one of our members here. And it goes through all the probabilities. Like you math folks will love it. It goes through essentially the odds of what our strategy does and how, the math that goes with it. The risk interval thing is very important to the structure, but it's only one of the things we do. We have some setups that find volumes so accurately that some of our setups work 90% of the time under ideal conditions. Greater than 50% all the time. Sometimes 70% all the time or greater. This is 60% all the time or greater. This is 92%. That's that green band I just showed you. It's crazy accurate. And I'm talking crazy accurate. It's one of my favorite setups. And that's that structure of the market right here. The green band. This is a risk interval down and up. As a matter of fact, over the history, we back tested the history of these when we put together the boot camp. 88% of days will close in between the bands, which means most days are contained within one risk interval move from the close of the previous day. Now, we're going to put together some back tests on Varus, but I think Varus would be pretty much a similar thing. The Varus band from open, I think, will probably be 90% containment by the end of the day. So what this means is that when the futures market opens, 9 out of 10 days don't break the band by the close. 4% of days break above and keep going. 8% of days break below and keep going. So with high odds like that, it just basically says the CME group gets it right. They plan the margin requirement to maintain structure, and structures maintain 90% of the time. The market doesn't always have market breaking news to crush the structure. It means the autopilot's working and harmonious. But what we do as a trader is that we long off of the lower band and upper band every single time. Every single time. We trade off of that band because it's a volume pivot 100% of the time. And most of the time it does pivot into the direction of pulling back in. Now, nothing works every time. The trade doesn't work every time. But let me give you like an example using the S&P. And let me put that band on there really quick. So this is one of my best setups that I do. And I'm teaching you guys my best setup. If I put this on here, and the S&P's risk interval is, I just have a manual one, 68.75. Okay. I'm going to show you what this band does. So let's put that green band on there. And you can see that I'll show you some trade setups. That when you touch the band, I trade off of it every single time. I short every time. Under certain conditions, I will short for reversal. Other conditions, I'll short for a scalp. There's a scalp. Here, see how it's fighting there? Every time you touch the band, every time it's high volume, right? You're looking at actual pure market structure. It can overshoot and pivot off of it, right? Pretty neat. Let me zoom out. I can see a little bit better here. Look at the top. Bounce, reject, bounce, reject, bounce, reject. Look at the big sell off here. Sell off, sell off, sell off, sell off. Boom. Hit the band, pull up. You see that? Every day, it's got pivoting action here. Close to the band, pull back in. Close to the band, bounce right off, bounce right off, bounce right off. Some days, it just says, fuck you, and goes through it. Well, that happens. Put in a stop. But not every day does it do that. At least every day. Who's a great example? Every day when even market's crashing, look what it does. You see what it does? It tries to fight at the structure first, even before it falls. So you have the idea that there's supposed to be volume here, and that structure is broken. Then get out of the way and check it out. You can go play golf while everyone else is fighting their accounts blowing up here. I've had some days where I've taken a hit, I've longed and lost and longed and lost and got out there with a medium-sized loss, and I laughed at everyone else blew their shit up on the way down. And I know that the market's irrational. If we break that structure that shouldn't break most of the time, something that should only happen, 8% of days, then I get out of the way. So one of the trick is, as a trader on markets you avoid, is when you have something that works a lot of the time, right? A lot of the time, and it breaks into an area that doesn't happen a lot of time, the low probability event, then you just want to get out of the way. The example is that, I can't remember the mathematical concept, but things that happen infrequently tend to have a more severe effect. It's like the lottery. The less likely it is for you to win something, or the less likely it is for an event to happen, the higher the effect of the outcome. So the rarity of something happening creates an effect because nobody's betting that it happens. And when you catch people off guard, it usually makes a snowball. So we use this green band also as a flag to say, well, let's get out of the way. On NASDAQ, I use typically I use a 40-point range on NASDAQ. S&P is a 10-point range. If I shoot it by 10, I'm usually out. Okay. So anyways, this band itself is a risk interval low and high off of the close. And you can see here, we went up to it, went up to it, went up to it, and there's some rejection. When you interact with it, there seems to be an attempt at rejection, right? And it's just neat. Like once you see it, you can't unsee it. And I guess you guys, so can I move on from this? Are you convinced? Or you want to see a couple more examples that actually is a thing? Are we convinced 100% of the time it shows you volume? 100% of the time, every time? We can move on. Volume every time. So this is one of the things we do, right? So the idea, yeah, you usually know how far it will break. So where do you do the stop loss? Yeah, great idea, right? So here's an example. Say on ES, I use 10 points. If the market falls and falls 10 points, I just stop and I get out of the way. If it reclaims the band, I long again. And if it falls again, I stop again. And when it reclaims the band, I long again. Eventually, every time it achieves that band, I trade again, but I stop and get out of the way every time. So in this example, I longed and stopped, longed and stopped, long and made money. Over time, it works more than it doesn't. So I want to trade it every single time. Anything that you have statistical edge on, you want to try to take the trade every single time. Some days it's beautiful and pivots very nicely. Some days it overshoots and pivots, but that's where your stop loss philosophy comes from. Now we have some confluence rules to go with it. There's a stock indicator that we use that looks at how bullish or bearish the market is, and there's a rule of thumb. When the stock indicator is greater than half, the market's bullish. When the market's bullish, we don't short off of the green line any more than a scalp, and I mean a scalp. So if I were to short off the green line when the market's bullish, we don't like to fade bull markets here, then I'll take a little bit of a scalp and like maybe 40 points and I take out. Like this didn't even move like 30 points. So I could maybe take a small scalp, but I know once I get it, I'm out of the way. If this is bearish, I short for reversal to find lower lows off the consolidation every time. Okay. So on the bottom side, I long every single time at the bottom. I always bet to the bull side, and when we dip at the bottom, I'm longing every single time it touches it every time. There's no time frame that works best for this because this isn't technical analysis. One thing you'll learn from my trading style, it's much simpler than anyone else's. I find pivots, I make decision on what to do there. That's it. I don't use technical analysis, so there's no such thing as time frame in our trading style. The pivots are the same no matter what. So you guys that are trained as classically trained candle traders that look for like ICT stuff or candle patterns, you're trained to look at time frames like they mean something. To us, the pivot's the pivot. So it doesn't matter what time frame you use. It's the same place. Is this our personal indicator? Yeah, we built this entire trading platform actually. And if you guys don't know, if y'all are curious, y'all are just tuning in, let me pause for a minute. Hold on one second. All right, let me show you something. So just FYI, I got like one little thing. So let me show you some accolades very quickly from like some things that we've done this year. So the strategies that I use for prop trading, I use for real trading, and I use for trading tournaments. You guys don't know, as all streamers out there, we've won more tournaments and placed in more things than any other 5 streamers combined. I mean, we're that far ahead of everybody else. This reason we're kind of going viral now. It's crazy. So like I did a tournament with like 5,000 people and I got first place personally. I did the Robinson 2024. I got in the top 10. I did Pat Whelan's BDH tournament. Out of 30,000 people, I got first place. Tradeify Grand Cup round 1 last year, or Grand Cup 1 last year, our team got second place out of every influencer team out there. We beat every strategy, ICT, you name it out there. On the Ninja Trader Arena Cup this year, I got 71st place out of 30,000. I got 20th in the qualifier. One of my students won the entire thing and won $105,000. In the Tradeify Grand Cup, this is an old post, but in Tradeify Grand Cup, I got top 16. This was a month ago. In Q1 of 2026, I made $1 million on that P&L, 100K to $1 million challenge. In my personal account, I made 4. So I made about $5 million in the first quarter of this year trading. Live in 4 prop firms my first year and a half of doing them. And now that has upped to 5 because I'm now live with Lucid. So these are my actual accolades that you guys got to see. Watching some of my students win like the Arena Cup was really crazy. And awesome. Very proud of you guys. And basically what we do is we boil trading down to a very simple philosophy. Where are traders going to be? And when you get there, make your best guess what to do. Do I sit out or do I engage? And if I engage, the next important question is, how much do I trade? How much risk do I take? And it's like poker. When you get the cards, you know the odds. The higher the odds, the bigger the bet. The lower the odds, the smaller the bet. So the example would be that in a bull market, as most days are bullish, why would I try to fade a bull market when 70% of, or 60% or greater of all days are bullish, and an ideal market, 70% are bullish? Well, why would I fade a bull market? Yeah, the odds are very low. And if my bull market indicator says bullish, then even though I have a volume pivot here, I have a strong conviction that it won't fade. So if I did want to take a short, I might as well scalp it with a very small position to try to make a few points, because I'm smart enough to know that not fade the bull market. Okay, and look at that. What a great decision, right? So I use Confluence to decide how much and what my odds of shifted are. And then I adjust my position size to go with it. So I just trade where traders will be. I use moderate. My Confluence indicators are all isolated here. Each, they're color coded. When I'm at the white, I want to look at the white numbers. When I'm at the green, I want to look at the green number. When I'm at the orange, I want to look at the orange number. They tell me up or down, big or small. Simple as that. So if the stocks are bullish, the example of this green one, it's telling me that 86% of the market cap of stocks are in a bull zone, and options is options thing. That's a whole nother lesson. But if the stocks are mostly bullish, then I don't want to fade the index like it's going to suddenly fall out of the sky. So if I'm fighting against such strong bullish confluence, I better trade very small because the odds are against me. You know what I'm saying? Blue Straight said he knew I was using span. Dude, I love it when you guys figure it out. Yeah, 100% was using span. And the idea was to reverse out usable ranges from CME span, because the reportable positions are like, here's where we're all distributed. And they said, okay, we're going to set an adequate margin requirement to make sure that the market doesn't naturally fluctuate to put you guys at risk. And so they tell you where they are, and CME gives you a margin requirement. We take the margin requirement and reverse where they are, and we find that robotic range that the market tests for liquidity on. And it just finds us volume pivots. So it's kind of neat. My live trading hours on stream are from 8:30 in the morning Central, 8:30 Eastern, so an hour for pre-market. And then we stream all the way till 10 p.m. at night. So we have a 15-hour stream. It doesn't stop, with the exception of the hour the Globex is shut down. So we have 3 streamers here, myself, Neon, and Brad, and we stream morning until night. So anyways, the trick is volume, right? So let me show you guys some fun tricks. Now, I'll go into the second thing we created. As years went by, I started diving into options as a way to predict volume. And one thing that you'll see that's kind of neat, just so I can kind of like finish this icebreaker here, is you'll notice that every time the market seems to bounce around in ping pong, it seems to bounce around these levels that are on the chart. These are populated by the algorithm, and it just seems that like we've identified a bunch of places for volume to be, right? And the market just randomly ping pongs between them. Look, here's one pivot, here's another, here's another, here's 2 more, here's another. And you can see every time you get to it, there's some kind of volume activity and some kind of thing that's going on. Like right here, we hit that pivot, there's volume. We hit these pivots, there's volume. We hit this yellow line, there's volume. We hit this white line, there's volume, right? So as the years went by, when that risk interval thing proved to be so strong, we went on a journey to figure out other places we can sneak out volume pivots from the overall, construct of what the market is. And with all of the high frequency trading going on and all the CME programs, because CME really controls the market. How do they do this, by the way? So the best bid and offer, you see over to the right of the screen, or up here, right here. So the best bid and offer moves around like this. That's actually set by an algorithm. It's like a line that market makers have to line up behind. The CME group is tracking the underlying index and trying to forecast where it will be and trying to adjust for liquidity in real time. It's an autopilot machine that sets the market. And so that over here, this level 1 you see dancing around is not set by market makers. It's set by a machine, and the machine is just trying to track the futures, trying to track the index itself, or where the index is supposed to go. And then market makers are quoting around that set point. And so it's just a giant machine on autopilot, the Globex. And we found out that, like, okay, what other ideas can we have? I actually went and read every single patent the CME group ever put out, every technical paper they ever put out, everything I could read about the Globex, and I found dozens of automated systems that just run and control the futures market. It's incredible how much was out there and how nobody tried to turn it into usable stuff. And they're basically saying, well, when the ship turns this way, we kind of steer it back this way. If the market falls too far too fast and sell orders clear out too many tiers of the bid, we shut down the market for a split second. We mobilize market makers to get for mobilizing liquidity, and then we auction off at a new price. It's called velocity logic. You might have never heard that. Sometimes markets will fall and then skip a price, and a second later, it skips and goes somewhere else. You're like, what the heck? You didn't know in that moment. The computer system says, nope, stop trading. Okay, market makers come in. Where are we quoting this? Okay, where's the liquidity? Okay, you guys don't want to buy here? We'll recalculate where we gap, and boom, we gap. The whole split second, all this stuff happens. And we're like, wow, there's control systems on the market, and it's to keep things orderly and stable for everybody. And I was like, well, how much of this can we exploit? They wrote a patent. Can I make indicators out of this stuff, right? Can I find volume at these levels? And it took me on this endless journey to kind of exhaust what I could find from CME Group's thing. Risk interval and all the applications of it is pretty much the best use of CME stuff. Now, as years went by, I dove into another world. If you ask him about the market maker, he wouldn't be able to answer you. Go ahead, ask me about the market maker. What's up? You're in a mission to save people from getting their money stolen. We need to call them out here in your garage. Wait, what? If you ask me about a market maker, I wouldn't be able to answer you. Go ahead, ask me about a market maker. What would you like to know? I've got about half a dozen friends who are market makers for various investment banks. Somebody's on a mission here to help people. You're on a mission here. Somebody here, gee golly, to save people from getting their money stolen. Let's know what we know. Tell me what you know. I'd like to hear it. I don't ban people. I'm literally, I don't ever ban people because my stats will stand up to any criticism at all. I don't need to ban anybody. I'll answer your question. What's in your garage? You have a Lambo and thousands of books. You acquire a lot of knowledge. Here in my garage. So that guy. I'll give you one more chance to answer the question. I don't ban people because I don't need to ban people. My stats can take it. I'll stop for a minute. You got something to say. Ask me about market makers. Ask me anything on the fly. No Googling, no AI. I'll answer it. Ask me any question you want. Knowledge. Dude, you remember that guy he's getting arrested for stock fraud and all that stuff. Remember that guy? Shoot your shot, brother. Give me a second. Lock and load. What would you like to know? He's over there figuring out a question here. Ty Lopez. Yeah, Ty Lopez, right? Guy wants me to come in his garage. I don't know. I'm sorry, bro. As much as I want to come over to your garage, you're not my type. I can just tell. I mean, I'm not going to take a guess, but you're probably just ugly. I can do better. You're not my type. I get much more handsome bros than you. All right. I don't want to come to your basement, bro. I don't want to go to your weird sex dungeon, whatever the fuck you got going on over there. My girlfriend in chat. Like, iDoc. That's the missus, by the way. Anyways, let's get on with the lesson. He's gone. Yeah, he's gone. All right, anyways. So here's one thing I don't do either is I don't ban people from my chat. That's what weak, thin-skinned people do that are insecure. My stats will stand up to any criticism. I let people say whatever they want. I don't ban a single. I tell my mods don't ban people either. Let them talk. All right, we back? Okay. Which one does the little crocodile improve his shiny tail and pour the waters of the Nile on every golden scale? Wait, is this a riddle? Which OW does the little crocodile improve his shining tail and pour the waters of the Nile on every golden scale? I don't know, but I love riddles. Tell me the answer to that. Okay, so anyways, we gotta do a giveaway really quick. Let's pause. I totally forgot. We're gonna give away a bunch of next gen accounts while we're chilling here, you guys. Let's start off. We do a bunch of prop giveaways, by the way, and here on the stream we do more prop giveaways than probably any other stream out there. We love doing it. It's a lot of fun. Since this guy wants to invite me to his rape dungeon, let's go ahead and type in the word dungeon. Type in dungeon to enter the giveaway. Like, no thanks, bro. If you're a little more handsome, I don't know. Type in dungeon to enter the giveaway. Will you bring me eggs and toast in the morning like the missus does? All right, so these are for some next gen accounts, and I don't know if is next gen still having their free resets going on, or is it the activation fee right now? Let me look it up. Next gen has this really cool thing they got doing. It's 50% off activation fee right now. Yeah. Some guy wants to lock me up in his rape dungeon.
Oh.
Chat's on fire today.
Love it.
Sup, girl?
So serious question. I think Charmaine changed their CEO.
Huh? Who? What?
Charmaine or Charmaine, her toilet roll.
Charmin.
Charmin?
Why?
I used your bathroom just now,
Okay.
and I feel like
Number one or number two? Okay. Anyways.
let's just say that I think I gave myself a really bad rash, and I bought you good quality like Charmin.
Yeah, we go ultra soft here. We don't go ultra strong. We go for comfort.
That is an ultra soft, but I almost gave myself a butt rash. So
Why?
I don't know, but for the fact that you haven't like yelled at me yet means that you're okay. But that stiffness?
I'm fine. I'm fine. You Charmin changed their recipe, you feel like?
Yeah.
The ultra soft is not so ultra soft anymore?
No.
Maybe you got like Charmaine like ultra, like not ultra soft, but like ultra sharp. Did you buy them?
Because I would get you the best toilet paper, and then I'll get myself like Kirkland.
Sounds like you got toilet paper from the weird dungeon guy.
Like,
You'd probably be the one that...
I don't know what just happened. Like I literally felt like I need to come here and in here and talk to you about it.
We all needed to know
I
this.
needed
Thank
to
you.
stop your stream so I can talk to you guys about this weird discovery.
I feel like most people here were definitely curious about your journey today into my bathroom. Which, by the way, why are you using my bathroom? There's a reason it's separate. We're not supposed to know this about each other. We're supposed to keep this part. We're on different floors for a reason.
Well, now I know that you got a tough derriere.
Oh my god. Oh my god. Wait.
Somebody
So
said-
you can't do the ultra soft. You have to do the ultra strong. The ultra soft is too soft and disintegrates. No, I understand. There's the endless debate. Is it ultra soft or ultra strong? There's two schools of thought there. That's right. The butt dungeon dude is listening to this. He really is. Okay. Anyways, we were all very concerned, and thank you for letting us know, because we all want to know this. Didn't we, chat? See, all chat loves you so much that we feel your pain. It's okay. It's all right, baby. It's okay. Yeah, we're good. Thanks for the breakfast, by the way.
You're welcome. Did you eat any of it?
Oh no, I'm doing a recording here. We're doing a lesson.
Recording?
We're doing a lesson.
Oh shoot. Okay.
Yeah, no, that's okay.
Okay. Because I mean, I just injected my education on you guys.
Well, no,
so-
well, I'm gonna spool this as a YouTube ad at some point, so everyone in the world's gonna see this. But thank you for your story.
Welcome.
I'm just kidding.
Where's the potato suit? I should do that.
The potato soup is over there. The suit is over there on the side. The troll entered the giveaway. Oh my god! All right, the guy that's on a mission to bring dudes into his garage for money. This is what he told me. He wants to save money by bringing dudes in his garage. Okay, we're gonna give away a bunch of these next gen accounts, and I don't know. I mean, I don't like to judge a man on his kink. So, you know, everyone has their own. All right, so this is for the new 100K evaluations with Next Gen. There's 2 of these and 2 25Ks. Well, Next Gen is one of the firms that we recently got acquainted with, because every once in a while they'll have these like free reset giveaways. It ended. Now it's 50% off activation fee with code SCORE50. When they have their free resets, it's a crazy event. They have it like once every couple weeks. And basically it turns their account into a straight to funded account. And it actually is the best ranked straight to funded account in the entire business. Because when you free reset, you can just keep YOLOing until you pass without any penalty, which is kind of kick ass. And we discovered this recently. And so we like to get in on those and play with those. But we'll give away a bunch of these really quick, 4, and then we'll get on with the lesson. All you got to do is type in the word dungeon. If the activation code is for 50% off, yeah, okay. You as a third person below the dungeon slave guy. The Charmin lesson was extremely important, as Think Like Matt said, of course. We need to make sure that when you're getting your ass kicked, at least you're getting your ass wiped in a very soft or strong sort of way, whichever camp you're in. All right. Fortunately, Next Gen does not work with Trade-Evade. It doesn't, but it works with TradingView. And that's really where people trade it at. Okay, so I'm about to show you guys my trading strategy once I kind of show you guys how pivots work, all right? 4 of these and we'll move on. So the idea was to show you something really cool, risk interval. I'll show you one more really neat thing. As years went by, I started trying to find other ways into how can I find pivots from volume? How can I predict volume? So this is predicting volume, right? At the start of the day, I know where the volume landscape is going to be. So I can identify where volume will sort of play out, which makes it kind of neat. And in about 2018, 2019, I started like working with some of my traders in our chat who had some cool ideas. And one of them was like an options trader, and he was using our risk interval to trade options with. And he had this sort of idea, and then he kind of told me that he was trading, I have to remember all the way back, but he was basically using that range to know if you broke through that range, it was better than breaking through the the range set by the implied volatility, and that he would know that the option would gain a lot of value. And he was essentially using our structure to trade options with. And I was like, yeah, that's kind of cool. I'm not an options trader, but tell me more. He's like, oh, well, the options are like this sort of, you know, they're an instrument. And I was like, aren't they like real complicated? And he's like, yeah, they kind of are. But options are run off an equation called Black-Scholes. And Black-Scholes is an equation that prices options based on all these parameters, right? Options are like tracking the supply and demand of themselves and tracking the underlying and responding to volatility. And it's this giant master equation where they pluck parameters out of it, partial differential equations, and they create these things called the Greeks. And with the combination of the Greeks, you can set up a pretty good strategy of knowing how the options value changes over time based on real-time conditions of the market. And then you compartmentalize that whole equation into Greeks, pieces of the equation. And I was like, wait, so there's an equation that looks at the supply and demand, and it's tracking, and it's there. And this is by far like years into me using risk interval. He's like, yeah, okay, these are the 4 winners, you guys. You have to go to the prop score Discord, link in description below. You go to the claim your win channel in that Discord, and there's some instructions on how to claim your prize. Y'all are gonna get some next gen accounts to play with, and we got some more to give away today. Tradeify and Lucid in just a little bit. Hang tight. Congratulations to the winners. So long story short, when the guy told me, he's like, yeah, there's an equation that looks at supply and demand. Remember, supply and demand is where volume comes from, right? Supply and demand imbalances cause market to move. Supply and demand harmonies cause volume to come up. So when I go, wait, so there's an equation that prices options. He's like, yeah. I'm like, I was like, there's an equation. I can use Black-Scholes to predict volume, just like I did with risk interval. All right, giveaways ever, guys. Stop typing. So long story short, I was blown away by the idea that options pricing equation could allow me to also predict where volume can be. I had this huge epiphany, and I went to the drawing board and I scrolled up some tools to create what our next biggest thing was, which is called liquidity maps. And this is what our platform was built around. I use options to find volume in the same sort of capacity. I'll explain what it is before. Now, we already showed you that I use the CME stuff to find volume. Well, we use options to find volume in a similar capacity, and it's even more incredible. So let me pull up the history of this. So the idea became, let me show you real quick. All right. Okay. So let me go back in time and show you guys some historic sort of stuff here. I'll pull up the history of this. Should pop up in a second. Okay, here's the history of it. So every single day, since the market's closed today, there's no options trading. We have a landscape that pops up. And the landscape itself allows me to also find volume pivots on certain frequencies and intervals. This orange and blue line, for example, are dealer hedge pressures. These are bull and bear zones, and bull and bear traders are. Let me give you the skinny of what it does. So the idea is we have a server that pulls in all options orders. We filter all the orders out. So this is all options trades that take place. They come through. We filter those out into just the dealer options, little components of that for each stock. And we take the dealer options, and now we print out a landscape of where dealers are placed and find volume that way. Why are dealers important? Well, the example would be, say that you were to buy like a million shares of Apple today. Okay, this is you. You're some trader that bought 1 million shares of Apple. Plus. There's nobody selling 1 million shares at that point in time. There's nobody on the ask that's that big. And so in that huge example, a dealer or a market maker will have to short those 1 million shares to you. They're going to sell them to you to make sure the trade gets filled. And they're going to hedge that with something else. And let's pretend that they hedge that with call options, okay? Delta weighted trade. The idea becomes that if you're long the market and there's no seller, well, the market maker's got to sell to you. And they're going to balance their risk by neutralizing the trade. If they're short the market and long the market at the same time, they're neutral. Now, this, you don't have to learn options to learn this. I'm just telling you what the framework is, so y'all can kind of understand that it's not, you know, some BS under this. So the idea is if we find a dealer call in the mix, and we know how to find those, that's kind of our sauce here. And we have, like I said, servers that analyze real-time options data and find the dealer options. And we find dealer options, we can reverse engineer where the trader is going to be. Aha, there's dealer calls here. There's a bunch of traders that are long there. And that's what that's telling me. I already know there's long traders there. And you can see as the market was falling, there is resistance to selling because that is a sink of buy imbalance. We can find that from the options. So the idea is if we can isolate dealer options, then we know that they're connected to the actual trader. The same thing comes to the fact that this guy had to buy those calls from somebody. He had to buy those from a dealer of the options who had to sell those calls. So there's another trader in this mix, in this example. And the trader of the calls now has short exposure or long exposure to the market, short exposure to the market. And if the market goes up, they lose. So the problem is that the seller of the options is also going to hedge the underlying by buying, or hedge the sold options by buying and selling the underlying. So in this case, it was Apple, right? And this sort of connection is that the original trader is engaged with the market maker who's hedged to neutral. This person sold him that insurance and is also hedging to neutral as well. And this guy, in some capacity, is selling the apple when you're originally buying the apple, thus completing the chain. The dealer has found a seller for the buyer. This is an example of a three-pronged hedging loop, right? And hedging loops can be infinitely big, where the trade is passed along until the chain is completed. But in this example of a three-pronged hedging loop, you have a trader versus a market maker, which means there's a bull without a bear. And when we find this connection, we find something called bull zone. Bull zone is using options to find where the bulls were when there weren't a lot of bears, when bulls are in abundance. A bear zone is when bears were in abundance, shorts without buyers. That's it. And then when we find that other trade, which is the market maker of the stock, in this case, S&P, there's market maker of SPY or market maker of S&P. The market maker of the actual underlying and the market maker of the option had their own trade with each other. And that's called hedge pressure. So where the two banks are battling out is this line, where the traders are battling out are these boxes. And overall, I'm going to skip right to the end and show you the stats of these things. But when you piece it all together, the idea that there's structure that people are placing their bets on as traders, and their structure, the market structure tends to respect the odds of this are staggering. If, for example, the bull side I mentioned earlier, if the we have a stock index indicator right here. If the majority of the market cap of the index is bullish, then this, if you open in a bull zone, you close in a bull zone by the end of the day 90% of the time. It is that incredibly strong, which what it means is that if the stocks are bullish, then the futures aren't going to turn bearish for no reason. So tends to be sticking alongside what the stocks are doing. If all the stocks are in their own bulls, trading in their own bull zone, then the index will stay in the bull zone. It's a very fantastic confluence. Without the confluence, it's roughly 60 to 70%. It's still better than a coin flip. With confluence, it's 90. Same thing in bear zone, 90 and then 60, 70, somewhere in there. As we already talked about these DD bands from earlier, this holds 92% of the time. This rejects 96% of the time. The dealer-to-dealer hedge pressures, without confluence, 60%, with confluence, 80%. And the confluence is what are all the stocks doing at once. Monthly hedge pressure, about 90% with, 74% without. MHP break is the opposite of this. This is the bounce, this is the break, same thing. This is the same as, these are the same stats. So when you have everything line up, these structure points, these one thing will predict where volume will be, but the other thing is that when the stocks are in confluence with the direction, if the stocks are bullish, then I can bet bullish at these pivots, and it works more often than it doesn't. By the way, guys, y'all can stop typing about the sex dungeon. I know y'all really want to go there, but giveaway's over. Yeah, so the DD ratio is confluence on bear zone and bull zone edges. Resilience is confluence at hedge pressure at the open and close. When you piece it all together, we have a robust strategy of finding where volume pivots will be. Now, let me show you something very, 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 very cool. Okay, let me teach you how important all of this is together. Now, I'm going to pop up a stock chart really quick. I mentioned Apple earlier. Just put Apple, right? And this works with futures, works with everything. And you guys are all familiar with volume profile, right? So if I type in a volume profile, and I love to play this game because you guys get the... And what I hate, dude, is when like these traders come out there and they show you a chart. They're like, this is my best. Look at this chart, and this is where it worked, and I bought here and made all this money. I'm gonna let you guys throw some curveballs at me. What do I use to anticipate over-undershoot when placing a limit order? Yeah, I'll talk about the application right after we go through the technique. So save your questions till the end in about like 10 more minutes. So what I'm going to do is I'm going to show a single volume profile today for Apple. And what is volume profile, right? So volume profile is going to show me where most of the volume was over the day. And now we're trained as classically trained as traders to use a volume profile to find pivots, right? So an example would be, say that I'm going to show a volume profile over the last 5 days. It's going to show me where that volume has traded over the last 5 days. And you would basically say, aha, there's support and resistances there. However, that was the volume of those days. And in the future, and the market falls to there, how do I know that these traders are still acting here and that's going to work, right? So the part is that volume profile doesn't always work because it's based on yesterday's volume. But if you've learned anything so far, what I've taught you is that we're using math to predict tomorrow's volume profile today. And this is the big mind-blowing moment for some people. I'm about to prove to you that I could predict where these volume nodes will be tomorrow and the next day and the next day before the trading days even happen. So while today everyone's going to use yesterday's volume for Apple, I'm going to give you new volume nodes that people will not see till tomorrow. And you're going to get 1 day ahead of a volume profile. We're using math to find volume after all, so we're basically using math to draw the framework of tomorrow's volume profile. And it's so freaking cool. We're going to have some fun with it. So I want you guys to type in a random stock. I'm going to put this over here so you know that I'm not cheating. I want you to give me a random stock, and I mean random stock. Let's just put this right here. Somebody type me a random stock. Tesla. Okay, so we're going to do here. Let me make this chart just a single chart. And let's put on a Tesla. Okay, Tesla, right? So yesterday's Tesla, as an example. Wait, this is yesterday, right? That's not today, is it? Let me double check something really quick. So yeah, oh, that is yesterday. Okay, so this is just checking the days. That's the 2nd of July. It's yesterday. Okay. So Tesla, right? And okay, so we'll do a couple, but I'll read from the list. Okay, so an example with Tesla would be that the market. I'm wondering. Oh, it looks to just be off a little bit. So Tesla opens right here, and these are what we found to be some of our pivots. Now, an example on Tesla is that MHP is the monthly options gamma exposure maximum. So you guys wonder what we're doing. This is the gamma exposure maximum of dealer sold options. So when you hear gamma exposure, this is what it is. But what's different with us is we factor out the dealers. Why? Because dealers are hedging their position to neutral. So if they have options, they're going to be buying and selling the underlying. They're going to be adding volume to the mix. Retail traders, you buy some options, you're not hedging against it, you're just YOLO speculating, so you're not going to add to the volume. But if we know where dealers' positions are, the dealer hedge pressures are 2 of the strongest pivots you have, dealer to dealer trades. The MHP is just the monthly options. These are all the weeklies and 0 days, all in here. Open and close are the open and close of the market, so that's always high volume. So with Tesla, 430, 428, 427 are going to be your volume nodes as you pass through it. So as an example, now this is because the market's closed. It's going to be a little hard to do this because it's usually better when the market's open. But if we were to go, come on, let me load this up. Now let's load Tesla up on the chart here. And let's, let me zoom out. Why is it like doing this? There we go. I didn't finish them. So everywhere where we have a pivot is going to be volume. So let me actually draw a little bit better. So you have volume here. You're going to have volume in this cluster here, and then volume here. So 430, and this was at the start of the day yesterday, Thursday morning, and this is now Friday morning to tell you the result. As you will see, 426 is a very high volume pivot. And 426 lands right here inside of this volume node. Now 430 is also volume. There's a little spiky there. And then 425 is also volume, which is here. So it's all basically, all of Tesla's stuff is sort of clustered into here, which you'll see as a volume node. Now, I don't think we have anything else because it just straight up crashed yesterday because there's no more pivots. So everything else is random and unpredictable. When you do break through all of that predictable stuff and keep falling, the volume becomes sporadic. It's 100% predictable that the volume is random and sporadic here. And as you broke through that key area, the volume is just all over the place. There's no consistency here. It just seems to be random instead of a regular, nice, easy to see volume distribution. You can even see here, right? There's like, actually that's, let me show just the day's volume profile. My bad. I'm still showing the week. So one day here. So one thing is that when you break through all that key stuff, there we go. I don't know why it's zooming out like that. No clue. All right, so this is better. This is just yesterday's volume. Let me show you one more time. So this is that 430, 429, you see all this volume cluster here from 431 all the way down to 425. There's your 431 down to 425. You see all of this is all that volume from yesterday. So after the neat thing is after the fact, yeah, thanks for letting me know, Lion King. That was confusing. So this is just today's volume profile now at the end of yesterday's trading day, and you can see all that volume is clustered there. Pretty neat, right? So when the market dumps through all of this, it's now 100% random from here, and it's going to be random and all over the place. Like you can see there's no rhyme or reason to any of this. It looks very weird. It looks very off, but when you're falling in no man's land, so why trade inside here? Why trade inside of there, right? So y'all threw me a couple tickers. I'm going to play this game with like 10 different tickers. It's showing you where the cluster of volume will be. Now let's find something else you guys said. Somebody said Intel. Now, y'all threw all the bigs at me. They all did the same thing yesterday. But let's go ahead and do it. Intel has a cluster of importance between 128 and 127, another cluster of importance right around 125, and another cluster of importance at 120. Okay. And when I go through and I type in Intel here, so remember, these pivots are known at the start of the day. And when you look at the end of the day, again, y'all are throwing random ones at me, so I could get these wrong, right? 129 to 127. Ready? 129 to 127. There's 129. 125. There's your 125. 120. There's your point of control, 120. How did I do? Remember, this is after the fact of where the volume clustered as you pass through it. This is the framework a day in advance. All right. So the whole goal was to use tomorrow's volume profile today before it happens. Tell me some more. This is all random. Somebody said Johnson & Johnson. Yeah, let's do some weird ones that we don't normally do. J&J. All right. Johnson & Johnson yesterday, we opened here. So it's got some pretty interesting clusters. You've got a liquidity pocket inside of here. So this is all going to be clustered, but essentially your biggest pivot is going to be, or you're going to have a big open sink there. You're going to have, actually, this is all of it's pretty bullish. So it's kind of mostly all going to be volume. The strongest one I would say out of all of this is probably going to be this area here. This liquidity pocket overlaps with hedge pressure and it overlaps with the close. So it's kind of like I'm going to say that it's going to look like this. Your biggest volume sync. These are all volume pivots. So the interesting thing about Johnson & Johnson is that you're going to have 257, 256, 255. It's all volume. So it's just all good bull cluster together. So it's not going to be like a nice, easy, predictable. It's going to be like a clump of volume in that range. Hold on. And relatively speaking, when you break out of that range, it becomes really asymmetric and random. So let's zoom into just this part here that we were talking about earlier. Like, remember, this got really wild at the end of the day. But at the start of the day, 256.25. Here's your 256 is sort of, I know it's kind of squashed this way, but you have that. Here's your 257.50 pivot right there. And right, see how I said it's all kind of like a single cluster. It's all kind of like a single cluster there. And then, of course, once you break through all of that, it becomes wild and irrational and unpredictable, which is why stuff like this happens. You had all of this sort of like out of balance, which you can't predict. So, right, so up here, we don't try to predict because we can't predict. That was a good one. But at least inside of here, your 257 is there. Your 257, that's right. I drew right here, just 257. And then you have like a smaller cluster, 55 to 56, which is all right in here. All right, so boom, 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 boom. All right. So when we did this, the idea was as a one-up for you to be able to plan trades. It's easy to know where to act because you know where the volume's going to be any given time. We'll do a couple. Somebody says Coca-Cola. All right, Coca-Cola. Coca-Cola exactly the same as Johnson & Johnson. It looked the same exact chart. Yesterday, everything was crazy. So you got a cluster of pivots at 81 to 81 and a half. You got another one at 82. And then you got random crazy volume above it. So it's going to look just like J&J. Almost exactly the same. That stuff is repeatable. And actually a little more defined at the bottom. But there's your 81 to 80, 81.2 to 81.6. Here's your 81.2 to 81.6. Your 82 on your bear zone. Oh, actually didn't provide large volume compared to 82 and a half, but seriously, 82 was it. And your 82 is kind of here. So volume node around 82, which is slightly above it. And then volume node around 81.2, 81.4, which is right there. Boom and boom, boom and boom. Right, do a couple more. I like to do like 10 of these. Y'all can see that it works every single time. But we decided to create something like this. And what it does is it creates something for me. This is just like all the other ones. Let's do something different. Nike. This is going to be the same thing, cluster at the bottom. Let's do a different one. One that's going to be fun. Okay, cool. Nike's kind of cool. So you're going to have at the start of the day, you're probably large cluster at 44 to 40. This is one of those where it's all going to be volume because everything's sort of clustered together. You're going to have some, obviously your open, close, middle is always a volume pivot inside of here. And then each of your hedge pressure is also a pivot. So it's going to be like that. Last one, Nike. From yesterday. And at the end of the day, Nike turned out to be like this. And I said all of it's going to be kind of a cluster. 44 is here. You got like 45 to 40. I mean, like this whole thing is kind of chopped together. So it's like one giant cluster, if you may. Your 45 is up here. Your hedge pressures are here. That's this one. And then your big open cluster is all down in here. 44.2, 44.2. 43, 43. So it's a big thing. So the neat thing is like I'm looking at the left. I'm saying what I think the volume profile is going to look like. And then we check and see if we're right. And we've got all of them right for the most part, right? So pretty neat how this works, right? The idea becomes now that I have a framework of where volume could be, now I can trade off of that framework. And that's all I do anymore is I have the market with those probabilities that things happen. And then I set up this sort of framework as to which way I want to trade. And I use the confluence indicators to give me kind of an idea of how big to trade to go with it. Now, what are these confluence indicators? If I know that volume is going to be here, then I want to trade off of that. When I gave you all the stats earlier, without confluence, price will stay on the same side of MHP that it opens on about 74% of the time. With confluence, it's roughly 90. It's crazy. What that means is that the market structure tends to not be overwhelmed more than 10% of the time. So what I like to do is I like to short off of this every single time. But what happens? So how do I do confluence with that? Well, if the index, for example, pretend this is the S&P. If the S&P is tapping against that pivot, I want to say, well, what are the stocks doing? If S&P is gamma negative, it will reject against this. But if I look at the sum of the market cap of stocks and they also are all below their MHP levels, then this confluence indicator will tell me the degree at which the stocks themselves are also gamma negative, which means selling into hedging. And so with this being said, if I want to pivot off of the S&P from there, I'm gonna look at the stocks. Hold on. Hold on 1 second. All right, anyways, so at the end of the day, the way that this confluence works is that an example is Nike, right? It's part of the index. Nike is below MHP. And just like you'd expect, about 90% of days it'll stay on the same side. So what we do is we look at the sum of market cap of all the stocks. If this number is greater than 0, then the majority of market cap is above there. If the number is less than 0, the majority of market cap is down there. So we use that as confluence. If example is this, we bump up against this and I say, okay, maybe I should fade it because it stays on the same time most of the time. I look at this indicator right there and it says negative 45 out of 100. Then the stocks are in that same direction, then I'm going to bet the index will be, I'm going to hit it pretty hard with a big trade, a bigger trade. Now, if the confluence said positive, like it was bullish, and I'm trying to bet off of this, I might still want to bet that the index stays bearish, but because I lost the confluence, I'm going to trade small. So the simple part is that with index, all I'm trying to do is find volume pivots. And when we get there, I'm looking at the stocks to decide how heavy I take the bet. And that's basically it. Super simple. Super simple setup. So an example today, let me load up the NQ and we'll give you an example of like what I would do on NQ. Let's load her up. I wish I can, maybe it'll load up on a 5-minute chart. I don't think we have history on 5-minute charts, so let me see if it'll pop up. I think it only loads up on the 15-minute. Yeah, let me... all right, 15 minutes. So what I'm going to do is I'm going to get the levels from here, and I'm going to look at the other chart and show you what I would do. Let me let it load up for a second. Position sizing is 100% the key to a winning trading strategy. Let me find like an easier example. Okay, here's a good one. It's understandable. Okay. So let me move this out of the way. So right here is an example, is the market opened, it popped up, hit a pivot, fell, landed there. Since I know there's going to be volume at this little cluster, and I know that this pivot works most of the time, and so does the blue one, it stays on the same side of both, they're overlapping in the same spot here. Then when the market falls to these levels, I'm going to be more willing to bet that it stays above it. So as you see, it fell, it battled, it won. And this is a trade I would take every single time because the odds are really big. But the one thing is to double check is when I land there, I'm going to identify there's the blue and the orange. I'm going to look at the blue and the orange just to double check that they're both positive. If the blue is a positive number and the orange is a positive number, then great. I can hit this with a big trade. If I'm losing some confluence, maybe one of them, I can hit it with a medium. If I'm losing both confluence, I can hit it with a small, but I still trade it every time. But I told you earlier, the odds go from like 90 to 74%. Like no confluence, full confluence. So it still works more than half the time, no matter what the confluence is. But when I lack the full confluence, which we did on this day, I would be trading small. And that also allows me to absorb a whole lot of overshoot for the trade to take off. If I get in too big too early, then I'm going to hit some volatility and maybe stop out. So the trick is when the market's falling, I'm not just buying the dip at the low of the day or a lower low or some equilibrium the previous day. I'm buying where it makes sense on today's structure. And I'm betting that that volume pivot will have activity, which you see right here. There's volume as we predict. And I'm also betting in the direction of the stocks, which is that simple. Where are the pivots? What's the stock doing? Bet big, bet small. So the way that it works is that when I hit a pivot, then I get to decide how much overshoot I allow and how I structure around it. The final tool that I use is how I get into a position. So example is this, these are my key pivots. This one, and this one. They're all clustered up. 380 to 320. So in this 60-point range, I want to be in a position because this is all potential volume. I can't predict exactly which pivot will be, but I know there's volume here. There's a huge volume node right there. So clearly I want to interact with all of this. As a matter of fact, this is a big volume as well. Between a bear zone and a bull zone is called a liquidity pocket, and this is your strongest trade setup we have next to the monthly hedge pressure. So this guy right here is massive support. Where bull zone and bear zone are next to each other is insanely hard to break, especially when the confluence is so bullish. This is a scale of 0 to 100. Anything above 50 is really bullish. Anything below 50 is not. Okay. So anyways, so now that I know that I've got a cluster of pivots here, when the market's falling, I already have time to make this decision. Okay, I could long at 380, but I also can dip down to like my best place. I have like good pivot, good pivot, good pivot. Let me give you an example of why buying subsequent pivots is very important. If in a back test, right, something happens, I'm going to make up a number just to make it easy to understand. Let's say something happens 90% of the time and 10% of the time it breaks. And then this one is the same way. 90% of days you stay in the bull zone and 10% of the time you break. So for something to happen 10% of the time and then 10% of the time again, it's 10% of 10%, which is an overall percentage of 1%. In this example, two things that happen 90% of the time, if the first one fails, the second one has a 99% chance of holding. Now that's not real stats, that's just an example for the math. Two high probability events, the probability of the second event working goes up. Way to understand that much better is with cards. If you have a dealer with 52 cards dealing out blackjack hands, and all you see is, you know, in this case, 48 cards still there, and then 4 cards still here, you can see the top of this one, it's an ace, and the top of this one is an ace, and then all of a sudden, I'm sorry, not an ace, sorry, the top of this one is a jack, and the top of this one's a jack. Now, the probability at which, so now you know total 2 of the cards are jacks. So 50 of the cards are still unknown. And now you have a 4 out of 50 chance of getting an ace, right? And if that isn't an ace when you flip it over, the odds of the next one being an ace gets slightly better. It's a 4 out of 49 chance that you have an ace, right? Slightly better odds. Every time something doesn't happen, the odds of something eventually happen gets better, right? So the idea is that you have so many reasons for markets to sell and buy, but the probability natively being high of something, if it doesn't happen, the probability of the second one goes up a little bit because the odds of 2 things happening that shouldn't happen is even much lower. It's like, what are the odds you win the lottery? Very, very, very small. But what's the odds you win the lottery twice? Almost 0. It's that in reverse. Think of it like that. So anyways, long story short is I identify where a cluster of pivots will be. And in this case, 380 down to 280. So now that I tell myself I have 100 points of kind of room, I need to spread a bet out. And so I decide how heavy a bet I want to do, and then I spread it out inside of this range. And I know that normally in a non-volatile environment on NASDAQ, I'm going to take a 40-point stop, and S&P, I'll take a 10-point stop. So I have a cluster here, 380 minus 40 points goes down to 340, but 340 I already have another pivot I can trade from. So instead of buying and stopping and buying and stopping and trying to guess through that randomness, I'm going to play the whole thing and just make it smaller. If my normal position would have been, as an example, to long 5 contracts on this dip, and I realize I've got a lot of pivots nearby, instead of buying 5 right here, I'm going to split it up. I might put 5 micros instead on this pivot, 5 micros on this pivot, 1 mini on that pivot, and then 2 minis on that pivot. So as the market is falling, I'm building a position around this, which allows me to take a little bit bigger of an overshoot, which normally I would stop at 40, but this time I'm allowing 100 points of overshoot. So I can take that 100 points of overshoot with 5 micros very easily rather than the full 5 minis. And if it falls and falls and falls, the probability gets better that that cluster holds because it's a high volume node. So I build a position heavier around the cluster rather than just jumping in and crossing my fingers. Most people get chopped up inside of this and are taking all kind of losses and whatever. I'm just getting in small, getting in medium, getting in big. And that's how I do it. I find my volume clusters, I find my confluence, I set my position size, and I decide where I want to enter, where I want to stop. And I use the same thing all day, every day. It's insane. My favorite trade setups are MHP longs, those bottom green band buys that I showed y'all earlier at the start of this, and then these liquidity pockets. I made my career for the most part using this trade right here. Bear zone, bull zone, in a bull market works about 90% of the time. It bounces and bounces and bounces and bounces and bounces. You can make this trade multiple times throughout the day. Pockets are one of our favorite things to do here. And you can play pocket ping pong all day long, and it sounds kind of kinky. Here, 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 here. You can scalp this range all day long. You can scalp this range multiple times. You'll notice throughout the day, you might have 10 or 15 throws to a pocket, and maybe, you know, 4 out of 5 of them bounce, play, bounce, play, bounce, play, bounce, play, bounce, play, bounce, play, bounce, play. I mean, it just loves bouncing through this little area there. And I can scalp. That's like my go-to trade for the most part. All right, anyways, that's kind of like what we do here that makes it different. So hold on one second. Hold on. Yeah, she's gonna eat it at Corkscrew Barbecue, man. Michelin star barbecue. Okay, that's it. That's what we do here. It's kind of different, but it's simple. It's where's the volume? What's the confluence? How big do I trade? And we give you sort of a guideline as to the different plays that's set up. When you look at it all together, there's a guide that says this is where it's likely to go. And the higher the probability, the bigger the position it recommends. The smaller probability, the lower position. And it tells you which confluences to go with it. It's gotten even much easier as years have gone by because we literally write the word support and resistance as the confluence changes. It just tells you support or resistance on the algo itself. So long story short, this is called volume prediction. It's a brand new technique. We're kind of pioneering it, using CME group and options to find volume pivots and build those volume profiles ahead of time and just trading off of it. That's what I do. Anyways, we always like to teach things in here so I can answer any questions you guys have. What's the technical reasoning for yesterday's volume profile equals today's? Moreno. So volume profile, the one we're looking at today is showing you where the volume ended up at the end of the day. The lines I'm showing you on the left are levels we have before that day traded. That's the difference. So at the morning, the algo is going to spit out a bunch of lines and say, here's where your volume profile likely will be. And as price sort of bounces around there, at the end of the day, the volume sort of works its way out around those lines. So the idea is that when we traditionally use a volume profile, you're using yesterday's trading volume to make decisions today. But what you're doing here is you're using tomorrow's volume profile to make decisions today, not yesterday's. You're a day ahead of the market, right? You're a day ahead of other traders, right? And so that's the whole point of that. How do you play pockets in a bear market? Right, so in pockets in a bear market, we have to adjust for volatility. So what we do when we adjust for volatility is we look for the largest Let me go here really quick. There's 2 rules of thumb. Number 1, I have a default stop loss. On NASDAQ is 40 points, and on S&P is 10. That's your normal expected volatility. Or the largest 1-minute candle of the last hour tells you about what the volatility will be. So like if the market's trucking along, I can say, what's the largest 1-minute candle? Probably this one. How big is that? And this is NASDAQ. This goes from 921 to 948. Okay, that's 30 points. So definitely, I'm still going to use 40. It's the largest of the 2. We have another indicator down here, which I won't cover now, but it's the largest of those 3 things. If this were to, if somehow the answer was like 60, then I need to allow 60 points of overshoot. So in a bear market, bear markets are traditionally more volatile. You need to allow for a larger range. So an example is a bull market nice and tight. I've got, you know, this is your bear and your bull zone. And I were to buy, I were to long here and it dips there. I was to long there a little bit bigger and bet that it scalps up with my 40-point stop. I would long here and I would long here. In a volatile market, however, I would split that bet up a whole lot. If the example, if this was 1 mini and 2 more minis for 3 total, in a bear market, say the answer said that I had to trade with 80 points of volatility rather than 40. And so I need to stop 80 points under my last target. That's really big. So instead of trading 1 mini and 2 minis there, I will trade like 5 micros at the start. 1 mini at the pivot, and then at an overshoot level near my stop, I put in the other part of the trade right near my 80-point stop. So as you see, I took the same position in a bull market, which I enter in nice and tight. I spread out that same position over a wider range because the volatility is bigger. And so the trick to successful entry efficiency is knowing your pivot and knowing the difference between invalidating your pivot and volatility that eventually goes your way. That 1-minute candle rule will save your ass so many times it won't. Like if the market is doing this, how do you know the yellow line is broken or not? Right? There's an invalidation point, and that's where that 40 points comes in, or 80 points or whatever. If the market is just volatile, it's going to chop around. If it's a bull market, it's going to hold much quicker. Bear markets are going to be all over the place. So you need to have a wider range of allowance in a bear market to adjust for the volatility. So I'm not quickly, easily stopping out when it ultimately is right. Bear markets are a little trickier, but with the trick with the bear markets, you spread out smaller, wider bets. Cast a wider net, smaller bets, rather than a tight bet that's big. In a bear market, you never want to try to guess that this is the level, let's go. Like, let's go in, baby. Let's get in. Let's let it ride. A bull market is going to be like that. A bear market, wider, smaller bets. You want to hold through the chop, not trade it. You want to get chopped up. You want to hold through it. What does gamma means in relation to trading? Okay, so gamma is a partial differential equation off of Black-Scholes. And what gamma equals, it is the change in delta for change in price. These are partial differential equation, which is equal to, at a fixed everything else time and whatever, which is equal to the second partial derivative of price of the underlying price of the option, sorry, versus the price of the underlying, constant time, etc. What does this mean, right? So gamma is the speed of delta, and delta is the speed of price change. Therefore, gamma is the acceleration of that sort of relationship here. Acceleration. It's just like in physics, you've got position, velocity, acceleration, right? This is the position, the velocity, and acceleration of hedging. So an example is when gamma is the highest, then the change in delta is the highest per price. So if price were to move straight up through this area, your delta is going to change incrementally much faster. See, this is change in delta right through this line. And where that delta change is the most clustered is your highest gamma. And what does that mean for what we're trading? Don't try to think about this, just the math behind it. What does that mean? Well, the highest amount of delta change is the highest amount of order flow to neutralize that position. So when you hear people say delta hedging, it's how many shares you buy as delta changes. Well, if delta changes the most right here, then that's the most shares you're going to buy to balance the position. Therefore, the maximum gamma is equal to the maximum shares you buy to hedge your position neutral, i.e. gamma maximum is equal to maximum volume. And that's how it all equates. That's that. Remember I told you guys I had this like, oh my God, the guy told me about Black-Scholes, and I was like, first I ever heard about it. I saw the equation. I got immediately inspired and said, I can use this equation to calculate volume. That's what I did. So that whole thing I just went through is from this. When I started Googling Black-Scholes and looking at these equations, very similar, engineers have seen plenty of equations like this. I immediately looked at this and I was like, okay, there's some stuff here. There's some Greeks here, options Greeks. And I looked at this and I go, oh, we have some partial differentials here. Gamma, what's that delta like that? And I'm like, oh my God. So I can calculate from maximum gamma how much order flow is going to come into hedge neutral and maximum delta, all that stuff, or sorry, delta change. And so I looked at this and I go, well, not every option is going to be hedged, because people that just buy like $1,000 or 1,000 Tesla YOLO costs for, you know, next week probably expire worthless. Maybe they're not hedging. But if I can find market makers who are absolutely hedging to neutral, and I can find the gamma maximum of them, then I can predict volume from hedging. And that's what that really means. So like gamma is the acceleration of volume, if you think about it like that. So it's the maximum volume at a moment in price to hedge the position neutral. So if price were just like fluctuating through the gamma maximum level, which is this one, you will just see volumes spike up, because as everyone's hedging everywhere at all times, the maximum amount of activity takes place there. The max amount of people like clustered together doing something, right? And that's kind of how that works. All these different Greeks, they all do different things. They're all partial differential equations of basically the same thing. So Vega is it's the rate of change of price with respect to the volatility, right? Look at that Black-Scholes equation back up here again. So different equations are looking at different relationships. Like look at the change in price over time, over, you know, how delta changes over time, and how delta changes over volatility. You can take an equation in mathematics. You can take an equation and take two variables, the change in this versus the change in this, hold everything else constant. All us engineers took a differential equations class. It's all the same thing. You can create an infinite amount of relationships inside of a differential equation like you want, and hold everything else constant and create a single relationship out of that. And that's what the Greeks are. It's like, how does this change versus that, holding everything constant? What about this and this? What about this and this, this and this? And these are all different, you know, pieces of this. And I think up here it'll tell you like what all this stuff means. Like there's like a little legend or something for you. Anyways, you don't have to learn any of this, by the way. You don't need to know anything about anything options. Just to let you know, there's math under the hood of this. Let us figure it out. The options class we uploaded in the Discord, by the way, the one from the other day. Yeah, they have different Vega, Theta, Rho, Charm, Vanna, just millions of Greeks. They're all pretty much looking at how one thing affects another thing inside of a very complex system with hundreds of variables, right? How am I 40 years old? I look so young. I don't know. Lots of Botox and yoga, I guess. I don't know. All right, questions, guys. So that's what gamma means in relation to trading. Gamma helps you predict order flow. That's all it means. When you boil it down, gamma is using options to predict order flow, which is exactly what we do at Rocket Tutor, right? Do I teach as a boot camp? Yeah, this is like a sample of what boot camp is, 100%. Boot camp is kind of like this, right? This is like somebody said Matt's masterclass. Boot camp is 20 days like this. It's not just going through the technicals of like what's under the hood, but we teach you mostly application, like how to actually execute. Somebody said, catch you Monday or we'll go. Thanks, Cook. Appreciate it, man. Matt, your mind is amazing. Definitely appreciate the knowledge. Well, I appreciate you guys. Thanks for tuning in. I struggled with trading. Let me go back to some story time. I struggled with trading for many years. I thought I would be really out the door. I thought I'd be godly at this thing. You know, I was a kid. I was a kind of a math savant as a child. I took the SAT when I was 12 and I got a perfect score. My parents wanted me to, my dad wanted me to graduate high school at the age of 12. My mom wanted me to go like a normal kid, the full length. I played chess. I taught myself computer programming. I was academic competitor in every single thing I did. I was captain of the math club, science club, computer science club, academic decathlon. I was the lead actor at my school. I did everything and I did everything and I won everything and I beat everything and I didn't lose to anybody. And I had that sort of, silver spoon in my mouth per se. And then I go to engineering school. I got third in my class. I aced that too. Then I go to work and work was easy and I got bored. Then I got laid off and then I went to trading. And then I got my ass kicked for the first time in my life for like 3 or 4 years. It's something that I had taught myself my entire life. I'm good at everything I do. I don't lose at stuff. I had this huge ego about it. I don't lose. These knuckleheads on fucking CNBC. You're the options trades. I always make fun of the guys, the ponytail guy, right? The bald guy with the ponytail. How does that even happen? How do you bald and have ponytail at the same time? Look like a football player. Yeah, bought the GE stock this morning and we made this morning. Yeah, bro, I bought the GE stock. I'm like, these guys sound like idiots. I'm gonna steamroll these guys. Man, these guys sound like morons. Like knuckleheads here talking about stocks. This guy didn't even go to college. This guy didn't even go. These guys sound stupid. Easy. I got this, right? I thought I had it. And it was years of just battling that. Like, imagine how confused in that spot you would be that you're good at everything you've ever done. And you go somewhere and you're so bad at it. Like, so bad, it's not even funny. The ego can't handle that. It's like it's insanity to me. I'm like, how can I not figure this out? How's everybody making money and not me? Like, what's going on? Like, I'm supposed to be good at this. I'm good at everything. And the realization that most traders will have is that you have to get over the ego portion. And unfortunately for me, mine was a huge hill. Maybe for some of you, you were a little more humble in your upbringing than I was. But I was sort of spoon-fed by everybody I knew that, Matt, you're going to be great. Matt, you're going to do great things. Matt, you're going to be the best to do this. You're going to change the world, Matt. And so in my head, I'm like, I'm going to become a billionaire tomorrow, right? Like, I get in there and I'm like, easy sauce. These guys sound stupid and I'm smart. I'm going to figure this out. And unfortunately, that was the hardest part of my journey. I probably took longer to become successful than most people at this because of that. It was a lot harder for me to deal with losing, which is something I wasn't used to doing, and other avenues in my life. I mean, there were some things I did that I just wasn't good at, like basketball, but I mean, I was okay with that. But I mean, about like real, like academic stuff, right? I tend to succeed in like almost all academic things I ever put my hands on, and quickly. And the fact that I wasn't succeeding quickly, I couldn't handle that. And it cost me a lot of money, and it was a lot of big losses early on. I didn't become profitable. I went full-time 5 years into the game. There wasn't discords or streams or anything like that. We were actually, I'm the first YouTube stream that ever did futures 10 years ago. There was nobody at the time. It was you had nothing to learn from, no gurus, no trade rooms, nothing. Nobody helping you. Anything. I just had my own brain and my own wits and just trying it and failing it and trying and failing and trying to find something that works. There's no Discord I can join to learn how to trade. Discord didn't exist in 2010. So years went by of me struggling and trying to find things. When I finally landed on the volume stuff, I kind of skipped over that part of the story earlier, which was an intense struggle for me. I was laid off as an engineer in 2010. I got a severance package, which was half my salary, as I got laid off because just the financial crisis, everyone was getting laid off. And I got into trading and I'd put in some money, make a little bit, then lose it all. And I had no idea how to lose. Like I spun my wheels for the first like 6 months and didn't make anything, didn't lose anything. But as time went by, I was losing more than I was winning. And I put in, I'd get a job for a little bit as a consultant, making 180, 200 a year as a consultant or something, getting on contract jobs. Then having I was living very cheap, having 20K at the end of the month saved up, throw in a trading account. then blow it all up. And then a couple months later, put 10K in, blow it all up. And that cycle went on for a little bit until I figured out the game. Back then, there were no props, no prop trading. There weren't even micro futures. You had to put real money into a real futures account and blow it all up to learn the game. You guys got it so easy right now with prop firms, which make it easy to learn and cheap to learn. Which, by the way, on that note, let's do a prop giveaway because we are doing another giveaway today. Got some Tradeify accounts to give away. Good segue into that. Type in Tradeify in chat. We got 2 select daily accounts to give away. Props make it so easier to learn the game without spending a whole lot of money. That's the reason I'm a big fan of the prop space, because educationally, you guys don't have to go spend hundreds of thousands of dollars to try to learn how to trade like I did. Now, in the long haul, I've made it all back and then some, but early on, it was definitely a struggle. Working, trading at work. You guys probably trade at work, right? You go to work, you sit on the toilet for an hour, make some trades. Your boss is like, where have you been? You're like, oh, I didn't take a shit. My stomach was hurting and it's food poisoning. He's like, oh, it's so sorry, man. But you're in there like sweating over your trades. I've been there. I've been there for like 5 years, you know? I've been through that. Struggling, balancing the work-life balance, balancing the bills balance, all that stuff, trying to learn trading, losing money, battling ego. It's a journey, right? And it doesn't pay off really quick. At least for me, it didn't. I walked into this thinking I can ace it, and I walked into this quickly realizing I didn't know what I was doing. And everywhere I looked, every piece of advice, every book, every online resource was garbage. Everything I looked at told me to do something, and I tried to do it, and it seemed random. It was like every application, this indicator, that indicator, this technique, it was like random. Nothing gave me an edge. And slowly, like I realized when I was an engineer at the plant, was that the market was unpredictable. That's what I told my boss. He's like, can you help us predict a good timing for platinum markets? Is there a seasonal trend or something you can find with your research? And I was like, I honestly can't find anything. It seems random. And after a couple years of struggling, I was like, yeah, this market's completely random. All these indicators people have made are just reorganizing the data into a more usable fashion, but it comes at a tax. If you take choppy data and you smooth it out with an average, there's always a delay. So in mathematics, you guys have worked with like fast Fourier transforms or something, right? To smooth out data or remove certain frequencies from data sets. Is that whenever you have data and you modify it to look cleaner, it always has a downside to that process. You can't smooth out data without there being some kind of entropy per se to the data set. It loses some value. So the example is when you use moving averages, when they cross over, you smooth out the data into some lines, but the crossover is always after the move. So there's a delay, right? That's a perfect example of that sort of entropy, if you may, which is what's lost to the universe as a tax. So all these like indicators, I was like, people are just using these delayed indicators because they're trying to organize the data slightly better than the choppy candles, but there's no extra information. It's not like me making a moving average somehow gives me some unseen knowledge inside of the candle that wasn't already there. You're using the same data and creating a new data set out of the old data set. You're not revealing anything new by unwrapping some candles. So all of it seemed to be bullshit. And it really is. So how do traders make money using bullshit? And I realize it's not the indicator. That just helps you try to find where you get in and out on the trade. Really what makes traders do so well is that scaling risk I talked about. When you're very confident, you bet big. When you're not confident, you bet small. So any trading strategy you use, you better understand where it works and where it doesn't. If you're extremely confident, there's your big bet. And confidence isn't a feeling like I feel like it's going to go up. Confidence is math. Here, if 90% of the stocks are bouncing on monthly hedge pressure, then gee golly, so will MHP on the S&P. Let me bet there on futures. Very unlikely that the futures go down when the stocks go up. It's a very basic principle, right? So confluence is based on math, and the position size that you take, and if you enter where volume will be at the right position size, that's really the art form, is managing your position, how big you trade. And I tell people, they say, it's like, Matt, what do you do that's different than everybody else? It's this right here. The most important decision off the right of my screen is this, how big I trade. Do I long really heavy right here? Or do I spread out my bet very wide around there? Do I hold through the chop? And where I can invalidate my trade very quickly. Know the difference between being wrong and being volatile. Right? And those tricks all help me. So I enter at the right place. When you're wrong from the right place, you're always wrong small. So I have small losses. I'm not trading in midair where things don't matter. As a matter of fact, I don't know if this is the correct. I think I just moved this out of the way earlier. This is not where that indicator is, by the way. This one is all the way down here at 20. That's not a pivot, by the way. I want y'all to see that. So that's really the trick is position sizing and management. Like you can trade blindly without having to use any indicators. And as long as you're trading the right position size, you should be fine. You don't even need indicators. But the other thing is knowing when not to trade. When you know your system works under certain conditions and you don't have them, it's perfectly okay to sit out. And that's really the secret to making money of this, is choosing the trades you don't take more than choosing the trades that you take. The ones you choose not to take, strategically sitting out when things don't line up, is a portfolio enhancement tool. Like you will have so much better success not saying, well, I mean, kinda, okay, let's take it. It's more like, doesn't line up, let's not do it. I spend more time actively sitting out than I do trading. My trades are 10, 20 minutes long a piece, and I spend 80, 90% of the day doing nothing. I'm a sniper. I'm not running around with a shotgun, trying to make a big, wide, sweeping bet. Shoot everything that moves. I'm a sniper. I wait. I've got a bunch of targets. Let me pick the best one, you know? Does MHP update in real time? It doesn't, because real-time open interest is not given to us in real time, or else we could do that. But the MHP that's calculated in the morning actually has its same probability by the end of the day. In a perfect world, if the exchange had real-time open interest, which they don't, they only know at the end of the day, we could have updating monthly hedge pressure in real time, and that would be a hack on top of a hack. It would be very cool. So somebody says, yo, Toronto King, what's up, man? You're great. Inspire me to continue your trading journey. Yeah, don't give up, dude. Like, honestly, what really started working for me was that I got very good and very, very, very good at finding out when something didn't work very quickly. That was my best skill set in trading. Let me try something. And at first I'd try it like an indicator and give it a month or two and then be like, yeah, I give up. But as I got better at that, I try an indicator for a day and I say, well, that's bullshit too. Now give it up in a day. I got very good at finding bullshit very quickly and just saying that's stupid. And that's a really strong skill set to have, was to identify quickly when something's bad. And as I got better at weeding out crap, I ultimately landed on volume-based strategies. VWAPs and volume profile was the first thing I ever found success with. And as those were finding success, they still seem to be kind of random. So basically, I'm trying to understand your definition of random. If you view the market as random, what word would you just use to define successfully predicting the market? Okay, great question. So random mathematically means that the next outcome can't be determined by any mathematics at all. Even if something happens 99% of the time and doesn't happen 1% of the time, it's still random. Random means something is not 100%. So people mistake random for being 50-50. People will say something's random, it's 50-50. That's not what random means. Mathematically, random means can't be predicted. Now, this has high odds of predicting, but it's still random because it's not 100. The only way something's truly not random is if it's truly predictable 100% of the time. So when I say random in my application of trading, what I'm meaning is that you can't predict what the next candle is going to do ever, like on the candle to candle duration. That's a great question because I love having that conversation. I tell you, you're a very analytical person. I love it. Oops, wait, where'd that go? Born hungry. So the idea is if I were to poll you guys and say, tell me what the next candle is going to be, red or green. Half of you would get it right, half of you get it wrong. If I tell you, tell me the next 2 candles, well, then even more people are going to get it wrong. To get 2 candles right is even harder than getting 1. If I tell you, give me the next 5 candles, the odds of somebody getting them all right is 1/2 to the n, and n is the number of candles. So I tell you, tell me the next 5 candles, It's 2 to the 5. 1 out of 32, which is a 3% chance of getting all 3 of them right. So 5 is a 3% chance. 6 candles, there's a 1.5% chance. It gets smaller and smaller. So the idea, if the market was non-random, if I tell you to give me the next 1 candle or the next 10 candles, you'd be able to get all of them right every time, instead of this deteriorating probability that you get any of them right, or get all of the sequence right. So the fact, if the market was non-random, you'd be able to give me the 10th candle with the same probability as giving me the first candle, right? And Jim Simons, the world's greatest hedge fund manager in the history of hedge funds, also had the same belief system I do, is that the market itself cannot be predicted, the direction of the market, and that the candles themselves cannot predict future movement of the candles themselves either. So what isn't random, right? And that's the real question. What can you predict pretty much every single time? And it's volume. You can use the techniques I've taught you to predict where volume will be. Now, you can't predict the direction. Again, that's random. When I get there, I have no idea which way it's going to go. I might have some odds that it's like 40% and 60% on a back test, but 100% of the time, I know that there will be volume at this white line and at this yellow line and this green line. So while what happens and where buyers and sellers ultimately resolve is random, like which direction it goes, I can guarantee every single time at these pivots, traders will fight. But I can't predict the outcome of the war. I can just predict where the battle is going to take place. And that's really where you can isolate something that's non-random inside of something that's random. So part of trading is coming to the conclusion that the candles will not predict themselves. All these ICT traders, like, oh, the market's doing this and it breaks out. Cool, let's buy on the gap. And sometimes it works and sometimes it doesn't. When it works, you're late to the trade. You're in the middle of it. When it doesn't work, you lose big. I mean, it's just like messy because you're trying to use the candles to forecast future moves. Instead, we take the stance that you can't do that. But what we can do is predict that certain areas will have activity. And therefore, I'm more efficient where I short from or long from than you are. It doesn't mean I have any better chance of guessing the next candle. But the difference is the market moves here and somebody shorts on this high that's arbitrarily in the middle of nowhere. They're going to take more drawdown than me who shorts right there. And I know I'm wrong very quick. This person has a very long journey to know they're wrong. They're going to lose worse than I did. So the idea is that if you can get your efficiency, entry efficiency on point, and have some kind of confluence to adjust your position size between small and big, you are very, very, very meticulous in losing small with method, rather than longing and trading at the wrong spot and having less efficiency. Efficiency will up your win rate and will lower your loss size. So even though I'm trading the same random market you are, at least I'm making my bet at the right spot, right? And that's really the key to trading well. In these indicators, somebody said, be out on NinjaTrader. Yeah, they are on NinjaTrader, my bad. Fantastic analogy. So we have like a saying here that says, and I got a song for it. I'll play all the song. You guys who write songs to me all the time. Let me find it really quick. Let's see. Let me find it. I love this. Wait. All right. So we do like a lot of AI songs here. Our community writes a lot of songs. It's really fun. But this is a saying I always said, is that when you trade and you're right from the right place, then you got lucky. Okay. Market's random. So the market falls and I long from here and I'm right from the right place. You had skill and luck together. You had luck for that to pivot and skill to pick that pivot. Luck for it to go in the direction you wanted it to. Skill to choose the place to long from. If you're right from the right place, you're skillful and lucky. If you're right from the wrong place, market is long here and I long, and it falls to there, I stop out. Maybe I'm wrong, but it's always in the right place. So if you're right from the right place, you're skillful and lucky. If you're right from the wrong place, you usually lose big and stop out before it goes in your direction. But if you're wrong from the right place, you're always wrong small. The trick is to learn to be wrong from the right place. Entry efficiency is what I preach. And in position sizing on top of that are your godly skills as a trader. No set of my indicators just help me pick where to trade from. It doesn't, and maybe which direction it'll go with odds. That's as good as you can get. This shit's random. Here's some odds. Here's where the volume will be 100% of the time, and the odds are like maybe up, maybe down. And it's that determination of, okay, how big do I play? Do I spread my bet out around here? Do I play tight on the edge? And where do I stop? Proper invalidation requires you to know exactly where that volume goes against you. If your market falls and it hits here and the volume is there and it falls through it, well, that wasn't enough volume to kick you up. Get out of the way quick. Our platforms work on our indicators work on our own platform and on NinjaTrader right now, and soon to be Go charting. And after that, Trading View. Maybe on raw. Matt likes to hedge hard when he mastered bets. Anyways, this is my TED Talk, you guys. Y'all got questions or whatever? I just like demonstrating on the days off, give you guys some techniques and show y'all. Y'all come in the mornings. I'm live streaming every day. Neon streams in the afternoons, and Brad streams at night. They all trade the same techniques. That's my opinion of Blue Sky, and I'm trading it. It's probably one of my favorite experiences I've ever had. Top 3, 100%. I've had such an entirely... and Blue Sky just came out with the new release where their launch plan no longer has a buffer phase. I mean, sorry, their orbit plan. So the orbit plan used to have a 1-day pass, a 2-day buffer, and a 3-day payout. I'm teasing this because we're the only people that know about it. But the orbit just got rid of the center buffer phase. So Orbit now is Lucid Pro. For cheaper price, I think. 1-day pass, 3-day payout. So they chopped 2 days off of that, off the new orbits. I think they soft launched it already. You might be able to buy it, but it's hard launching on Monday. Yeah, we don't have Trading View yet. Trading View will be soon. We're building a browser extension for it to be compatible with Trading View for you guys. The yellow and white lines, the white line is the open price of the equities market converted to futures. This is QQQ's open price at 9:30 in the morning. It hasn't updated though. This is just the stock market's closed. The white dash line is the halfway point between that. They all mean different things. Each one of these I can teach a separate class on. They're all volume pivots though. Do I handle reclaim trades differently in volatile environment? Yeah, so Joe, great question. I don't really do reclaim trades often in volatile markets. Great question. So like we lose a pivot and it falls and chops back to it. I don't like to jump back in when above triple B that often because you can get caught up and chop 4 or 5 times. In a bull market, I'll take reclaim trades almost every time. So a lot of times when the market's volatile, say an example, I bought it in TD band and it failed and VIX above triple B. It comes right back up to here. The chances are, can I jump back in for the play? I could, but because I know VIX is in the weird spot, I'm going to get in really small instead and spread out a wider bet inside of that range. An example is we overshot here, then we reclaimed. Say I bought 2 minis and I stopped out. We come up there again. I'm like, I kind of want to make the trade, but let me do 2 micros instead because VIX is volatile. And I'm going to assume that I'm going to invalidate below the lowest low. So then I might want to do 2 minis, but I'll spread the bet out and get a bigger position around here. And then if it breaks the second time, then I'm done. But the idea is I'll spread out my bet much wider, 2 minis, and now I'm doing, this is 1 mini spread out over the range. So I'll take the reclaim with something very small and then add to it inside of the same range. If the volatility gets bigger, which is what this is saying, then I'm going to kind of step away from it for good. I might take 1 more stab at a wider bet, but when VIX is in the right spot, I'll take the reclaim every time. Where to enter right now, please give me an entry point, bro, before the 1 p.m. You should enter into the boot camp. You can learn how to do this on your own. Yeah, our subscription to our tools includes these indicators. Yeah, correct. Am I open having discussions about being available on other platforms? Yeah, our current scope right now of work is to put our tools in other platforms. Right now, like I said, we're in NinjaTrader. We're about to be finished up in Go charting. We're about to add Trading View to the mix after that, and then we're going to put ourselves in other platforms this year. Am I still streaming till 1? I'm probably gonna stream for like a little bit longer, like another hour, and chill. We got some giveaways and fun stuff to do. Do I log into Tradeovate 6 different times in order to get 6 different windows? No. So if you log into Tradeovate desktop, you can get DOMs that you can pop out. So I have different DOMs lined up on my other screen. My other screen looks like this. It's a grid of DOMs. So my accounts that I trade in order, trade 1, trade 2, trade 3, trade 4, trade 5 are like this. So I'm going to teach you guys one more strategy in a second. My prop rotation strategy, which is why when you look at my prop accounts, they're all different amounts. I never trade them together. Let me teach you now the big, as you got stuck around. Now I'm going to teach you how to beat props. Hang on for a second. Yeah, wealth charts is on the list. Coming out soon. All right, we're going to start soon. Somebody says, Matt, how is one Lance be a scammer? You heard it everywhere. It's assumed because he said he made $100 million and nobody's ever seen it. And he sells a $10,000 course. Because for some reason, if you're worth $100 million, you need to make 10 million. You need a job that makes you $10,000 of, you know what I'm saying? That's the first thing I would do if I made $100 million. I wish I had a job. I could teach people. I'd love to be a teacher and make it very expensive for people. Oh, we asked that guy to show us his statements and he just memed himself to oblivion and dodged it and blocked us. There are 0 people in the history of Wall Street that have seen the evidence of that. 0 people. Or published it. It's nowhere. Doesn't exist. And he went blind by trading. His eyeballs hurt. Curious to take from the skill luck you're mentioning so people consistently be skillful and lucky. Well, it's like poker, right? It's the same thing. Not every hand you get is a royal flush. But when you get the royal flush and you happen to bet big because you had the royal flush, that's a mix of skill and luck. Right? The luck is the cards you got. The skill is you handled the odds as you're being dealt the cards. So trading is the same way as like when I get there, what are the odds that it bounces and what's the size of my bet based on those odds? So trading is always a mix of skill and luck. You can't control the cards that are dealt to you. You can only control how much you're willing to lose in the market. That's really the part of this. Everything in the market's predictable and unpredictable and kind of random. But the one thing you have perfect control over is how much you're willing to lose every bet. And so that's just like you have control over when you fold when playing poker. Somebody says, Matt, your wealth of knowledge and blessing your community. Thank you for all the lessons. Say, yeah, of course, man. Come back anytime, dude. When we stream live, it's different than this, right? When I'm trading, I'm trading. So I call out my shots and I show you guys the plays I'm making in real time. Somebody said, all this money I made, how'd you make it last night? Simple. Multi-hedge pressure. Last night was golden. It landed at MHP. This is a 90%er. And it's rock. Look at this. My volume pivot. I longed in all my accounts at the same time, too. I went full all in on that one. Can I show the liquidity map? Bookmap doesn't have anything like we do. Bookmap doesn't do positional structure like this. Bookmap just shows order flow. It's kind of different. The example we Bookmap would show activity here as it's happening. We're going to tell you there's going to be activity here when we get there in the future. So we're predicting levels. Bookmap just kind of confirms when you get there that they're important, right? Together, they're useful, right? Bookmap is a confirmation tool, is a great complement to something like Rocket Shooter, which is a forecasting tool, right? We can say at this level, there's going to be volume. And when you get there, Bookmap will go ding, 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 right? But you can't plan off of that unless you're just like, oh my God, it's dinging. Let me make a trade, right? You want to use something like a Bookmap as a confluence to level. So we're like map out your trade, and the Bookmap is like your radar. Beep, 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 right? But you can't just scour the whole beach with the metal detector. You got to know where to start, right? And so people that do both together, they say it's the perfect harmony of indicators. Which platform do I use the most? I use Tradeovate for all of my prop stuff, and then I use TradingView for all my real trading in my big accounts, and Webull for options. Bookmap shows pending orders. Yeah, but pending orders, it's not useful information though. Level 2 in resting orders, it's not actually useful information for traders to process for actionable pivots. I think it's a useless thing to look at that. The level 2 is so full of noise and flickering and spoofing, and none of it's believable to predict the direction. It's the market orders that dictate the direction of the market against the level 2 standing orders. Think of this as like the resistance to movement. And at any given time, there's blasts of movement that you can't see, which are market orders, dumps immediately. And whether those people able to catch the orders or not, or what make the market move. Level 2 is a fraction of the total order flow. Most of the orders coming through go to market makers, and most of the orders coming through are dumped to the market. So you can't see that until it's actually happening. You can't see it ahead of time. How much is Rocket Scooter? Our tools, it's 99 bucks to try for a month, and then every month is 159 after, yeah. You like, so you've been watching for a few weeks, and that's the most you've learned. Well, our boot camp is like this, dude. Like, and we do it about once a quarter, which is kind of nice. In September, we'll do our next boot camp. But on the holidays, I like to just give you guys some mana, you know, like take something mana is like a spiritual food in most spiritual belief systems. So this is like your trading mana. It's like spiritual food, right? It's knowledge for your brain. We're not trading today. We're just chilling. So I like to give you guys something to think about, something to inspire, you know, teach you guys something. And I love doing it. I could take the holiday off, but I love showing up on holidays and teaching. When the market's going crazy, I'm like focused, right? I don't really get a chance to teach much. So we teach a little bit, but this I get the whole time to go through it and give you guys some. And Daily Mana says, that's right, Matt. See, he knows. Give you guys some trading mana. Yep. How to beat props. Let's go. All right. So when it comes to props, let me give you guys some examples. Let me draw over here to the side. All right. So let me teach you some account rotation strategies. Let's say that I have a liquidity pocket, we call these, which is a bull zone and a bear zone, okay? And that we know that the market opens in bull zone, and I have the confluence. I'm gonna test you guys. Actually, I'll just go through it. Hold on. She's ordering me some barbecue. Let's see what I want. Turkey and brisket. That's all I want. Corkscrew. I've never been there, actually. It's a Michelin star barbecue. I always like to try turkey and brisket because I like to see how both of them. I'm gonna judge it by how good it is. Sweet potato, beans, mac, cobbler, bag of chips. I want the beans and mac. See, all our friends drove out to Corkscrew to go have barbecue today. There's like 10 of them. I stayed here with you guys. Oh, we bring back some barbecue later. Wait, you wish you could purchase the indicators outright? You can, yeah. So we do have, actually there's a sale going on right now. To get the indicators outright, we have a huge sale that ends on Sunday, by the way. Right, so our tools outright for 4,000 bucks. The sale right now, there's 2,500 for lifetime access to the software, the trading platform, right here. It's marked off, and that's till Sunday, by the way. So you can just buy the tools outright, and then you get everything we ever make, anything we add, any new indicators, lifetime Discord access, lifetime boot camp, everything. And you get access to this in every single platform we put the tools in as well. So if you go to the Rocketplace site, you can actually, the sales until Sunday, you can do the lifetime then if you guys want to just buy it outright. So that huge sale is going on right now. That's where you can do it. Anyways, so let me tell you guys some more techniques, right? So an example is, we know that when you open in bull zone, price will close at the end of the day in bull zone 90% of the time with confluence. Just an example, right? Let's pretend there's an example there. Then we have another lower green band that we have when I tell you guys about 92% of days stay above there. So I have two particular setups. Let's say that this is NASDAQ and this is 40 points apart. This is 100 points apart. And now I can set up a trade. Okay. Well, I know I've got two areas to focus on. This pivots most of the time. This pivots most of the time. Okay. So both of these are areas to trade from. Immediately, I'm going to tell myself, okay, I can trade here and here because I know it's going to stay in the bull zone, but it usually can overshoot to the pocket bottom and come in. So usually around pockets, I account for both possibilities. So I'm going to trade at both of these places. And since this is 100 points farther to this one, I'm not going to hold this one down to there. I'm actually going to stop out if I lose 40 points on trade number 1. And again, I'm going to execute trade number 2 right there. So I have 2 different trade setups and stop right there 40 points under. Okay. So I've got one area to trade from with a stop and another area to trade from. Now let's say that I have 3 prop accounts and I've been trading these 3 prop accounts. And they have different balances. Let's say of my 3 prop accounts, account A has built up $10,000 of buffer. It's got a lot of room in it. Account B has 5K of buffer, right? And account C is new. It only has 2K of buffer. So what I do is I organize my accounts every day where the one that has the most room to fail goes first. The second biggest one goes second. The third biggest one goes there. So in this example, trade account, I attack it with account A with the position here. And maybe in account A, I build like, you know, say that I want to do 2 minis with each contract or each account. So account A, I might buy 1 mini there and 1 mini there. Then here, I'm going to do account B. 1 mini there, 1 mini there. So now I've got 2 accounts engaged, but I went in the one that has the most room to fail, has more room, goes in first. Less room, goes in second. So now I've taken a wide position on B and a wide position on A. And then if both of them lose, say that A takes a stop and B actually makes money. So now A took a hit and I move A to the bottom of the list to come back down later. Let's just say that A took a 3K hit. Now A is down at 7K, but B somehow made money. Now B is up to 8K. Cool. Now I closed out B and B goes to the bottom of the list, right? 8K. Now C is the one with the least amount of room. So now I'm going to wait and I'm going to do C next. Okay, the market fell back down to the pocket. Cool, let me engage in C. Oh, cool, C made some money. Check. Move it to the bottom. I still got A and B left. Market falls and falls and falls. Then I would do A, and then B, then C, and A, then B, and C. And I rotate like that. In areas where you have, it gets more easy to understand why I do that when you get pivots that are all clustered together. Like 4 pivots or 5 pivots in a 100-point NASDAQ range, right? When I want to stop here, there's another pivot. And I want to stop there, there's another pivot. All these pivots are together. I need to play all of them, all of the pivots. It's going to bounce at one of them. So now I can split up accounts A, B, C, D, and E. Just spread them out. That way, if the market just chops around and does whatever, it takes off. I may not make money in all the accounts, but I made money in some of them. A is the one with the biggest fat, also has the smallest overall position. D is the one with the least fat, but has the highest confidence because it's the lowest of all the pivots. You're not going to break through all of these easily. You're going to pivot somewhere. So small trades at A, medium trades at B, larger trades at D and E. So this type of lesson, the reason this works with props, it's because props have a low cost of failure. To fail at a prop, you can hit a pivot and fail and you lost $200. You can hit a pivot and win and repeat that 3 days in a row and you can make $3,000, right? The idea is that the reward to risk is so offset in the favor of the trader that the goal is not to make 3,000 across 5 accounts. I'm going to tell you guys something, is that the gurus that you watch on stream that are copy trading is the biggest scam in the entire industry. Nobody, first of all, nobody on YouTube makes more money trading than I do. Actually, no 5 YouTubers put together make as much money as I do trading. I'm the only person absolutely crushing it all the time on the YouTube scene. I watch these guys. They're all copy trading prop salesmen. Why do they copy trade? Because you ever see how many times you watch somebody and one day they're trading Lucid and one day they're trading Apex and one day they're trading TPT and they're trading something different every day? Wonder why that is. I stick to one firm and trade one firm. What happens is if they're copy trading, one of 2 things happens. Either A, the market goes, they're copy trading one, they're longing here, shorting here, they're showing one, and if it blows up, it just disappears. But if it wins, they go on Twitter and they go, I made all this money. Check it out. I made $40,000 today. 8 times 5, that's 40. 5 accounts copy trade. Great. Then people see that and go, wow, this guy's a good trader. Let me watch him. But if they blow up, they've taught you to copy trade so that you blow up 5 times as much. They make a fortune. That's why these copy trading prop salesmen fucking show off wealth, because it recirculates that entire gullibility cycle where people are like, dude, this bro made 40,000 today. This guy ain't making any money. You add it all up, they're losing money. I promise. I know about certain streamers because I have prop CEOs that spill the beans. They're like, dude, I watched this one guy, this big YouTuber, and this motherfucker does not make money here. And he's like, they're like, if it was not against company principle, I would call that guy out tomorrow. But I'd love to blast the stats on there and ruin this guy. They hate some of these guys. But they also like them because they make them a lot of money. So they don't want to rock the boat either. You know what I'm saying? Anywho, the point I'm saying is that when they copy trade, they're just gambling and locking all of their risk into one spot. When I taught you the market's kind of random, they're going to jump in and copy trade. They're going to blow up all 5 of those accounts. And if they make money, they can publicize it and get a lot of viewers. If they lose money, well, they hedge their bets because you're going to re-up all those accounts. They make tens of thousands of dollars from your purchases. So they've created an unbeatable trading strategy where they win no matter what they do. And copy trading is that strategy. It's the biggest scam in all the props. I'm one of the most profitable prop traders. Not the biggest payouts, but profitability, ROI. Anybody that's out there. I'm now day 4 with Blue Sky. I just started 4 days ago and I just took 2 payouts already. The ROI is fantastic when you spread out your bets. That's a bigger part of the secret. I'm no better of a trader than a lot of these people. Maybe I am, I don't know. But it's my application is certainly better. I'm not picking one pivot and going in all of my trades here. I'm trading at each one of these. Maybe I make some money in one of them. Maybe I make some money in 2 of them. Maybe I make some money in 3 of them. Small position, medium position, large position. The stop is here. A small position can travel longer and have the same loss as a large position that travels shorter. So I can take 1 micro and lose 100 points is the same thing as 1 mini and losing 10. Small, medium, large. As I'm hitting these ranges, I'm just playing the entire area. I'm not trying to say, this is the pivot, let's go. I mean, it'd be nice, but you need a lot of luck for it to pivot exactly on your pivot. Now, last night, we certainly got it, but a lot of times it's going to be volatile around the pivot before it goes. So you have to know how to spread out your bet, and cascading your prop accounts this way is 100% the secret to consecutive, consistent payouts. So let me show you my Lucid dashboard. And this is my full dashboard. The counter. So when I went live with Lucid, it only took me 2 weeks to go funded. And then I got 5 straight weeks of payouts. Look at this. And 5 weeks of Lucid. From May the 18th until June the 25th. And they pushed me to live. It was total less than 2 months, start to finish. I went live with Lucid. Notice something neat about my payouts. Number 1, all the account numbers are really low. I'm not blowing up a lot. I'm blowing up some. It happens. Like, it was accounts 1 and 2 all got busted, but 3, 4, and 5 all got payouts. Then looks like 5 and 6 and 7 got busted. Then 8, 9, 10, and 11 made payouts, right? So another thing you'll notice is that I'm not taking $15,000 payouts every day like some gambling losers out there do on YouTube. 3,000 this day, 3,000 this day, 3,000 this day. Look, every 2 or 3 days is another payout. The 27th, the 2nd, the 3rd, the 7th, the 10th. Small payouts more frequently pumps your ROI up. You're not gonna ever see me take 15,000, all 5 payouts in the same time. That person's not consistently making money. This is consistently making money. Look, from May the 18th until June the 25th was $68,000 a payout, and I put 15,000 in. So the idea is this is proof that I'm rotating my accounts the whole way in. Every day, maybe one of them makes target, and they're all making different amounts. If I bust one, here's the trick. With Lucid, and just like anybody else, if I've got 5 funded accounts that I'm trading at all different places, I also have 5 past evals. I'm gonna say, just abbreviate this, on the sidelines. So if I happen to blow up, like market falls and I long and I blow up an eval and it falls there and I long and make money in this one, I've lost an eval. Well, I've got a stockpile of already past evals that immediately I can pop one back to funded and not lose a beat. Market continues to fall, a brand new fresh funded account's ready to go. So you'll see me always also trading more than I need to. For that particular reason. You can only have 3 blue sky funded accounts. However, look what I have. I've got my 3 funded orbits, and I'm doing launch and orbit together just to try 2 of them out. So I've got my 3 funded accounts here. I've got a past phase 2 launch that's passed. I've got 2 past, these are all past launches, by the way. So I've got a stockpile, the ones that are 0 are all past. So I've got a stockpile of past accounts ready to go in case one of these blows up, one of them pops back in. So I never lose a beat and I can just consistently go through and just play. My rule of thumb is if I can have 5 accounts funded, I'm going to buy 15 evals. Maybe 5 of them pass, maybe 10 of them pass, or at least 15 evals, at least out the door. So I knew I can have 3. I decided to buy 9 or 10. I think I got 10 accounts to have my 3 fundeds. I'm assuming I'm going to bust some along the way because you're going to bust some in props. It's just part of the game. So I try to get ahead of it such that I can build a system where I've got my fundeds ready to go. I've got backups because for me, it's not about the money. It's that time is money. I want to keep rolling without stopping. I want to make a bunch of payouts, then start over and then build the evals again, then make a bunch of payouts. I want to have a machine that's like payout. Spreading out my risk, I'll bust an account here or there. But when I do, without losing a beat in that same moment in time, I've got one to replace it. And then I pluck a new eval to replace the one in the past evals that failed as needed. So that's kind of how I run the prop system. I went live with Tradeify, MyFunded Futures, TPT. It took me a couple months for TPT, a couple months for Lucid. Doing that strategy. And I'm not ever copy trading. And I'm going to tell you, this is more successful than everyone else out there doing this copy trading crap. They're just gambling. They're showing you the winner and you think they're doing it all the time. But then when they show you the dashboard, these motherfuckers cover up this side of the numbers. Like you can go to Twitter. Let me watch. Let's just have some fun with this. Let's go to Twitter. Let's see if I can just go to Twitter and type in the word payout. Let's just look at payouts. I don't know, people posting payouts will always cover account numbers. I just typed in payouts. I'm not picking on my friends. I love a lot of these guys. Here, AJ putting somebody on blast. What'd he say? Here's a dashboard. Look at this. Here's an example. AJ put somebody on blast. Here's a dashboard. Notice a difference? Notice something? No account numbers, right? Nobody posts account numbers. You know what I'm saying? The funniest part is that nobody, and again, I'm not calling anybody out, but nobody will post these account numbers. They want you to see how much they blow up. It's crazy, especially with Lucid, because the numbers are sequential. So, again, I just typed in payouts, trying to see if anybody can show it. I don't know who any of these people are. With this person. Like, here's all my payouts. What's the account number? That's never shown. I don't know. Maybe this one is. I don't know. Oh, family. So these aren't sequential. So when they're not sequential, people will show them. When they're sequential, they won't. They won't you see how many they bust, like Apex and stuff. Anyways, I was kind of hoping to see some. Look at this. Check it out. Payout. Wait, what's the account number, bro? They're gonna show me the account numbers. Anyways, it's all the same story. They all do the same thing. I'm just picking random people on here. Which is normal. Anyways, y'all get the drift, right? Not picking on anybody. I love all these people. I don't have enemies. But a lot of people don't want you to see how much they blow up. And when they copy trade, they blow up so much. I'm talking so much. It's incredible. I'm not going to call it any specific YouTuber right now, but I can guarantee you, most all of them that are copy trading are upside down in props. They spend more than they make. And so for me, I think it's very important, you know, to show a lot of like, you know, the full dashboard and everything. Like the Lucid, y'all can see the account numbers. Here's my Blue Sky. You can see the account, even though these are meaningless because they're not sequential. But these are, you know, I'm on day 4 and they're all passed and they're all funded. I haven't been blowing up a lot with, I had blow up a few, but even with these first 2 payouts, my first $6,000 requested payout, I already positive ROI with Blue Sky. I got lucky too. Like the last 4 days have all been winning trades. So luck was also on my side. But I had good application, but also all my trades worked out pretty well. The only time it didn't was yesterday, and I only lost 2. I lost 1 eval, and I took a loss on one of the fundeds. But because I spread it out, another thing is when market's crashing, because I spread out my accounts. Y'all watched me yesterday. I bought at one of my pivots and it failed, and then I bought at another pivot and it failed. And when markets are crashing, I can only choose to trade one account with some micros, and y'all saw that yesterday. And one account with some micros busted, and one account with some micros took a loss, and that's it. All the other 8 accounts perfectly safe. So when markets are dangerous and crashing, and you're like, I'd still like to make a trade, don't be a numbskull and long all your accounts at one spot. Just trade a couple with a couple micros, or maybe trade some evals and maybe work on your stockpile of past evals rather than work on your fundeds. So think of it like 3 tiers, right? You have your funded accounts, you have your past evals, and then you have your working evals. And again, my strategy is the number of fundeds you can have max, whether it's 5, whether it's 20, whether it's whatever. The number of working evals you start off with is at least 3x. That's about your failure rate. Trust me on this. It's about your fail rate. If you want 5 fundeds, you're probably gonna need about 15 evals, because you're going to fail some along the way. And so an example is if I have 5 fundeds and I buy 15 evals, hopefully I pass most of them. That'd be kind of nice. Say that I pass half of them and I've got 8 past evals. Perfect. Okay. And of those 8 past evals, 5 of them go funded, which means I got 3 in reserve. And let's say I lost half of the accounts and I had 7 casualties. Those 7 casualties cost me $200 a pop. Or let's say 130. Let's say it's like a Lucid account. 130 times 7, that's $910. Then I'm down the hole of my failed accounts. And of the 15, I had 8 at 130, which is 1,010, right? 1,000 something. Yeah. Say 1,000. Let's just say 1,000 to make it easy. I spent a total of $2,000. All I need is one of these accounts to get to a $3,000 payout, and I've made all of that money back. Usually the accounts are balanced that way with this 3x rule. Your first payout on your first account usually can offset your losses if you assume a 50% failure rate of your props. So your first payout can put you in the green. If you're copy trading, your failures go way up. So splitting out your risk, the math is pretty decent. I've done the same 3x trick as it's a starting point, but I buy as much as I need. Eventually what I want is I want 5 funded accounts. I want my past fundeds also to be 5 in reserve, 1 for each one. And then I'm done buying evals. That's it. So now I have 5, one of them busts. Okay, now I've got 4. One of these goes back up. Now I got 5 again. Now I've got 4 here. Okay, cool. Let me buy 1 eval each day. Now I've got an eval working, just 1. On really serious days, I'll trade my funded. On days when I don't have a lot of confidence, I'll trade the working eval. Oh shit, I blew up that eval. Okay, crap, just 1. Okay, let me buy 1 more. Oh crap, I blew it up. Let me buy 1 more. Oh crap, I blew it up. This is just trading to restock the stockpile of past evals. But it's a shitty day when the market's crashing. My fundeds are all safely on the sidelines. So I'm always kind of like shuffling accounts that way, like on my stream, because I got to trade something for you guys to watch. Days markets are crashing, I'm like, let me just trade 1 eval with some micros. That's exactly what I'm doing. Wait, somebody said who failed miserably in the Grand Cup? Are y'all talking about trading markets? Who are y'all making fun of? Who lost misery in the World Cup? Which guru are y'all bashing? Talking about me? I got to top 16 in the Grand Cup. Are you kidding? I got top 6. Are you talking about me? I got top 16 in Tradify Grand Cup. I made like 10 grand off of that. He said I make more from affiliate codes than from trading. Do I? Nah, not from affiliate codes. Well, no, I mean, like, okay, let me give you an example. Like, I'm a partial investor in hospitals, restaurants, clubs, building a coffee shop now, building Palacio now, opening an escape room next year, own commercial and commercial real estate investor. Every one of my revenue streams is like a 6-figure plus to $1 million plus revenue stream. If I lost every revenue stream except for one of them, and I mean all of them except for one, any one of them makes me a millionaire. So I make a lot of money doing everything. Don't just say I make only money selling affiliate codes and trading. I definitely am very profitable as a trader, but I'm very profitable as a businessman too. I'm good at everything I do. I say you make more from affiliate codes than trading. How much do you think I make as an affiliate? Let me see if you can guess right. This guy has a name called Trading Markets. He's got an avatar where he's looking off into space. Bet you this dipshit's a YouTube streamer for trading. Look at this fucking piece of shit. Look at this guy. Look at this guy right here. Let's analyze this trading goal. Let's rip this guy a new one, guys. Hold on. I could always tell it's always some fucking small time YouTuber that gets nobody that watched their channel got something to say. I'm so goddamn smart at trading. I'm also good at predicting the fucking future, kid. All right, so let's watch. Let's see how good you are. Let's watch this guy pumping Traders Launch. What is this? Pumping something. Let's watch. I didn't even have to think about it. Let's watch this guy. All right. I don't see a P&L statement. I don't see a broker statement. I don't see nothing. And there's a reason. No offense, kid. There's a reason 131 people watch you per month. There's a reason 1.5 million people watch me per month. And I can let you guess what the reason is. You seem like a smart, reasonable fella. I'll let you guess what you think it is, but let me give you some tips. Okay, number one, all right, you're paper trading. And I'm not gonna tell you how I know, but I know that you're doing it. You're paper trading and this little fucking TradingView clone. You're not showing your broker statement. This is all garbage. It's all paper trading, number one. Number two, I just went through your entire video. I don't see a single performance report, performance history, broker statement, or anything that shows me that you actually even make a dime trading, much less make more than your affiliates. I don't believe you actually even make a dime trading. And I don't think you sell any affiliate codes using code GPI with Traders Launch with 131 views. I bet you make $100 a month as an affiliate. And I bet you still got a fucking day job because I don't think you make any money, even as an affiliate. And I think that's because on holidays, you have nothing else to do, or else you'd be streaming if people watched you, but you're not streaming, you're watching me. And that's why, because nobody watches you. And the reason you're watching me talking shit, because you wish and you wish and you wish every night that you can trade fucking places with me and you can be in the seat that I am. It's a great seat to be in. And you're salty because you're not there. Sorry for your loss. You stream for a living. I know you have a day job for a living. That's the difference between you and me. Anywho, I always know it's always some kid with a stream. You know how much I make as an affiliate? You know how much I make as an affiliate? Many, 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 many millions of dollars a year. Now I'm talking many, but I still make a lot of money trading. But since you asked, also all of my businesses make many millions a year. I never trade in a real environment. Yes, I did. I made, let me see. I guess you're busy watching my stream since nobody's watching yours. So let me show you what I did this year. And that's so funny. Let me show you this. You want to see a real environment? Here's a real trading account I had with NinjaTrader that I took from $100,000 and I traded it up and I withdrew 805,000 from it live on this stream, by the way. This is a real account. This is a transfer history from NinjaTrader. Everyone in this channel watched me trade a real account. That's it. This I made when I add up the $805,000 I withdrew from this account. Here's the stats. This is account 1670120 at NinjaTrader. I ended up making $805,000 in my pocket. I bought my girlfriend a Ferrari 2 weeks later with cash. Well, mostly cash. I financed 50K, but that's a whole different other story. You should always finance at least one car to keep your credit report high. So I always put everything down and finance a little bit. Also, I can teach you how to get your credit score higher. We're building a lot of businesses, so we had our personal credit up. But I put $300,000 down in cash. I did buy the Aston with cash, though. That was another 330. Anywho, yeah, no, I did that. That's a real account. And then I made like 300,000 with TPT or something. I netted like $1 million something bucks there. And that was on stream. That's what you guys got to see. Any questions? Those are peanuts. Oh, I'm telling you, bro. Those are peanuts. Well, let me tell you something. Let me predict the future for you. Hold on one second. What's up, girl?
Hey,
half a pound of turkey, half a pound of brisket. Oh, I'm good. Yeah, that sounds good.
okay, alright. It's been taking us a while to get to the front, but yeah, we're about to.
All right, tell everybody I said hi.
Okay, I will. Bye.
Bye. And I'm so FOMOing right now. They're getting barbecue. Those are peanuts, I know. Anyways, bro, I'll predict the future for you, then I'll move on to another subject. Here's a prediction. Your YouTube channel is never going to take off unless I'll be constructive this time. Your YouTube channel will never take off unless you show results. Number two, your YouTube channel won't ever take off unless you show consistent results, which usually means transparency, showing results, showing broker statements, trading live. You got to get rid of the paper trading that you're doing, and you got to stop trying to push affiliate codes until you're already big. That's another hurdle. Most small streamers try to become affiliates really quick, and you don't get anywhere because it kind of turns people off for you to do a sales pitch, especially when you're not a Michael Jordan of trading. You're not a proven superstar. So try to scrounge out like your content for a year or two, selling nothing, and build on a platform of honesty, and then start to sell to your trusted, loyal followers, and then your platform will grow that way. The problem, okay, I'm gonna stop talking to you. You gotta stop talking, man. The problem is you don't care about YouTube. Yeah, I can tell your channel sucks. It looks like you don't care about it. I'm teaching you how to get big, but if you don't want to listen to that either, time to move on. I don't ban people from the channel, but the mods are gonna time you out if you don't stop talking. I can tell you don't care about your YouTube channel. It looks like shit. Looks like you just casually do it. Anyways. So long story short, most people aren't going to show you that they're going to make money. And the whole point is you want to actually, this is a different topic, but you want to make sure that people that are teaching just show you what they're able to do. And a lot of people find ways to kind of bend the truth around it. But for me, it's like, okay, this moment of time I'm trading a real account. Here's the broker statement every day. I posted that every day. And props, I'm like, here's the full transparency. Here's the prop account numbers. There's everything shown on the screen. Here's the full dashboard. I mean, unless you sit on my lap while my accountant does my taxes, I don't think you can be more transparent than that. But I think it's important for people to show that they can practice what they preach. But yeah. Am I done roasting this guy? Can I ask you about a follow-up question? Yeah, account rotation. On the rotation on B is still second on the next round, even though B has more buffer. Yeah, that's a good question. So in the line, when you put it to the bottom of the list and you get back down to the bottom of the list, it's okay to reshuffle the biggest account first on a cluster of pivots. Yeah, you nailed it. So you're saying like if account, one of them goes to the next slot and one of them goes to the other slot, but the one after that has a bigger buffer, you can rearrange them. I usually do that. And the way that I do it on my screen is I have the accounts off to the side and I physically layer them. Like I'll have accounts 1, 2, 3, 4, and 5, and they're trading. Once I'm engaged in the trades, and if account loses, then I take the account and I move it over here and I scoot all the other ones over. and I reorganize them this way. And I've got all the balances active and the P&Ls active. And I just basically manage here. Say it falls to a really strong pivot. I have really strong confluence and I want to hit it with 3 accounts. Then I'll go long, long, and long. And I just click them left and right like that. That's what I would do. And actually somebody said something, a guy said something about like affiliate dollars. You know, I've only been working in props for a little bit over a year. I mean, I've been trading on YouTube for 10. I only touched props for the first time a year and a half ago. I think people are just so salty. People are so used to making that ridiculous claim. As most people out there, they just make money. I get you, dude. I have the same sentiment. I have the same sentiment with most of these people. They don't make money trading, but you are barking up the wrong tree because I actually do. And whether I'm winning every tournament out there that they're having, or whether I'm showing my personal account, or whether I'm trading props and getting payouts, you can certainly see it all. Even if you don't think I make a lot, I definitely make more money than anyone else doing this on YouTube. That's for damn sure. Okay, hold on. Oh, actually, you know what, guys? I didn't actually post my options video. Hold on. Because my computer crashed while I was trying to upload it. For the boot camp the other day. Let me grab that real quick. This guy right here. My bad, y'all. All right, that should be up there. Is it possible to trade a small strategy with one small account instead of rotating props? Yeah, so with a small account, it becomes the same thing. If you have clusters of pivots you want to trade from, you can take smaller, wider bets from like small micros to medium micros to bigger minis around wider. Instead of trading like account 1, account 2, account 3, you can trade one account with just smaller positions and bigger positions. Yeah. Rock is here for TradingView. We just started building the the browser extension for it, so give it a couple weeks till I have an update. I manage my trades from the DOM for each of the platform website. Either the DOM, or if I'm trading the web version, I literally will trade like this. I will right click, trade, and buy. I know it's a very, even though there's a DOM in the web version, you can't load multiple DOMs connected to different accounts. Like the account switcher ties into just the DOM in front of you. You can't have different DOMs for different accounts. On the desktop version, you can. Every window can be tied to a different account. So if you want to do this trick, you have to use the desktop version. On the web version, you just have to, you know, I'll do most of my trades like this. Like I'll write on the screen 1, 2, 3, 4, and 5. And I know which ones I need to do. And I'll take along, like I'll trade, buy, done. And then I manage it by actually physically writing on the screen. I'll write like 1, 2, and 3. And then when I make the trade, I'll make that one 3, and then this one 1. Like I'll physically write on it. And you can also just keep a scrap of paper or whatever. But in all honesty, the only reason I have the web version open would be sometimes if I'm trading a second prop. In all honesty, if you're only trading one prop, you should use the desktop for it. That way you can organize your DOMs in different places. Yeah, good question. Is your framework of trading boot camp trading? Does it work for real accounts or just props? So I'm mostly a real account trader, by the way. So I've spent 9 years on YouTube trading real accounts and about a year, sorry, 10 years trading real account and about a year and a half trading props. I had to adjust my strategy to props. And normally what I'll do is I'll find like clusters of pivots and build small to medium to large positions around the cluster. And in props, I just added the actual bonus of splitting up prop accounts in that same fashion. So I adjusted my strategy to work with props. Ooh. How many screens am I using? You only really need like two screens at most for trading. I have total 6 screens, but they're not all for trading. This for like running the businesses. So like over here is my stream encoder, like OBS. Up here is my Discord. Here is my trading screen that you see. Up here is a second trading screen. Over here is YouTube, and then over here is my streamer dashboard that I talk to my mods with. So most of my screens are used for streaming rather than trading. I really only need maybe two streams to trade, and like 2 screens, and they're all 27-inch so that they can be spaced out. So the spaces in between the screens have like my speakers, my camera, my lights. So like my screens aren't all touching each other. They're kind of in this sort of pattern, like this and this with spaces. So I can have like my lights here, my camera there, my speaker there, in between the spaces. But in reality, you only need like at most 2 screens. One of them for your chart, so you can have a full screen view of your chart. The other one for managing your accounts and bringing up the web so you can look up news and stuff. I think that anything beyond 2 is just extra noise and information as a futures trader. Stock traders might need a lot more screens if they're watching a lot more stocks at once, but each additional screen should just be used for like full-time charts. Like you watch Stephen Kalajian, that guy's got like 6,000 screens, and each one of them's got a different full screen chart on it. He's actually making use of that extra real estate by having big screens to see it on. But you don't really necessarily need a lot of... Some traders out there, like a Kala, just trade from his phone. Some people, I would say at most, after your second screen, you know, it's diminishing returns really. But 3 screens max, probably as most as you'll ever need. Does my strategy work with options? It does. I actually have a class I teach on options. There's some people here that trade options. They'll trade, like we were talking yesterday about, some people are saying iron condors are great trades to trade around these DD bands. If the market stays contained 88% of the time, inside of here, then why not trade a condor around it? Because it's gonna contain inside of there 88% of the time. Every day there's like 20 plus so-called trading gurus. Dude, there's so many of them pop up. It's crazy. The prop industry has monetized gurus so much more quickly. Used to, a prop guru had to build an audience, sell the service, you know, build an income stream, and then quit their job and all that. These days, all you need to do is sell prop accounts, and you can actually monetize yourself so quickly. That's why there's like so many gurus that pop up so quickly now. But you have to kind of gauge people by how well their performance is. And normally when I teach people how I trade and they learn from me, they can see very quickly how reckless other people are, and hopefully can quickly see who's full of shit and who's not. Because when you see when I do something is so methodical and it's so well timed and well thought out, you can like if I were a master pianist, right? And I go out there and I listen to somebody try to play the piano, I can tell that they're not a master at playing piano even before they play the first note. I can tell by how they sit down and how they posture themselves. Even before they play a single note, I can say they're not an expert. You just have that sense about what a professional, you can just smell that they're not confident. This person is not confident. They're like fumbling. Where's the knob? Wait, hold on. Where's this? Where's that? This an expert. An expert would sit down fluently and see it. So like you guys hopefully can see very quickly, because I can watch somebody for 5 minutes and tell they're not a good trader. Even before they make a trade, how they talk about the market, how they view the market, their understanding of the market. And hopefully the better you get, the more you can sniff out that crap too, you know? The options as well, Chris. Yeah, it's really good for options in that, like, a lot of people do credit spreads around MHP. An example, if market's falling to MHP and it holds most of the time, you can engage in a put credit spread. You can sell a put, buy a put, and you could obtain the full credit as long as MHP holds by the end of expiration. So like 0-day put credit spreads, people buy a lot. Or you do the same thing with an iron condor. It's a put credit spread and a call credit spread on the edges. As long as it stays contained inside of here, you collect both premiums. So a lot of people use our strategies for that style for options trading, 0 DTEs off of MHP. Like whether you speculate full YOLO on a call or sell it or buy a put spread or something like that to hedge, then you're good. Like, you know, selling the put credit spread or buying the put credit spread, depending, or sorry, you're getting a debit spread or a put spread depending, like you're long the market, right? And the market falls here, you buy the stock, and then you can maybe sell your put to fund buying a put. Now you've actually have insurance on your long portfolio, and you sold a put to buy a put from the profits, from the pros, from the credit. And now you can do put credit spreads, even a debit spread if you're hedging, a little cheaper, less risk, right? To hedge against your portfolio. There's a lot of ways to use the probabilities. So much, like it's much more like in options, you don't have to be exact for the moment in time. You have to be exact at expiration, which gives you a lot of flexibility on it has to pivot now. With a futures trade, you're like, it needs to pivot now, and I need to make the money now before I stop. With an option, it's like, I got a week for this to play out. Let's see what happens. You can be less accurate on time with an option sometimes, especially when you're just hedging. You just want insurance. You're like, shit, this week is volatile. We're at war with Iran. You fell to MHP. I kind of want to buy the dip, but I'm kind of nervous it doesn't keep falling. So then, you know, buy a put, sell a put, the market crashes. You got insurance for your long position. Did I miss the Tradeify giveaway? No, the Lucid giveaway, baby. Okay, let's do one more giveaway. We got Lucids to do. Did I get forgot to do that. Type in the word guru. You know what's crazy? It's funny that the only people that ever talk shit are always aspiring YouTubers that are never big. I had some guy come at me a couple years ago, and it got really nasty, and his life was ruined in the process. And so was his business. Guy was another failed trading guru with a small YouTube channel. It's always that. It's never like a trader or a customer. Like our reviews are all great. You can Google. In 10 years of doing this, there's not a single bad review about our service, which is great to say. You have a restaurant on Yelp and it's 10 years of 5-star reviews. Again, there's been like 0 people that got online and blasted us about our stuff sucking in 10 years. That's a good track record, I think. None of you guys go out there and troll me and do one either. One of you assholes gonna go out there and write me a bad review. Break my cherry. But seriously though, like, you know, if we were doing something really, really terrible and stupid, there would be enough complaints out there somewhere, but there's not. But it always seems to be the people that are angry or trolling are always just hyper competitive people in the space. Usually salty because we're big and they're not. They should realize the lesson one, and I'll tell you guys, Mr. Small YouTuber that came through a second ago. Here's the rule of thumb. Your goal, if you're trying to be good at this and make money at this, clearly you're trying to become an affiliate. I'm going to ask my affiliate partners about you today. If you ever talk about me again in my stream, I'll actually get you removed as a prop affiliate in every prop firm in town. So you can shut the fuck up. Number 2 is if you actually want to be helpful and help other people and be nice, be friends with guys like me. Guys like me love meeting really good traders. I love networking. I don't have a single enemy out there. And I actually would love to have you network, learn to network with people and network up. That's how you get bigger in the space. I'm giving you free advice there. Go make some friends. You're never going to talk your way into the top. You have other people talk you to the top. When other people validate you, you grow faster. There's your advice, Mr. Guru. All right, spin the wheel. Make friends. That's the best way to get around this environment, this world. Make friends. And in your business, in your career, it's always the salty person that doesn't get the promotion. You know what I'm saying? Try to be friends with people bigger than you. Don't go out there and try to talk smack. You're just going to isolate yourself. You get more flies with honey, baby. There you go. Make friends is great advice. Unique Phoenix. Waiting on that Training View Rock Caesar, dude. I know, bro. You know, I'm telling you about Training View. What's really crazy is because Training View used to have an ability for you to do API calls, which would make it so easy. They have shut that down and they don't allow you to do it anymore. But with Training View, we had to be clever. So what we're actually going to do is build a browser extension for you guys to install. And the browser extension is going to talk to the server and kind of give you like the data that you can grab the data very quickly and then cut and paste it into a blank shell that just draws the raw data on the screen. Gabe, you built one? Hey, send me some info. I know if you built one, send it to me. Austin also built one and he shared his GitHub. If you want to send me and you want to share it, your GitHub, that'll skip us a few steps to get us going with that. Because we were going to just build the same. I know what you're talking about. That's basically the only way to get into Training View now. All right, that's it. You guys are now proud owners of some Lucid Pro evals. I'm going to tell you, Lucid was a goated experience. I enjoy Lucid so much in my journey with them. The Pro was my favorite account, but I think for most of you guys, the Flex will probably be your preferable account. Pro is really nice because it's oh, and somebody asked about Prop Score. Yeah, so we built a website called Prop Score. It's a free service, and you can support us by using code SCORE. With your affiliate purchase, I mean, we're affiliates, and with your purchases, we get a little revenue on the site, and that supports this endeavor. We have all of our mods that work here. They work for us. So you're supporting a bunch of people's careers. We have a bunch of full-time employees at PropScore. The goal is to be the source of information for everything props and to have a mathematical ranking system on how good these prop accounts are. Giveaway is over, by the way, guys. So what we did was we created a model that's going to take the value, the return on investment you can get from a payout per time, per difficulty, per restriction, and it gives an overall score. It's not subjective at all. It's how good is the account based on the stats of the account. My Funded Futures example is the highest ranked account, the Rapid 25K. What makes it so good? Well, on the Rapid 25K, there's no DLL, no consistency on funded. It's 2-day eval, 1-day pass, and you get $10,000 payout. It's a huge payout for a very small cost with very easy rules and very quick to pass. So like all boxes are checked. It ranks as the highest ranked account. TPT, the same thing. It's a very inexpensive account. Very high payout. You can make 10K on calendar day 6, right? 2 trading days, 3 flip days, 1 pass day, and you can get a payout every single day. And so like Blue Sky ranked very highly as well, right? And you can see all the rankings on here are based on just the stats of the account. There's, you know, Tradeify and Lucid and Funded Next, and you scroll down, Apex is near the middle to the bottom, and then you can see which firms are actually kind of garbage. Because they're like, compared to their people near them, their competitors, we want to see which firm has the best ROI per spend against a failure rate model. And what's neat about our site is that you can come through here and actually go through and program your own trading stats, and the model adjusts based on your own failure rate. An example, hey, I'm going to get the best static drawdown account, and I fail 20 times before I pass, and I fail 10 funded before I get a payout, and my trading win rate is 30%, and I like to trade 2-to-1 trades. You notice how every single time I change this, the scores changed. So in this example, my personal stats means Top Step is the highest ranked account for me. Is Deep Charts good with Rocket Scooter? I've actually never used Deep Charts before, so I don't know. Let me talk about that account. in a little bit. So anyways, the goal is like in this example, when I fail a whole lot, Top Step flows to the top because it's very cheap. If I pass a whole lot, like I don't fail a lot, you might see, and I have a 50% win rate. I don't know. You might see the stats change. I don't know. Oops, let me clear this out. So an example is if I pick static account now, Phidias is ranked at the top, and let's just say I pass very quickly. I pass 2 and 2. Actually, Top Step flows to the top again. But you see how they change places based on how well you do. And the idea is if you fail a lot, things that are cheaper to fail will float to the top. You're only telling it how many times you fail. So the score is actually based on your own stats as well. You can find out which prop account's the best for you. And you can come to really tailor it. Like I like end of the day drawdowns. I want the simplest account on the end of the day drawdown. And I want to do 100K accounts. I don't want consistency. I don't want daily loss limit. You can come through and really, and it's like, this is the only one that qualifies for what you like. You know what I mean? So anyways, free service. Prop Score has been launched for about 3 months now. Our Discord has probably 7,000 people in it already. It's massive, it's huge. And we support it with the stream, obviously. Best account size for most firms is probably the 50K, but the way that you look at that on Prop Score is you like pick a random firm. Let's go here and just do like a random firm. Okay. So let's just pick somebody. We're talking about Blue Sky today. Let me pick Blue Sky, right? If I were to pick a firm and I click on the accounts, then all of the scores are next to each other. And you can see how they all rank based on value. Like, is the 50K better than the 100K, better than the 200K? Which one is better for value? And the score is slightly better on the 50K and 100 than the 200. Because it's the simplicity score is a little bit higher. And this has to do with like the profit target to MLL ratio. The ROI is a little bit, you know, like maybe a little bit less. And you can see how all the scores balance out. These are 5 sub scores, which is like how quick you can pass per dollar you spend. This is how big of a drawdown you get per dollar you spend. This is the ROI that you can get from your payout. And it's how easy the rules are. We have a color coding, like green is good, yellow is average, orange is below average, red needs improvement sort of thing. And so you can see like, okay, I have the orbits, which one ranks higher? This is 8.1, 8.0, 8 point whatever. That doesn't mean it's the best account to get for you. It just means it's the best value per all things being equal. For me personally, I always trade the higher accounts even when they're slightly lower score because I want to get the most payout. When you're a very good trader, you always want to get the bigger accounts because you can get the bigger payout. Usually if they cap you to 5 payouts, you don't want to be locked into the smaller payouts. You want to get as max you can before you go live. So you need to be the biggest ones usually. As a trader that's struggling to get payouts, stick with the one that's the best value. That's what this is for. If you barely get a payout every once in a while, you want the best bang for your buck here. So the most efficient use is usually the 50Ks. Yeah. It just depends on which firm. Is copy trading really bad with managed risk? It's not really bad. It's just bad the way most people do it. Copy trading is not the best strategy when you fail a lot. You're going to just fail a lot faster. Copy trading works very well when you're a really good trader some of the time, but also you're going to take bigger losses than you need to. Nothing's better than splitting up your risk. Somebody says bootcamp is so amazing, so much value, just opens your eyes to things you didn't know. Highly recommend. Hey, thank you, MP. Appreciate that. Earlier you set profit limits within the prop account itself. It looked like, is that a provision through one prop firm? Oh, so no. So that limit is a Tradeovate thing. So props that I don't know how other platforms do it, but the Tradeovate platform, if people are going through the Tradeovate API, you just go to application settings, accounts, and then you have risk settings there. I remember for a brief moment when I was trading Top Step for like the few weeks I was doing it on Project X and I hated it, so I quit. But I think Project X allows you to set sort of risk standards in there. It's not locked to prop, it's locked to platform. But also the platform has these features, the prop needs to build and turn these features on. There are some props that work on Tradeovate that didn't turn those features on, and therefore they don't have it. But most of your modern props should have this little gambit of features available to you. I usually set my daily profit trigger. That way it closes my position out as soon as it needs to. Do I have any bets today on World Cup? Did I tell y'all yesterday? Did y'all see my bets? Dude, I made like 10K yesterday on Kalshi. I made all my I was losing so much, dude. Although I predict the winners very easily, my bets were really bad because I was betting on underdogs. I was trying to make money betting, not trying to predict who wins the World Cup. So the trades I made yesterday was I bet that Argentina, hold on, let me find it real quick. I bet that at the first half, hold on really quick. Where the hell is this at? No, not Argentina. Sorry, Portugal, not Argentina. Where's it at? Where's my history? What the hell is this? Oh, here it is. So I bet that Portugal, Croatia would have first half as a tie at 0. And then I bet that Portugal would win by 1 or 1-0 in regulation time. I got both of those bets right back to back. Super specific bets. They will be tied 0-0 at the half. Oh yeah. That first bet, I put $1,500 in. I made almost a little bit over 5,000 out for a 0-0 tie for Portugal. And then the winning bet also made me another like 6K, but they'd win 1-0 at the end. Anyways, I'm done. I need to quit while I'm ahead. My portfolio is up to $11,900. I was almost at 0. And I made some bets today. What did I bet on? Today, I have a... Let me see really quick. I'm just betting on World Cup. I'm only doing this for fun, and I'm going to delete this damn app after this. I hate gambling. I'm terrible at it. I like trading, but I hate gambling. What do I have open right now? I have some bets on the winner. I have a bet on Argentina, Cape Verde. Argentina wins first half. And I put one more specific bet that Argentina wins first half 2-0. The Argentina wins regulation 3-0. And then I'm not betting any more bigs. I'm just going to pick Australia, Egypt. I bet that Egypt advances. Canada, Morocco. I bet that Morocco advances. Colombia, Ghana. I bet that Colombia advances. And I have a bunch of bets on the Fed when we're going to get rate hikes. Also controversial, but I put out a bracket. I'm really good at predicting soccer World Cup. I put out a bracket. Here we go. This is it. Y'all can fight me if you want. But this is going to be what happens. This is what's going to happen. All right. So here's who I think is going to win these rounds, right? This is where we are right now. We're going through the top 32 still. Here's what I think we're going to have. Paraguay, France. France is going to win. Morocco, Canada. Morocco is going to win. Portugal, Spain. It's Spain. USA, Belgium. I put USA even though we did have the red card and we're down a player. It might be Belgium. So at the end of the day, I still have hope the USA is going to win, but probably Belgium now. Brazil, Norway. Norway could clutch it, I think, but I still think Brazil's going to win. Mexico, England. This is my most controversial opinion here. I watched England play against a lesser team, like when I watched them play Congo. And I watched Mexico play a better team than Congo. And Mexico did better against a harder team than England did against a worse team. And Mexico played a lot stronger than I thought. I'm giving Mexico a lot of credit. A lot of credit. I think Mexico can make it to the top 4 if they get lucky. The Brazil game is going to be very hard, but I think Mexico can still clutch it. They've been impressing me a whole lot. Maybe I'll be wrong, but this is my most controversial bet is Mexico's the one that's going to do much better than think. Think England will win the World Cup? I think they can, but I've been watching them play. I mean, 2-1 against Congo. I mean, I watched their games. Not as strong as France, like in some of the other big ones. Mexico, Brazil is going to be hard to tell. Very hard to tell, right? Anyways, that's my most controversial leg right there. Everything else pretty predictable. Argentina, Egypt, Argentina, Colombia, Switzerland, Colombia. I think Colombia is a top 4 team. But the problem is they face Argentina in the quarters. Colombia maybe can clutch it. I don't know, but I mean Argentina we know is probably the fan favorite to win. But I'm going to tell you, one of the most impressive teams I've been watching this entire event has been Colombia and Mexico, and they've been crushing it. USA is impressive relative, but they aren't impressive overall. Like relative to how we played before, we're doing better. But I think the final quarters, France and Morocco, it's France versus Spain in the semis, then maybe Mexico, Argentina, and then France, Argentina, and France to win. France should have won last time, and it went to penalties. But yeah. Anyways, that's my thought. Simpsons predicted it. They always predict these damn things. All right, any more questions? We'll get out here in a second. Any more you guys have for me while we're chilling? How to get the API key from Tradeovate? I don't know what you're talking about. For API key for what? SLJ? Yeah, I stream every day, dude. From 7:30 Central until noon. And then Neon streams the afternoon and Brad streams at night. You're new here. TPT says you need 5 trading days. Your site says 2 trading days. Yeah. So, Alarian, your question is that the profit, the score based on trading days, not calendar days. So, right, it's the number of minimum days to pass rather than the calendar days. Now, on prop score, the question becomes, because TPT says 2 days to pass when it's really 5. It's actually, we count what we call risk days. Trading days. So example would be TPT Pro. It says 2 trading days, but we have 3 models. One of them is your expected payout, which is the expected first best payout you can get, like maxing out for the day. Minimum first payout is trading to your buffer and then taking a payout. And then max monthly includes the calendar days. Because there's extra calendar days, like you have to trade 2, then wait 3, then trade 1, it's going to rob the score a little bit on the monthly side because the actual total number of days for the month is less. So that we should actually account for it there. So those flip days, they don't make it harder to pass. That way the model only uses actual trading or risk days that you take. Matt, what's the word on the street on prop score versus prop firm match? Running away with market share yet? PS is clearly better, but match seems to have social aspect. Prop firm match doesn't have anything other than it was first to do like the aggregate thing. They're losing market share little by little as bigger like communities come out. Like my YouTube channel is like 40 times bigger than theirs, right? They don't really have community connection. They don't have a big social presence. My Discord community is more active, more bigger, more active users. But the idea is that sites like that, they're just traffic hub sites, and they do so much traffic. You can look at the traffic. A lot of their traffic's from India. They just direct traffic and get affiliate sales. There's really no value add to it. It's just listing all the props. It just regurgitates the information. So the value add on our site is we allow you to see which firm is actually better. Can't pay for play here. It's a lot different. But as far as what it is, like we're still a bigger influencer and bigger group than any of those websites are. Because, you know, I mean, you see our YouTube channel is huge. But the only reason we're doing this is because sites like that don't really give you a clear answer as to what's better and what's not. They just tend to like work with a handful of partners and just promote everybody that, you know, to funnel. All it is a funnel. There's no additional value that's added. It just spits out the information that's already published on the individual sites. Nothing to it. I mean, if it's their business model, it's their business model. But, you know, for a site like this, the value add is which firm is best for me. Let's look at the numbers. You know, math based, I don't want to be just some retarded sales funnel. What does BBB stand for? It's shorthand for triple B is shorthand for bull bear breakpoint. It's just, don't think of it like that. It's called the Contango midpoint, and BBB is just a quick acronym that always stuck. If you don't have many eval accounts, how to rotate then? If you don't have many eval accounts, then you just have to rotate on wider A+ pivots only. Like some of the pivots that are 80 and 90% ideal are your best pivots. Avoid the ones that are B+ and B setups. Like something that's 60% or 70%, avoid those and hit the only ones that are the 90s. Proper matches a lot of traffic. Yeah, because you do a lot of SEO for India. It's easy to get a lot of traffic when you target 1 billion people. But we're getting bigger by the day. Our YouTube channel has grown 10% to 20% week over week for the last 16 weeks. So like we're going parabolic on our channel here. And I think one of them was, I was making fun of that event that they threw or whatever. Just making fun. Just making a joke. I think I'm real salty about it. I think they're real salty that their event was really bad and no big YouTuber was like supporting it or something. I just made a joke. Are there different streamers on the same channel? I look different. No, I just take 3 different forms. What's the ideal amount of counts to rotate? I always have the max funded you can get. And I always have that many in reserve that are passed. So if it's 5, I got 5 here, 5 passed, 5 working. So usually 3 times the amount of the total amounts I have. The accounts that I take bigger risk in are going to be the evals. The accounts I take less risk in are the fundeds. And I scale that risk by the biggest balance is the one that takes the most risk. Did I see the Witcher 4 trailer? I did, dude. I'm excited about it. How did I come up with my amazing, unique technical indicators? Took my engineering background, help you come up with these. I kind of went through the story earlier, but essentially, like I was struggling with trying to make some sense in the market, and I stumbled upon volume-based indicators, which had the most success, and I sort of gravitated to that. And I slowly just dug in further and further to try to find repeatable stuff. I was learning like a lot about how the Globex works, and I started researching on the CME website, watching their videos and finding out that there were some control systems on the market. And as an engineer, my brain just snapped and goes, control systems? Well, how does the math work on those things? Can I come up with ways to exploit? Control system sounds like it means repeatable to me. And then I just went down rabbit holes little by little. The engineering degree, like as engineers, right, we learn root cause analysis. You keep asking why about something. Like, why is the sky blue? Well, it's because the Earth is round and there's a refraction index, and you see the angle, whatever, creates the blue look. Well, why is the Earth round? Well, because there's gravity and things cluster in a circle. Well, why is there gravity? And you keep going why and why and why until you find out the root cause of something. And I always dig into stuff that way, and I'm good at breaking down problems and kind of figuring out. So my engineering training just allowed me to keep diving deeper. Yeah. I haven't traded with Alpha yet, no. Why can't MHP add in the platform automatically in the Asia session? We've already automated the dynamic in the Asia, but the problem is there's an error in the code, and we're still trying to troubleshoot where the error is. So it's turned off for now, yeah. Do I think the Asia session and London session are easier to trade? I do. I think they're a lot easier to trade. Asia especially. Especially when Trump is president. Because when Trump is president, the US market gets fairly violent throughout the day, and he tends to quiet down after, the market's done. So in Asian session, it's like the old man's in bed or something, not saying anything. And also, trouble in the Middle East right now. Well, the Middle East doesn't wake up until midnight. So we're in a nice little hot spot between Globex open and midnight, where European markets are closed, Middle East aren't firing as many rockets at each other, and Trump's not paying attention and doing stuff. So Asia has been some of the cleanest trading. Wait, that's why the sky is blue? I don't know why the sky is blue. I think it has to do with the refraction index. Because if the sky looks blue, then all other light, visible light, is not spectrum is not reflecting or not. I think what has to do with the particles. I think it's not the shape of the Earth, actually. The reason the sky is blue is because the molecules in the sky, the light hits the molecule and bends around the individual molecules, and that creates, you're actually seeing a billion molecules or infinite molecules that are bending the light. And it might, I don't know if it's the water or which molecule it would be that causes the refraction turn blue. The sky is green, but your eyes filter the blue. Something like that. The Earth's atmosphere scatters short wavelength blue light in all directions, blah, 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 blah. Hold on, wait, what is this called? It hits molecules of gas, mostly oxygen and nitrogen, because blue and violet light travel in shorter, smaller wavelengths. They crash in these gas molecules and scatter in all directions much more easily than the longer red and yellow. There it is. So it's the molecules of nitrogen and oxygen. It's actually the interaction with the molecules, not the curvature of the Earth. I was just kind of spitting some random stuff earlier. For somebody who's been trading for a few years but still mostly sideways and hasn't ever traded a prop account, would I recommend starting with the smaller prop account to get the feel? I would recommend a smaller to get the feel. And the reason you'd go to props is so that you can practice more aggressively without risking money, right? Like your real money. If you're trading sideways with your real money, you're almost there. The hardest part as a trader is to trade for long periods of time and break even. That's the hardest hurdle. Making money, you're almost there. Like that's the next smallest step to start making money out of it. If you're not losing money, that's more than half the battle. And so now you need to learn how to make money in a controlled risk environment, which is where props are perfect for where you are. Can you recreate a morning session where you first get to the computer as if you're a brand new trader with Rocket Scooter? What would you do to formulate a plan? Dude, you're asking me that? You've been in stream for a long time. You should know what I do in the mornings. Anyways, market's closed now. Futures are closed. I gotta go. We'll see you guys on Monday. Can I give you a lifetime discount a few days after Sunday? Yeah, university. Send me a message in Discord, and I'll open it up for you a couple days after. Color blue is a cultural construct. I read about that. Certain cultures don't have a word for color, and when you show them defined by light, they say it's green. I remember that. I saw a video on that. It's last call, guys. Any more questions? I gotta go. All right, guys. All right, we'll be live. Brad will be live Sunday night, as always, in the Asia sesh. Brad is awesome. This stream is as big as mine is. And then, of course, I'll be live Monday morning, bright and early, as always. Y'all take it easy, friends. Thanks for tuning in. Happy 4th to all of y'all. Gabe built an audio and voice alert system that attaches the Rocket Scooter and gives vocal cues from important events. Bro, message me in Discord, man. If you want to share your GitHub with me, I'd appreciate that. Lifetime discount at Rocket Scooter. Yes. $1,500 off until Sunday. For lifetime. If you want to finally make the plunge, jump in right then. Anytime between then. We'll see you later.